Does that cushion the downside on the Nifty, or takes it higher as well? And has Bajaj Auto, considering the run-up it has seen, priced in an already good result? The stock was down yesterday as well. Keep an eye out on that. And oil sensitives, will they continue to move in today's session as well? For now, the GIFT Nifty is indicating a fairly negative start for our own markets.
Okay, thanks so much for that, Hormaz, who's here to tell us which are the stocks that we should be keeping on our radar today. Good morning, Mamakshi.
Well, good morning, Vinny. Let me first start off with KEI Industries. The company reported its Q2 numbers. Revenue saw an uptick of 17.2% on a YOY basis. The margins are seeing a bit of a contraction from 10.4% to 9.7%. Additionally, the company has announced plans to raise up to 2,000 crores via QIP. The next stock on our radar is HDFC Life. The company reported its numbers yesterday during market hours, and there was a conference call that was scheduled post market hours. In that, the company said that they've revised the growth outlook to 18 to 20% as compared to 15% earlier. However, they are sticking to their VNB growth guidance of 17 to 18% for FY25. Cochin Shipyard, the government is looking to sell 5% stake in the company via OFS. The floor price has been determined at 1,540 per share. This OFS includes base offer of 2.5% with a green shoe option of nearly 2.5%. PNC Infra has received orders worth 4,630 crores for two projects from Maharashtra State Road Development Corporation. GR Infra also in focus on the back of an order win. They've received an LOA worth 1,885 crores from Maharashtra State Road Development Corporation. Central Bank of India also on our radar. CCI has given its nod to acquisition of 24.91% stake in Future Generali India Insurance and 25.18% stake in Future Generali India Life Insurance. ONGC has bought additional 2.88% stake in ONGC Petro Addition Limited for 5,594 crores. Now this takes its total shareholding in the company to 94.04%. Lastly, keep an eye out on Bhageriya Industries. Maharashtra State Electricity Distribution Company will be purchasing power generated from company's solar power plant, which has a capacity of 30 megawatts for nearly 25 years.
Okay, Mamakshi, thank you so much for that. But finally, we have Sudarshan joining in with us to tell us the important cues in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So first talking about the market on Tuesday, in a tight range of trade, we saw market closing with minor changes. Sensex and Nifty closed with minor cuts, while broader markets have relatively outperformed. For today, following weak global cues, we might have a start in the red as GIFT Nifty is currently down almost 100 points. Talking about institutional flows, we continue to see selling by FIs. Yesterday, we saw FIs selling shares of more than ₹1,700 crore, and in October so far, FIs have sold shares for 12 consecutive sessions, and it's the longest selling streak in the last 1 year. In October so far, FIs sold shares of almost 64,000 crore. In the index futures as well, net sell figure is more than ₹400 crore, and they have cut long positions by 4,600 contracts. At the same time, they have added short contracts of almost 3,000. And with this, long exposure has now reduced and it has come below 35%. While on the client side, we continue to see addition of long contracts. We saw addition of almost 2 lakh contracts, and with this, long exposure on the client side has increased to 62%. On the option front, in the call side, 25,200 call has seen addition of more than 42 lakh shares with premium at 36, and 25,100 call has seen addition of almost 31 lakh shares with premium at 67. On the put side, 25,000 put has shed 7 lakh shares with premium at 76, and 24,900 put has shed almost 6 lakh shares with premium at almost 43. And with these important levels for Nifty, support is in somewhere around 24,900, and resistance that yesterday's high, that is 25,200. Lastly, in stocks in focus, there are 14 stocks in the band, and new entrants are Bandhan Bank and L&T Fin.
Thank you so much for that, Sudarshan. But on that note, we're going to slip into a very short break, and don't go anywhere. After the break, we'll get you the latest as Telecom Minister Jyotiraditya Scindia rules out auctions for allocation of satellite spectrum.
You see, the EV space is where probably, we have a lot of headroom to grow. You would have seen in our RHP that we are going to launch the Creta EV in financial year 25 quarter 4, which is absolutely basically next quarter itself. Creta is a very strong brand. We believe this could be a very big game changer, and then going forward 3 more EVs in the mass and premium segments will be introduced. And not only that, we are lining up these EVs along with a very strong localization plan. So as we speak, the battery packs are being localized. We have already announced a collaboration with the local Indian partner for the LFP cell manufacturing. We are looking at power electronics drivetrain as well. So the entire EV ecosystem is being localized. Regarding royalty, as you know, the royalty rate is 3.5%, and we believe that it is going to be there for a long time. Regarding the effect of royalty on the results, if you can see our financial year 25 quarter 1 result, which is including of the new royalty rate, and you have seen that we have managed to have a EBITDA of 13.5%. So that is one. As far as Hyundai is concerned, we have a big range of SUVs, and January to September period SUV percentage is at 67%, much higher than the industry. In fact, in the month of September we touched 70%. And what is exactly happening is actually our rural markets are also contributing the same to the SUVs. You know, the rural penetration also stands at 67%. I think this is a very clear indication how the aspirations in the rural markets have also caught up.
Welcome back. You're watching Power Breakfast on CNBC-TV18. Let's move on as Bharti Airtel's founder Sunil Mittal called for satellite communication companies to buy spectrum at an auction. Telecom Minister Jyotiraditya Scindia rules out an auction, stating that the spectrum will be allocated to Satcom players at a price that will be determined by the regulator. Ashmit Kumar is joining in with us to give us more details on the Telecom Minister's response to this. Listen in.
Well, important clarifications coming in from the Telecom Minister Jyotiraditya Scindia speaking here at the INC 2024. Number one, there have been divergent views on whether or not spectrum for satellite communications is to be allocated or is to be auctioned. That question was answered by the Telecom Minister speaking here. He clarified that the Telecom Act is very clear that can only and only be allocation, administrative allocation of spectrum for satellite communication. No auction is possible under the Telecom Act, going on to say that it is subject to, however, a cost of allocation. That cost, that price of spectrum is to be determined by the TRAI, the Telecom Watchdog. It is open for the Telecom Watchdog to decide on that question. But going on to clarify that globally the precedent is clear. There is no auction of spectrum for satellite communication. It is only allocation. Number two, on the issue of support for data centers. Bear in mind that Akash Ambani, speaking at the inaugural session, had advocated for support, an incentive mechanism for data centers in India. Jyotiraditya Scindia said that PLI is a great example of what the state support can do, especially in the field of manufacturing. Also going on to say that this is an issue that the government is looking to move swiftly on, but saying that this is a question that MeitY will take a final call on. And finally, on the issue of tariff hike, Jyotiraditya Scindia speaking in support of the telecom company, saying that the tariffs are already extremely low, that the hikes have come on an extremely low base, and that if the telecom companies are not able to get a return on their investment, the transition from 4G to 5G and then to 6G will be challenging.
For Satcom, spectrum will be allocated administratively. Now, that does not mean that spectrum does not come without a cost. What that cost is and what the formula of that costing is going to be will not be decided by you or me. It will be decided by TRAI. And there is a paper that has already been circulated by TRAI, and we have a regulatory authority for telecom, and that regulatory authority of telecom has been empowered by the Constitution to decide what that administrative pricing is going to be.
Okay, let's move on. And the Election Commission has sounded the poll bugle for Maharashtra and Jharkhand Assembly elections. All 288 seats in Maharashtra will vote in a single phase on the 20th of November. Two alliances, the Maha Vikas Aghadi and the Mahayuti dominate the Maharashtra political landscape. The ruling Mahayuti comprises the BJP's Eknath Shinde, Shiv Sena and the Ajit Pawar's NCP. The BJP and the undivided Shiv Sena had fought the 2019 elections in an alliance, and Jharkhand will see two phases of voting on the 13th and the 20th of November. The JMM Congress RJD alliance and the NDA will battle it out for 81 state assembly seats, and the BJP is busy chalking out a seat sharing agreement with the allies in Jharkhand. So that's the update that we have on the assembly elections that will be happening, keeping an eye out on the states. But let's move on. And Samsung workers at the Chennai plant have called off the strike after 5 weeks of protesting. This after the company and the labor union agreed to 4 major resolutions. The agreement requires the workers to immediately call off the strike and return to work, and the management will not victimize any of the workers on the resumption of work. And the company has also promised to respond in writing to the workers' charter of the demands that they do have. So that's all the update that we have on the Samsung strike being called off. But on that note, we're going to slip into a very short break, and after the break, we'll talk about what's happening in the world of commodities. So stay tuned in.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Welcome back. You're watching Power Breakfast on CNBC-TV18. And like promised, let's bring on board Manisha Gupta to tell us what's happening in the world of commodities. Because crude surely has been that exciting one. 4% decline in terms of Brent crude oil prices, Manisha, overnight.
Oh, well, absolutely. You know, Monday was a 2% decline and yesterday was a 4% decline. So in this week itself, which is just 2 days old, we have seen $5 of a decline for the crude oil prices right now. Well, it has to do with the weak global demand outlook. And then OPEC and IEA both have cut forecasts for global demand, not just for this year, but for 2025 as well. And then Israel repeatedly saying that they will not strike Iran's nuclear and oil facilities also seems to have taken the war premium off the prices. So pressure has continued for a third day today as well, where we are looking at on the lower side of prices. But some strength is what you have seen come back in case of precious metals. Gold prices right now are just $15 away from its all-time highs. The U.S. Treasuries have seen a decline. The U.S. dollar index also has seen a bit of a weakness, and that has been supportive. And the traders now are placing a 90% probability of a 25 basis point rate cut for the month of November. So that has been factored in as well. Well, remember, the gold prices have gained up by 29% in this year alone. And now going forward, it's going to be the U.S. retail sales, industrial production, jobless claims. All of that data comes in this week, which the markets will take cues from.
Okay, Manisha, thank you so much for that. Keeping an eye out on the commodities and all the important cues also for the world of commodities. But a spat of bomb hoaxes have hit Indian Airlines just a day after 3 bomb hoaxes at least 5 flights were targeted with fake bomb threats yesterday. Air India's Delhi to Chicago flight was forced to divert to Canada following a bomb threat. Air India said it is extending all cooperation to authorities in identifying the perpetrators and will consider legal action against those responsible for the possible passengers of Indigo's Dammam as well as Lucknow flight also faced inconvenience after their flight was diverted to Jaipur. Meanwhile, a SpiceJet flight travelling from Darbhanga to Mumbai was also among the flights, and Air India Express flight from Jaipur to Ayodhya and Akasa Air's flight from Bagdogra to Bangalore was also one of the flights that received bomb hoaxes. The Ministry of Civil Aviation has called for a high-level meeting today to deal with the host of hoaxes and bomb threats, and the meet will also include Civil Aviation Minister Ram Mohan Naidu and other senior personnel. So that's on the updates on the world of aviation. But let's get you some weather updates. Heavy rains lashed Chennai and 6 adjoining districts, prompting a red alert from the IMD. Schools and colleges are shut and roads and rail services have also been thrown off gear. The Tamil Nadu government said that the disaster response teams are on a standby in Chennai and nearby districts. Karnataka government issued a work from home advisory after heavy rains lashed through Bangalore, and several roads and tech parks face heavy waterlogging, forcing schools and colleges to be shut. IMD issued an orange alert for the city and commented that rainfall is likely to remain for next 3 days. Okay, with that, we are absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thanks so much for tuning in.
Canada has provided credible, irrefutable evidence of ties between agents of the Government of India and a murder of a Canadian citizen on Canadian soil. Now it is time for India to live up to what it said it would do and look into those allegations.
The Parsi legacy is a testament to how a small community has made a massive impact on India's industrial, scientific and cultural development despite representing just a tiny fraction of the population. They reportedly make just 0.004% of India's population, but their contribution has been immeasurable. This is the story of the Parsi. From Jamshedji Tata, who laid the foundation of India's industrial revolution, to Dr. Homi Bhabha, the father of India's nuclear program. The Parsi influence is like a secret ingredient that's added flavor to India's growth recipe. The Tata Group started as a humble textile business in the 19th century and has now grown into one of India's largest business giant, with its listed entities' combined market capitalization at rupees 30 lakh crores. Jahangir Tata took to the skies with Air India, and Ratan Tata kept soaring, expanding globally and championing philanthropy. In 2023, Ratan Tata's foundation pledged millions for healthcare and education, proving the Parsi spirit of giving. And let's not forget Adair Godrej, who unlocked a whole new world by founding the Godrej Group, introducing India's first locks and safes. Today, it's a global sensation known for its eco-friendly products and commitment to social responsibility, perfectly embodying Parsi values of philanthropy. Talk about building dreams. Palanji Mistry turned construction into an art form with Shapurji Palanji. From iconic skyscrapers to vibrant residential complexes, this powerhouse is shaping skylines.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's the middle of the week, Wednesday morning. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good morning.
Hi, good morning. I guess global markets taking a bit of a break, at least Wall Street, that is, but plenty of cues here, plenty to go over.
Lots to go over. And Nigel?
Well, indeed, and results season is picking up steam. So we'll have a few earnings coming in today as well from the Nifty pack itself.
Absolutely. And although the handover from overnight has been a little softish, and
Indeed.
I think we kind of deal with that at least at 9:15, and then we'll see what happens. Yesterday was a blah kind of a day, neither really up or down, and very difficult to make any sense of it, except maybe 2-3 groups of stocks which did well. So that's the backdrop. I mean, neither here nor there. But last night, overnight, from the US equity markets, the signal is a little bit of a risk off. Not very much. NASDAQ was down about just under 1%. And that's the change that we'll have to deal with. CBOE Wix, it held near intraday highs, about 21. There was a jump and then it held near intraday highs. The sell-off in the US equity market was led by semiconductors. I mean, they're responsible for the bulk of the rise, the big rally over the last couple of years, AI, semiconductors, and last night they took indices a little lower. Reports say US officials are planning or thinking about and may implement capping sales of advanced AI chips to certain countries, right? Read China. And this is, of course, one reason why stocks like NVIDIA, etc., were down between 4-5%. There were numbers from one semiconductor name as well, which disappointed. And that one was down even more. But NVIDIA, of course, is the big one, and that had influence on the entire bunch. Data was not very supportive. Empire manufacturing numbers came in much weaker than expectations. Yields lost about 7 basis points, so just about 4% now. Dollar index was flat, not very much by way of change. Oil prices, but I think the 4% drop that we're looking at this morning was well advertised even when we were trading, so it's not new. And the market kind of traded through that 4% drop, through the last few hours of trade, but just sort of reflecting where we finally left off. Now, there's just one news report out of Wall Street Journal, which I want to put out, which essentially says that this is a sourced piece, but without naming who the information has been gotten from. The piece says that recent measures out of China have been for de-risking rather than outright stimulus. So, I mean, China at the margin has been important, is important. We can talk more about this as we go along. But this is this perhaps will have a bit of a sobering impact once again with regards to this entire China revitalization, China trade. So where do we begin? I think we'll begin with a cut as the GIFT Nifty is indicating as well. The more constructive view is that maybe the Nifty is consolidating around, trying to form a bit of a base here. Many technical analysts are of the view that this is we're still in a pullback from the highs, and the up moves are not to be trusted, at least in the near term. But the positive view is that maybe we are consolidating, forming a bit of a base, and we need to take out the previous high, which is 25,234, before we talk about higher levels. That's the first sort of resistance which the market will face. Above this, then you're looking at the 50 and 61.8% retracement. Same numbers will be put out over the last 2-3 days now. By the way, the Nifty yesterday failed to take out the 40-day exponential moving average, and we kind of ended about 0.25% lower. Support for the Nifty comes in at 24,920, which is the recent swing low that we had. Nifty Bank, it ended slightly above the 40-day exponential moving average yesterday. And here we're looking at the 50 and the 61.8% retracement levels. So that's 52,330 to begin with. That's the first level. And on the way down, the low of 51,005 will need to be protected if some of this needs to work out. So we'll see. I think we begin with a slightly weaker open. Earnings, remember, for the sake, but it's nothing new. It's well advertised that Q2 is weaker, and it's begun on a weaker note. We'll have to sort of look through some of those things and, of course, individual numbers as they come through. Just leaving you with the GIFT Nifty as a change, and just to look at what we are seeing. So 80-point lower is the implied open as far as markets are concerned. So reflecting almost fully the cut that we had last time. Surabhi.
Oh, absolutely. Red is a bit rare on Wall Street these days, but that's what we got yesterday. So the market taking a bit of a breather. That also, after intraday touching record levels once again. Asia this morning is taking over from that weak Wall Street end, because a lot of the markets in the region are down quite a bit. Up in the Japan market, if you're looking at the Nikkei, that's dropping about 2% right now. Hong Kong is lower. Mainland Shanghai is lower. Hong Kong, remember, slumped about 3.5% yesterday. And on top of that, we're seeing some more selling come through. So the setup is not very, very positive. However, we have some decent cues to look out for. One, of course, is the fall in oil prices that Prashant alluded to. And the second big thing is that this FPI selling business, sell India, buy China, whatever that trade was that was going on, that is cooling off in a substantial way. After many, many, many days, the FII sell figure has come down to sub 2,000 crores. The number yesterday was 1,748 to be precise, and domestic institutions were lapping it up. They almost entirely bought whatever the FII sold at a net level, with a net purchase of 1,650 odd crores. So the fund flow position for the market is stabilizing. That's the good news. We're going to get into election season full throttle, and politics and whatever sort of state-specific action we see, that's going to be dominating headlines. The dates are out, so just to put it on record. Maharashtra, it's a single-phase election on the 20th of November. Jharkhand is in 2 phases. And then counting of votes and the result announcements are on the 23rd. So 23rd becomes an important date with respect to those 2 key states. Lots of company-specific news, and we'll get you, more details on this later. But watch out for HDFC Live. That stock was the worst performer on the Nifty. Now, the management did try and come in on the con call and assuage some of those concerns on the margin. They're also talking about overall guidance on growth being better than what was previously anticipated. So let's see if there's any recovery in that stock. Cochin Shipyard, there's an OFS happening, so watch out for the PSU pack and Cochin in specific. And finally, Hyundai, very interesting. Day one has been fairly subdued for this mega IPO. The total subscription as of yesterday was just 0.2%, with retail buying in a lot more than institutions and the HNI fraternity. So let's see, day 2, day 3, it should pick up, but Hyundai is in focus as well. Today is a busy day on the results calendar. Bajaj Auto, which was also very subdued ahead of earnings yesterday. That's the big one to watch out for. There's a couple of mid-cap IT names like L&T Tech, Emphasis, is Crystal as well. So fair amount of earnings action as well. And I'd like to end with something on telecom, which is not necessarily stock moving immediately, but it seems to be fairly big and it's brewing, which is the battle for satellite telecommunication and the battle between large global names like Starlink and Indian incumbents like Airtel, like Jio. And this was the most interesting takeaway from the India Mobile Conference that took place yesterday, where the Indian companies were batting for a level playing field, saying if a global major has to come in, and if you're looking at satellite rights, then they should have to pay for spectrum in the same auction way that the Indian companies pay for it. But the minister then finally spoke on the matter, and the minister, that is Mr. Scindia, went on to say that satellite spectrum across the world is allocated administratively. It is not auctioned out. So India perhaps has to follow the global precedent. But there will be a cost of this allocation. It will not be just sort of handed out for free, and that cost will be decided by TRA. It's a hot space. It's a very hot debate. We had Mr. Musk tweeting on this as well. He's watching the India action very carefully and wanting to come in. So let's see, this sort of in a big picture way will keep the telecom sector in focus as well. Nigel.
Well, on the flows front, just want to make 2 quick points there. Now the FI and the DI number, they're almost, nullifying each other. And the second factor is if you compare it with October 3rd, at that point of time, we had a net sell number of 16,000 crores. Yeah. That's come down to around 1,700 crores. 1,600 now. That's down by close to around 90%. So on the flows front, we're in far better shape on October 15th in comparison to October 3rd. But we've got a tailwind for us, right? And that's a big global tailwind and macro tailwind that we're talking about, because crude oil prices are well behaved yet again. No escalation, mostly de-escalation is what we're seeing on the geopolitical issues, and that's a macro tailwind for us. The other one is that the Nifty Bank, the buy on dip has restarted out there. Even yesterday's trading session that did well. Plays out the weekly expiry, so that's going to be the key mover for today's trade. What about positioning? Well, the FIs, they continue to remain net short. They're adding a few net short positions as well, moving to around 1.6 lakh contracts. While the client side, they're net long with close to around 2 lakh contracts on the long side. In percentage terms, the FI short positions are at around 35%. Options data comes up for you on the screen, and you saw the PCR came down because the call writing came back yesterday, and the bears seem to be getting confident. 25,000 call, 25,100, 25,200 call. All of them did see a fair bit of addition, telling you that the bears are getting a little bit too confident. So if the bulls can, get to those levels, then maybe we could see a bit of a short covering bounce, which brings us to the levels that we're looking at. So I'm looking at the options data, and you're getting the resistance zone, which comes in at around 25,250, around 25,300. Recent low becomes a reference point at around 24,700. So that's the broad range that we're looking at. But the Nifty Bank, that's the one that's got into buy on dips mode, and that's going to be the mover. So it gets support at around 51,500. We almost visited that yesterday, but it'll decisively break out once it trades continuously above that 52,100 and then heads towards the 20 DMA. So the Nifty Bank, that's the one that you could be more optimistic on in comparison to the Nifty, just going by the recent price action. Stocks that I'm looking at, HDFC Life. The big loser yesterday, the question is, will the street buy into the management commentary? Because they are sounding quite optimistic, and they're saying that the margins in the last quarter were hit by higher ULIP share, and there were price increases that were affected that didn't reflect in the past quarter, but they got a little bit delayed. So will the street buy into that commentary? That's going to be very important because there were shots that got into the system. Let's see whether or not we see a pop on that one. The other one that we're looking at is Interglobe Aviation. A lot of tailwinds out there. You had United Airlines overnight that reported a set of numbers. They have announced a $1.5 billion buyback program. Besides that, crude oil prices are lower, which will keep ATF prices subdued. They're holding on to their market share, and we're getting into a busy season. So I'll keep an eye out on both these two stocks, HDFC Life and Interglobe Aviation.
All right. Well, we'll keep an eye out on those as well. Nigel, thank you very much for that. Let's get you our first view on the program. Lynn Alden is founder at Lynn Alden Investment Strategy. Lynn, good to have you back on the program. Thank you very much for your time. So last night, the US market seeing a bit of a pullback, WIX jumping to about 21. What did you make of it? Do you think on the S&P we see, how are things looking? I mean, is it looking a little tricky, or you think we are headed to 6,000 as many sell-side brokers have raised their targets on the S&P? What's your sense?
I continue to have an upward bias toward the S&P 500. I think it's natural that there's some pullbacks here. The market's done very well recently. I do think that there are global markets that are more interesting right now than the S&P 500. It's still generally a crowded market compared to other markets that are out there. But there are a number of high-quality equities throughout the U.S. market that are still reasonably valued, and I think they still have plenty of room to grind up over time, even if maybe some of the most expensive names struggle a bit.
Lynn, hi, great to have you on the show. So, net, what is your stance on U.S. equities? The market's had a fantastic run. And the numbers, the macro numbers have been looking good, while the rate cut expectations are obviously still intact. So are you expecting equities to continue the strong momentum that we've seen so far this year?
I'm looking to see if there's a little bit of a rotation. I think right now there's a lot of capital stuffed into some of the more defensive equities. You know, there are companies like Costco times earnings because investors are very piled into these defensive names. Whereas some of the cyclicals, some of the financials, and other areas of the market that are having more volatility in their underlying fundamentals are relatively unloved by the market. They're relatively inexpensive. And I do think that we could see a rotation where maybe the index doesn't perform very good, but that some of that concentration widens a little bit. There's a number of indicators showing that bank lending is less tight than it was a year or two ago. There's a number of liquidity indicators that are looking pretty good. And so I think this next year could surprise to the upside in terms of some of those parts of the market that are not particularly valued by investors at the current time.
Hi, Lynn. Good morning and good to see you, Win. This is Nigel on this side. What are you making of the dollar index bounce back? I recall in one of your interviews when you joined us, you had mentioned that it looks like the dollar index is trying to form some kind of bottom and look for a bit of a bounce. So what's the trajectory on the dollar index? And with that sort of a backdrop, what's your view on emerging markets? I think you were getting a little bit positive on emerging markets.
Yes, my overall concern over the past month was that gold looked a little bit overbought and the dollar looked a little bit oversold. And so to set expectations, my view was I wouldn't be surprised to see a consolidation. And that's what we've seen so far. I think basically the global markets got, a little bit too enamored with gold in the near term and a little bit too bearish on the dollar in the near term, and that some of this retracement is natural. I still think in the coming years, gold is headed higher. I think it's a pretty structural bull market. And I am still favorable toward a number of emerging markets, but these things don't really move in a straight line. And sometimes overcrowded positions have to get shaken out. So I think that's a normal and healthy part of the market. And I think that emerging markets have a really big wall of worry to climb. They have to really prove themselves to global investors that have not really had good performance with those for quite a while, at least, some markets more than others. But if you look at the global aggregates for emerging markets, that's been a troubled area. And so I think it's going to take time for them to prove themselves to investors and attract that marginal capital from around the world.
Okay. All right, Lynn, we will leave it on that note for this morning. Thanks so much for joining in with some perspective. We look forward to our next conversation. Let's quickly move on. We have lots of stocks on the radar, as we pointed out. So here are the main ones to track today. We will get to our special top 10 segment in just a bit. Today, we're looking at names like HDFC Life, Reliance Industries, Bharti Airtel, Vodafone, Idea, Cochin Shipyard, Rallis India, and PNC Infra, also Segal. These are on probably on the green side of the board. Then you have names like Vedanta and KEI Industries, some red there. KEI has come out with numbers as well. We'll tell you more about it in our top 10 segment in just a bit.
Okay, well, let's quickly tell you what's lined up here on the program as well. So we have at 8:30, Anil Kumar Gupta of KEI Industries putting the focus on the second quarter earnings. 8:40, Amnish Agarwal of Prabhudas Lilladher with some fundamental stock talk. Niket Shah comes on at 9:20 as a market master. 9:30 in the morning, we'll have the HDFC Life management talking about their earnings and the outlook going forward. Dinesh Thakkar of Angel One will be talking about their second quarter earnings. Stock was a big winner yesterday. We'll have Kumar Rakesh of BNP Paribas joining us at 9:50 to talk about expectation on the auto sector. And then, of course, it's the economy with Lata, who will be joined by Nidhu Saxena of Bank of Maharashtra for their second quarter performance.
Cyrus Poonawalla, the mastermind behind the Serum Institute of India, is a health superhero. Producing over 1.5 billion vaccine doses a year, he took center stage during the COVID-19 pandemic by churning out the AstraZeneca vaccine. That's a Parsi powerhouse, making the world a healthier place. Also, did you know Freddie Mercury, the legendary frontman of Queen, attended boarding school in Panchgani, Maharashtra? With his incredible voice and flamboyant stage presence, He proudly celebrated his Parsi roots while giving us timeless hits. From innovation to philanthropy to music, Parsis have made their mark everywhere. Despite the shrinking numbers, now less than 60,000, they continue to shine bright and inspire.
Now I come to the schedule for Maharashtra. This will be in single phase. The notifications, date of notifications are in front of you. 22nd October would be date of notification. Last date of making nomination would be 29th October. Scrutiny on 30th October. And last date for withdrawal 4th, and date of poll in Maharashtra would be 20th 11. Counting would be on 23rd 11/24, and you will notice that date of poll is Wednesday. This is deliberately, which lot of scheduling, whatever goes into scheduling, we have tried that it is midday, so that issue of urban apathy is handled. झारखंड एक बहुत ही समृद्ध स्टेट है, बहुत ही उसकी विरासत है, और वहाँ पर हम फिर से अपील करेंगे कि सब वोटर्स अधिक से अधिक मात्रा में वोट दें. Schedule would be like this. Jharkhand would be in 2 phases. The date of poll, first phase would be on, date of poll would be on 13th November, and the second phase would be along with Maharashtra on 20th November. So the date of issue of notification for Jharkhand phase 1 would be 18th, and for phase 2 would be 22nd, along with Maharashtra. Nominations for phase 1 would be till 25th of October, and for phase 2, 29th.
Well, the cues are a little muted across Asia. We've been telling you that, and the implied open is telling us it will probably start a couple of points down here, 70 odd points down. That's the indication, because most markets are reeling under pressure. Individual stocks in focus. Now it is time for the CNBC-TV18 top 10 list of the morning, and we have our entire team standing by to bring you that distilled list of stocks to focus on. Guys, morning to all of you. Vamakshi, let's start again with HDFC Life, right? Because the stock was under so much pressure yesterday. The market didn't like the fact that the margin is falling. Then there was an analyst call. So what came out of it?
Well, absolutely, Surbhi. Very good morning to you. HDFC Life, held a conference call, like you rightly pointed out, post-market hours. They say that they've gone ahead and revised their EPE growth outlook to 18 to 20% as compared to 15% earlier. However, they are sticking to their VNB growth guidance of 17 to 18% for FY25. Additionally, on margins, the company clarified that margins will not be in a free fall, but will need some flexibility out there. So those were some takeaways that came from the con call, but there are certain brokerage notes that have come through as well. Morgan Stanley as well as CLSA appear to be positive on the counter with an overweight and outperform call respectively. Nomura, on the other hand, has downgraded its rating on this counter to neutral, citing lack of near-term triggers. But overall, positive commentary coming from the management, going with the green for this counter.
Thanks a lot for that, Vamakshi. In fact, we'll connect with the HDFC Life management at 9:30 a.m. So stay tuned to CNBC TV18 for that conversation. Let's hop across to Hormuz. He's here to tell us about telecom ministers, backing tariff hikes. Morning, Hormuz.
Morning, Nigel. Strong words coming in from Jyotiraditya Scindia on the tariff hikes, and he mentioned that India's tariffs are now one of the lowest in the world, with one call almost costing just 3 paisa. And he also mentioned that the telecom sector has invested nearly 4.5 lakh crore rupees so far, and that return on investment is very critical for all of these companies, without which the sector will not be able to make that transition from 4G to 5G and then even to 6G going forward. Now, remember that the industry has very recently, as early as July, has hiked tariffs by around 15 to 20% of all three companies, be it Jio, Bharti and Vodafone Idea, and the tariff hikes has been only once in the 2 to 2.5 years. Now, analysts believe that Vodafone Idea will require a lot more tariff hikes to meet its debt repayment obligations, and HSBC now as a result has upgraded Bharti Airtel to a buy and raised its price target to 1950 rupees from 1335. So overall, the telecom minister is batting for more tariff hikes. Expect these stocks to open in the green as well.
Thanks a lot for that, Hormuz. Well, I'm focusing on Vedanta. You know, Vedanta Resources, that's the parent of the listed company Vedanta Limited. They have gone ahead and signed an agreement worth around $125 million. Vedanta Resources, well, they are the designated borrower, while you have Standard Chartered Bank Singapore, which is the arranger, the agent, or the or the lender. Now, the key intention is to address Vedanta Resources' funding requirements. For Vedanta Limited, which is the listed entity, they're not a party to this particular facility agreement between the two parties, that's Standard Chartered as well as Vedanta Resources. But encumbrances have been created over the shares of Vedanta Limited. Now, this event more or less is neutral, but it could see a bit of a downtick on the stock because commodity prices are a little bit weakish overnight. And since now Vedanta Resources has secured themselves of this funding, will there be any dividend at all? The meeting was postponed a couple of times, so we'll have to keep an eye out on that. So going with a tinge of red on the stock.
And the fact that the listed entities' shares have been used as, perhaps some sort of collateral against this loan that they're taking.
For many, many quarters and years, it's always been pledged. That's the only thing. For any other company, we would have said, it's a bit of a negative. But otherwise, we are used to most of the shares getting pledged. Yeah, but I'll be waiting by to see, because they said a dividend was postponed a couple of times. Is there a dividend meeting in the offing is something that I'll look forward to, since now the parent has secured this $125 million.
Okay, so Vedanta will remain in focus. Let's move on and talk about some other stocks and news. Vivek is joining in with his list. Vivek, good morning.
Well, good morning. Quite a few stocks on the focus on the back of results as well as auto announcements that come in post-market hours. First on our list is Rallis. Good set of numbers from the agrochem company this time around. Revenues higher by almost 11%, coming close to the 930 crore mark. EBITDA higher quite strongly, 24% higher on a year-on-year basis, leading to a margin expansion of a little over 150 basis points on a year-on-year basis. Profitability coming in at 98 crore versus 82 crore on a year-on-year basis. Now, talking about the domestic volumes, domestic crop care volumes up almost 17%. However, marginally offset by the 11% drop as far as pricing was concerned. Talking about the export volumes, it was flat, but the price decline actually led to a 9% decline as far as the export revenues were concerned. Now, coming to PNC Infra, two important order wins coming in over there. Total orders worth 4,630 crore. This is coming from the Maharashtra State Road Development Corporation. This is a timely order win given the fact that now the election code of conduct comes into place and there will not be any fresh bidding that will happen as far as ordering is concerned in the state. Now, remember, the order inflows achieved by the company right now translate to close to 50% of the lower end of the stated guidance for FY25. And lastly, Seagull is the other company in focus. Again, an order win over here in terms of the company emerging as the L1 bidder or the lowest bidder. This is for a 4-lane construction project in Ranchi. The project cost at 207 crore and the construction period timeline is 18 months from the from the time of signing this particular contract. So all of these stocks going with the green, strong results from Rallis and two strong important order wins for the infra companies.
Okay, all right, Vivek, thank you very much for that. Well, let's talk about KEI Industries and Cochin Shipyard as well. Upasana is here with numbers on these companies. Upasana, morning.
Good morning. First up, let me start with KEI Industries. The company reported mixed set of numbers. The revenue met the street estimate, but PAT and EBITDA margins were below the street estimates. Revenue saw an uptick of 17% on a one-year basis, led by cables and wires segment, and EBITDA margins were under pressure, down about 70 basis points at 9.7%. And companies all three segments saw a margin decline on a year-on-year basis. PAT stood at 155 crores with an uptick of 11%, and board has also approved raising of funds via QIP worth rupees 2,000 crores. Company's order book stands healthy as of 30th September 2024 at at 3,850 crore. Next up is Cochin Shipyard. Government to divest 5% stake in the company via OFS at 1,540 per share. The OFS includes base offer of 2.5% with an additional 2.5% available as a green shoe option. 25,000 equity shares will also be offered to the employees of the company. The total OFS size is about 2,000 crores. The sale of non-retail will be on 16th and 17th of October, and retail and employees will be on 17th of October. Mind you, as of 30th September, government holds 72.86% stake in the company, hence even this stock will be in focus today.
All right, Upasana, got it. Thanks very much. We'll keep all of those names on our radar as well. So let's quickly recap the list for the morning. Stocks that have positive news flow around them include HDFC Life, Reliance Industries, Bharti Airtel, Vodafone Idea, Cochin Shipyard, Rallis India, PNC Infra and Segal India. The ones that have some negative news inputs around them are Vedanta and KEI Industries. All right, now let's head across to Manisha Gupta for a roundup of all the commodity market action. Manisha, morning. Yesterday, this dramatic fall, 5% fall in oil prices, that was making big headlines. What's the latest?
Absolutely. Well, absolutely, Sylvie. If you look at the Monday, we saw 2% of decline on crude. Yesterday, it was a 5% decline, but the markets closed with 4% of a cut. So if you look at this week until now, the last two trading sessions, we have $5 down in case of crude oil prices there. Well, one, it has been weak global demand outlook. Second, OPEC and IEA both have cut the forecast for global demand for this year and for 2025 as well. There are huge capacities with OPEC, and more importantly, the war premium that seemed to be building up in case of crude oil prices also seems to be coming down, as Israel for the last couple of days has continued to reiterate that they will not strike Iran nuclear or oil facilities. So that tells you that oil disruption in sense of supplies is perhaps not happening, bringing the prices down. What also has been sliding down has been the metal prices. This area is bothered with the lack of details on China's stimulus. The Chinese exports have continued to decline as well. So overnight has been a third straight day that you have seen a decline come in for copper, nickel, aluminum. For this week itself, we are down by 1.5% to 2% for most of these metal prices.
Okay, well, Manisha, thank you very much for that. So that's commodities in focus, and we'll go back to Manisha for more later. We'll take a break. We'll have Anil Gupta of KEI Industries join in, the first management of the program to decode second quarter earnings. That's coming up. Stay tuned.
Will share with everyone, and date of poll would be 13th November and 20th November, both Wednesdays, and date of counting would be 23rd 11, that is Saturday. With this, we end our presentation with the request that through you, that all the voters of Jharkhand and Maharashtra कृपया बाहर आइए, कृपया वोट करिए. लोकतंत्र के उत्सव में आपकी भागीदारी कि हम बहुत ही रिक्वेस्ट करते हैं, अपील करते हैं आपसे. थैंक यू वेरी मच.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Baba Siddiqui actually had police protection. It was non-categorized police protection, but still he had 2 + 1 constables with him. That means that during the day, 2 constables were deployed for his protection, and in the night, 1 constable. This makes this matter even worse. Remember, Baba Siddiqui, who was a loyal Congress political leader, in February, he shifted sides and he joined NCP Ajit Pawar. This means that he was a political leader of a party which is in the government, is a part of ruling alliance. And despite police security, he was shot dead on Dashera night, a night when police security, police deployment is anyway at its peak in Mumbai. The clarity on motive is yet to come, but what has been established by Mumbai police that this is a case of contract killing. These three accused, one Gurmail Singh, hailed from Haryana. He's a 23-year-old person who actually has a record, a criminal background. He has extortion and murder cases against him, and it is believed that when he was in the jail, at that time he established a contact with some members of the notorious Lawrence Vishnoi gang. There are two more other shooters, and both of them are from UP. One is Shiv Kumar Gautam and one is Dharmraj Kashyap. Now, Dharmraj Kashyap was arrested by the police along with Gurmail Singh, but Shiv Kumar Gautam managed to flee away. He's still absconding. It was yesterday, on Sunday, a Facebook post went viral. The Facebook post was uploaded by a person called Shubham Lonkar. In that person...
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. As promised, let's get straight to the first management on the show. KEI, they reported a mixed set of numbers in the second quarter. The revenue met the street expectations, but margins came in a little bit lower. To discuss more on this, the outlook going ahead, we're joined by Mr. Anil Gupta, the CMD at KEI Industries. Hi, Mr. Gupta. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. Well, top line was more or less in line. There was some softness in smaller segments like the EHV revenues. But the problem was that margins came in at the lowest we have seen, I think, in multiple quarters. A brokerage note mentions a 10-quarter low. Could you tell us if there was any kind of one-off impact in the past quarter? And do you stick to that margin guidance of around 10.5% to 11% for FY25?
Yeah, good morning, Nigel.
Good morning.
First of all, the EBITDA margin in this quarter is around 10.42%. And if you see first H1, 6 months, it is 10.88%, which is in line with the guidance. This quarter, a small 0.5% margin is impacted due to extraordinary fluctuation in the copper prices, and which led to little bit fluctuations in the margins due to inventories. Inventories in the June were very at high copper prices, and in July and August, because of the LME fall, we had to adjust the prices. So, but if you see overall, full year or first half, we are, in line with our guidance. And the H1 is around 10.88%.
All right, Mr. Gupta, the reason for the difference in the margin, absolute margin numbers, because we are not including the other income, and I presume that you're including the other income. Be that as it may, copper prices were higher, so that impacted margins, but you're expecting things to recover. So in comparison to your calculation of margins in the first half of the year, what should the margin improvement be in the second half of the year, if you could help us out with that number? And do you stick to your revenue growth of 15 to around 17%, which you have done in the first half?
Yeah, I stick to our revenue guidance of growth of 15 to 17% and EBITDA in the range of 10.5 to 11% in the whole year.
Yeah. Mr. Gupta, hi, good morning. Just a quick word. We're in election season once again, and the model code of conduct, etc., will kick in. Any implication because of that? I mean, of course, Maharashtra, but it's a large state, Jharkhand as well. Any impact in the quarter?
No, I don't think there will be any impact on the quarter, because the orders are ongoing, and we are not taking direct lot of direct orders from the government utilities. So the contracts which are going on with the EPC contractors, or the orders which are already placed, and we are very well booked. So I don't think there will be any impact of these elections on our revenues in the third quarter.
Just to finish off one point on copper prices. So are you, earlier you told us May, June, July, etc., you were increasing prices, right? I mean, then prices started to come off a little bit. Where are we now because of the input copper prices? What's happening in the marketplace?
Yeah, we have increased the prices in line with the copper prices prevailing. I think, if I am right, it is up by 10% compared to what it was in April or May because of the LME increase.
Hi, sir. Morning. So I just want to talk about the QIP as well. You're raising about 2,000 crores, right, with this equity capital fundraise round that you're doing. Just tell us, I mean, how this will tie in with your capex plans, because you've already shared with us you have pretty aggressive plans. I think almost 1,000 crores being put to work this year. That's the street estimate, and then you have another 500 odd crores for next year. So what is the total capex requirement for the balance of this year and next year? And how will you be using this money? And then where does that take the debt equity position to? This is all equity capital. Would you be looking at any further debt for the rest of your capex?
Sonia, our total capex in our Sanand plant is likely to be 1,800 to 1,900 crore rupees. In this financial year, we have already completed 2 brownfield projects at Pathredi and Chinchpada in Silvassa, and have spent more than 300 crore rupees in the first half on the capex. In the next 6 months, we are likely to spend around 600 to 700 crore rupees at Sanand because no other capex is going on at the moment. And in the next financial year, balance of 800 to 900 crore will be spent. So this QIP, the exact figures are yet to be decided. We have taken an approval of 2,000 crore from the board. But, overall, we are going to spend 18 to 1,900 crore rupees at Sanand in this year and next financial year. So this QIP is basically meant for, funding the capex requirement.
Okay, all right. Sir, your debt in the books is what, 450 crores? Net debt?
Yeah, it is. Yes, 450 crore. But it includes majorly channel finance. So the actual debt, is very less.
All right, Mr. Gupta, I just want you to clear the air, because yesterday as well, many sell-side analysts were wondering why is Mr. Gupta going to be raising money by the QIP route? Is there some inorganic growth on your mind, or is it purely for the capex requirement? Is there an acquisition you're looking at?
No, we are not looking at any acquisition, and it is purely for the capex requirements.
All right. And the timing of this, sir, will it be somewhere in the quarter 3?
Yeah, it is likely to be in the quarter 3.
So just to understand, I mean, I'm looking at the shareholding. Promoter group currently has about 37% shareholding in the company, right? Now you're issuing further equity capital. At what level of shareholding are you comfortable owning? Will you be are you okay with some dilution? Would you want to eventually buy back more from the market? Well, what's the promoter intent in terms of how much of the company you want to own?
See, with this QIP, my dilution, promoters group dilution may be around 2 to 3%. So we are quite comfortable with owning 35%, and we will look at buying back some of our shareholding from the market, especially
over what period, and what is the level of shareholding that you want to maintain?
We want to maintain anywhere between 35 to 36%. And I think we will be able to maintain that.
Okay, all right. I'll just try my luck with this one last question, maybe slightly tangential, Mr. Gupta. But, is it a big diversification for a sort of cable and wire company like yourself to go into optic fiber? Or does it take a lot? I don't know. That's why I'm asking. So, for example, some of your competitors who also have optic fiber businesses are expected to get large orders from the BharatNet program. Just wanted to check with you about that.
Yes, of course, it is absolutely a different product. Although the processes are similar, but the plant and machinery is absolutely different. And we have seen that these products have very high fluctuations in demand pattern from time to time. The demand pattern is not steady, because when the BharatNet or some BSNL tenders comes, there is a large demand. And sometimes they don't come out with any tender for around 2 years or 3 years. So the steady revenues, if you check other companies also, may not be there in this product.
Okay, very lumpy, basically. Got that. So thank you very much, Mr. Gupta. Appreciate you joining in, and we'll speak again soon. Thank you very much for your time here on CNBC-TV18. Amnish Agarwal is, I think, with us now, Head of Research at Prabhudas Leader. Amnish, good to have you with us here. Thank you for your time. I just wanted a quick word on, to begin this, with oil marketing companies. I think HP was up 4% yesterday. BP, by the close of it, was up 2%. Oil is down 4%. Elections, model code of conduct. So I guess no price cuts at the pump. It's a bit of a slightly positive environment. Any thoughts?
Yeah, hi Prashant, thanks. You see, as you rightly said, oil prices have crashed. And secondly, with the election code of conduct, there are not likely to be any price cuts. So for the next, I think at least couple of months, I think their margins are going to be good, and that will result in some sort of, you can say, short-term trade in these stocks.
Okay, a short-term trade perhaps possible in oil marketing stocks. Related to the Maharashtra elections, Amnish, hi, morning, Surbhi here. A lot of the infra players are announcing order wins, right, just before the code of conduct kicks in. Whether it's PNC Infra, GR Infra, Ashoka Buildcon, all of them have announced orders from one or the other Maharashtra body. What do you like in this space? I don't know if these companies are under your coverage. PNC has announced a massive order wins last couple of days.
Yeah, hi. So you see, these order wins usually they precede any election announcements or around the election, and it practically happens in, you can say, every state. Now, if you look at, say, all the companies, say, for example, all these, you can say, whether it is your PNC, KNR, so all these have been traditionally you can say, the road players, which have done very well. But if you look at, say, over the medium term, I think the players which are focused on segments like, say, metro, then your PSP, nuclear, I think some of these segments of the urban infra, they are likely to come up and they are likely to do well over the years. So we don't have any formal coverage on, you can say, any of these construction stocks except L&T. But my sense is that the niche players which are operating in some of these emerging segments where the focus of the government is going to be on the infra building, on the, you can say, renewable energies, on pump storage, as well as some of the factors like, for example, your ports are there, railways are there. So I think these are some of the stocks and segments which will continue to do well. But having said that, these orders will actually start reflecting in actual implementations maybe 1.5 years down the line.
You want to name a company, Amnish, apart from L&T, tier 2, tier 3 infra players, anything else that's under your coverage and that you have a buy on?
You see, we don't have, you can say, stocks under coverage, but you see, this entire space was not doing well. Say, for example, on the metro side, ITD is doing well. Then on, you can say, hydro and you can say hydro, your BRO initiative. Then the companies like, for example, Patel has been getting a lot of orders. HCC is a play. So I think there are, you can say, numerous players. We don't have any firm view on these stocks. But I think if you look at the trend of the infra spending in India and the way it is poised to be over the next 5 to 7 years, I think many of these construction companies are poised for good times.
Got it. All right. Hi, Amnish. Good morning and good to see you in. What about the insurers? Yesterday, HDFC Life came out with a set of numbers. The VNB margin contracted and the street didn't like that. But now in their con call as well as in their comments to CNBC-TV18, they've said that ULIP as a percentage of their mix was higher. And some of those price increases got postponed by 2 to around 3 weeks. And that's why, the street is optimistic that maybe the second half of the year could look better. Your approach to HDFC Life in particular and the life insurance companies, because post those numbers, all life insurance sold off.
You see, life insurance is a space which is actually always a very long-term play. There are not, I would say, any shortcuts there that you will suddenly see like it happens in many of the other sectors, that any sharp jump in profitability or margins over there. Now, I think whatever you can say in terms of VNB margins and all, I think there could be some improvement over there, but even in you can say the actual impact of that always comes with a lag and very gradually. And I think if you look at, say, past 2-3 months, all the insurance companies, there was some build-up around that. Most of these stocks, maybe barring LIC, they have not done well over the last couple of years, and people were expecting that now it's the time for the insurance, I think, to go up. The stock should do well, and I think all the stocks also rallied by, say, 20-25% from there. Now, I think in light of that, some sort of a correction has happened yesterday. It can't be ruled out. which is a very natural phenomena. But I think one will have to look at these stocks only from the longer term viewpoint, because in insurance companies, you can say, yes, the sell-off has happened, but the investor should look at only in the medium to long term, not exactly in the near term.
Okay. All right. Amnish, stay with us. Coming back, Anuj is here standing by with what he's making of the setup. Anuj, good morning.
Morning, Prashant. Well, it looks like the market's in a mood for some more time correction, and the price damage may be done, but in terms of time correction, maybe some time still left. This market has been now correcting technically for the last 13 days, but the real price damage has happened only on 3 days. X of that, the market's been quite flat on most days. The FI selling intensity is now down quite a bit. It was about 15,000 crores at the peak of the correction. It's now down to 1,700 crores yesterday, which was the lowest selling number that we have seen in all of October. That's good news, right? Even the shorting keeps going up from the FI side. They are now 34% net long. They were at 85% at the start of the series. The put call ratio extremely oversold. So the point I'm trying to make is if the market bounces from here, it will be big. The only issue is, does the market have a trigger to bounce back? Can oil provide that trigger? Perhaps, especially for oil marketing companies. Brent price down, election risk out of the way. So that could be the sector to focus on. Coming to index then, on the Nifty, the levels that I'm watching out for, first support is 24,900 to 25,000, the low of last few days, and the most important number, 24,694 to 24,750, the October lows. That should not break, otherwise the trend becomes negative. Resistance first comes in at 25,075 to 25,150 based on the options data, and then, like yesterday, 25,200 to 25,300, the 10 and 20-day exponential moving average. The Bank Nifty is important because today is the weekly options expiry on the Bank Nifty. It's one shade better than the Nifty. The only risk here is the 20-day exponential moving average halt, not just for the Bank Nifty, but also for HDFC Bank, because both the index and its biggest component, both are trading very close to the 20-day exponential moving average. That number on Bank Nifty is 51,950, and on HDFC Bank, it's at 1680, right where both these are trading. As I said, today's options expiry, so the range as per options data is 51,600 to 52,200. My basic premise is that you stay in this range, but if you start to break this range, then the move could be big on either side.
Okay, all right, Anuj got it. It just reminds me, right? Only a couple more weeks left for that Nifty Bank options expiry, the weekly product, and then it has to phase away.
Since you raised the point, just want to make a point. That was ending from 20th November, right?
Yeah.
Make it 19th November now, because 20th November is Maharashtra election, Mumbai election. That means it's market holiday, and that's the big heart of Mumbai. We'll be voting, but rest of you from in different part of the country can have a holiday.
All right, Anuj, thanks so much for that, and yeah, thanks for reminding us. 20th indeed becomes a holiday, but it is voting day, not really a holiday. Need to go out and exercise your right to vote. Well, on that note, we need to take a quick break, come back on the other side, and we'll have the technical experts join in, Mitesh Thakkar and Sudarshan Sukhani, with today's trading setup and some trading ideas.
Allegedly a member of Lawrence Vishnoi gang, and in that social media post he hinted that it was Lawrence Vishnoi gang which was responsible for this shootout, and Baba Siddiqui was attacked, was killed due to his proximity to Bollywood star Salman Khan. And it's known fact that Salman Khan is on Lawrence Vishnoi gang's radar for a very long time now. And the reason cited by the Vishnoi gang is the black bug case. Now, after that, Mumbai police said that they are looking into this post. They are trying to verify its authenticity and the whole context. Later in the night, that was yesterday night, a person called Praveen Lonkar was arrested by Mumbai police. Now, this person, Praveen Lonkar, is said to be Shubham Lonkar, the person who uploaded that Facebook post, his real brother. Now, Mumbai police said that both the Lonkar brothers, they were the ones who, orchestrated this whole conspiracy and the killing. Now there are 3 more accused who are wanted by Mumbai police. There is another angle which is panning out, that is a disputed SRA slum rehabilitation project. Now that was son Dhyaneshwar SRA project where Baba Siddiqui, recently his son Jishan Siddiqui staged a protest when the contracts were shifted from one set of builders to another set of builders. So this dispute could also be one of the reasons why Baba Siddiqui's murder was ordered. But there are larger questions and Mumbai police are looking for the answers. Whether or not Lawrence Vishnoi gang is actually responsible for this, or is it just a distraction tactic to divert the attention from the real motive?
Welcome back. Well, Gift Nifty suggesting that we pull back close to around 80-90 points to kickstart trade because of the weakish overnight handover. But how do you approach trade then from there on? Mitesh Thakur and Sudarshan Sukhani join us this morning. Good morning, gentlemen. Thanks a lot for joining in. Well, Mitesh, you go first. We're going to be getting a dip of around 80-90 points this morning. Will you look to buy into it?
Good morning, Nigel. Not looking to buy into it. I think, I've been saying that this market is contracting and we are seeing a lot of supply at higher levels. And every time we've tried to go on to sustain beyond 25,200, we've seen heavy intraday selling. So my sense is that we are not yet done with the declining part of the movement. It can still turn into sideways activity if 24,800, 750 zone holds. But broadly, it's a 25,300, 24,800 kind of a market, and try to buy near the lower end of the range. Otherwise, I think in the middle of the range, which is where we expect to start today, I would not be very keen to take long position on the index. And my belief is that in case we break 24,800, 750, then I think we are looking at a slightly deeper correction.
Got it. Okay, all right. Thanks for that, Mitesh. Sudarshan, what about you? Mitesh is not looking to buy the dip. What about you?
Yeah, good morning. See, I am looking to buy a dip, but as I said yesterday, you have to wait for the proper opportunity. Yesterday, the market started up and throughout the day, it was drifting down. So there was no opportunity, no momentum on the upside to say, okay, this market is finding a low and go ahead. So with that view, that we want to be buyers, but we want to see momentum in the market on the upside before we buy. So we let the market drift down today also. But if you see a few hours of base building, if you see a few hours of a point where the markets refuse to go lower, I would be a buyer there. It's not easy to say at what level that would happen, but the opportunity exists for a long position once the market stops falling.
Okay, got it. Gentlemen, good morning. Good to have both of you here. Sudarshan, in terms of specific trades, what would you have?
Well, I only have long positions. As I've explained so many times, selling in a bull market is very difficult. Apollo Hospital is a buy with a stop under 7,040. BEL, which is having a rather weak and tepid up move. So far, it's not shown very strong momentum, but then you never know. That's a buy with a stop under 280. Balrampur Chini has been making new highs, and that's a good opportunity to go long when it consolidates as it is doing now. Buy with a stop under 634. And finally, Hind Petro may be bottoming out. See, there are big questions here whether these buy on dips will work or not. So they are not intraday, but they are essentially for a few days with a stop loss. Hind Petro has a stop loss of 410. For each of the stocks, follow the stops and stay with the states till either you make a profit or you get out.
Okay, got that. Hind Petro, that one looks interesting. Well, let's find out Mitesh's picks. Mitesh?
I have more of sell calls today. Jindal Steel is a sell with a stop at 982.5 for targets of 940. Cipla has had some kind of a breakdown, so sell here with a stop above 1590 for targets of 1530. Bajaj Auto also, I think, is giving first signs of profit booking. keep a stop at 11,750 plus levels, look for a decline to about 11,000. And on the buying side is Indian Hotels. If it crosses 716, 717, buy with a stop at 704 for targets of 745. Okay,
all right. Those are individual trades coming in. By the way, Mitesh, just a quick word on BSC. It ended flat yesterday, but there's a brokerage report saying, well, maybe it's done too much and they've downgraded their target. Stock will react. Just wanted technically how it's looking to you.
So I think it doesn't look like getting into a big corrective mode, but extremely overbought levels, which means that yes, the stock can react and give a pullback to its 20-day average kind of a thing. I think the support pivots which I look at on the charts of BSC, one would be closer to about 4,100, and then the near-term support is closer to about 4,350. So I think either of these levels could be tested, and we should see some consolidation before the stock takes another directional turn.
Okay, all right. Mitesh and Sudarshan, thank you very much for joining us. We'll speak again at 9:10. We'll also have on the other side of the break the pre-open, which is 3 minutes away. Prakash Devan will be joining in. We talk about telecom. So lots of stuff coming out of the sort of mobile congress in Delhi. The minister speaking. We also heard from the Bharti chief, Sunil Bharti Mittal, and others. So we put the focus on that on the other side. Stay with us.
We're now in the bunker that we found underneath a Lebanese house in a Shia village only a couple of kilometers from our border. This bunker was ready for Radwan forces, for a battalion of Radwan forces.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, let's get in some derivative strategies before we move on and get in the initial, rates that are coming in. Rajesh Palvia, VP Technical and Derivative Research at Axis Securities, joins us on the show. Hi, Rajesh. Good morning and good to see you in. Tell us, what are your strategies?
Good morning, Nigel. So, looking at the market, Nifty is stuck in a very tight range, and this is the second consecutive week where Nifty is not able to cross 25,100, 150 supply zone. Looking at the data setup also, 25,100, 25,200 have attracted major call writing positions. So these area may remain as a supply zone for near-term structure. But on the lower side, 25,000 and 24,900 have major, put-based concentration. So I think we are going to witness a very tight range for Nifty for next couple of days. Either side breakout, either break below 24,800 will attract major supply pressure, or a breakout above 25,150 will attract more buying action or short covering action in the market going forward. To play this move, I think if we get any dip towards 25,000 should be used as a buying opportunity, because we have very tight range for the market. So I think wait for dip towards 25,000 for Nifty spot. At that time, you can initiate a long position in 25,000 call option, which was closed at around 112, 113 rupees. So if you get that call option around 85 rupees, you can initiate a long in that call option with stop loss of 45 rupees. And in the pullback towards 25,100, you can book profit. So I think that time that call option would trade around 145 to 150 zone. So buy 25,000 call option around 85 rupees. Target is 145, 150. Keep your stop loss at around 45. For Bank Nifty, major supply zone is still placed at around 52,000, 52,200 zone. So until Bank Nifty not crosses above 52,200, I think here also we may see a range bound activity for some more couple of days. On the downside, 51,600 is the important support area for Bank Nifty spot. So I think range bound activity in the Bank Nifty also. Breakout above 52,200 may attract short covering action. Some of the stocks idea where we are focusing on the long side. First one is Siemens, very strong buying action in last couple of days. The way stock has moved up, I think there is a possibility that stock may attempt to do breakout above its previous swing high. So I think Siemens can be looked at to buy for upside target of 79.60 to 8,000 kind of level. Keep your stop loss around 7,720. The second stock where we are focusing is from the chemical space, that is Deepak Nitrite. This is the third consecutive day where we are seeing higher high-low formation. Stock managed to cross its 50-day moving average. Looking at the near-term, short-term structure, we believe Deepak Nitrite may extend its gain. Possible target towards 3,000, 3,020 we can see in the near term. So one can buy Deepak Nitrite with stop loss of 28.70. And the third stock is from pharma space, that is Ipca Lab. Again, continuity of uptrend, a series of higher top, higher bottom formation. Stock is outperforming in the pharma pick. So we believe that Ipca Lab can extend its gain. Possible target towards 1760, 1770 we can see in near term basis. So Ipca Lab is buy with stop loss of 1670.
Okay, all right. Thanks very much, Rajesh, for that. And we'll, of course, come back to you for more later. Now, let's talk about telecom. Prime Minister Modi inaugurated the 8th edition of the India Mobile Congress yesterday. Bharti Airtel Sunil Mittal has called for laws to ensure that satellite companies like Elon Musk's Starlink pay license fee and buy spectrum. Let's actually listen to that soundbite.
And those satellite companies who have ambitions to come into urban areas serving elite retail customers just need to take the telecom licenses like everybody else. This is a simple solution which can be done on a global scale, and India can again show the way in this particular regard.
Okay, well, the Minister, Jyotiraditya Scindia, of course, ruled out an auction stating that spectrum will be allocated to satellite communication companies at the price determined by the regulator. Not for free, but no auction as well. Listen.
For SATCOM, spectrum will be allocated administratively. Now, that does not mean that spectrum does not come without a cost. What that cost is and what the formula of that costing is going to be will not be decided by you or me, it will be decided by TRAI. And there is a paper that has already been circulated by TRAI, and we have a regulatory authority for telecom, and that regulatory authority of telecom has been empowered by the Constitution to decide what that administrative pricing is going to be.
And Mr. Elon Musk obviously is watching all these developments in India very, very carefully, because on the platform X, in response to another post, Elon Musk said, and I quote, that this is much appreciated. We will do our best to serve the people of India with Starlink. So the battle lines have been drawn between international biggies in satellite communications like Starlink and, of course, Indian incumbents like Jio and Bharti, which are fighting hard to protect their turf. Because, in that speech, Mr. Mittal, in fact, went on to talk about how much investment Indian service providers have made to lay out these terrestrial networks to, build the entire fabric, 4G, 5G, etc. So, that's where we are at. I think we have, some experts also joining in.
One thing, I think this is a basic thing which I don't know, but I'm just putting it out there. Maybe our experts can answer that the spectrum which was so hard fought, right, in those auctions in 2009, which was the big one, the first big one, and then later on for the 700, the 800 megahertz, 900 megahertz. Not all spectrum frequency is in short supply. I'm not sure, at least, whether the spectrum that we're talking about is the same spectrum which was so hard fought in auctions, or whether this is some other spectrum.
Something entirely different for satellite communication.
Correct,
yeah.
Which could be in abundance. So it does not necessarily have to be the same spectrum which is being allotted now, which was auctioned earlier. So that's just one point. But I think we'll have to check with experts.
Absolutely, we need to get into more technical details, because this is the new frontier, so to speak, where the battle lines have been drawn. We have Prakash Diwan with us to take the conversation forward. Of course, Amnish has been in conversation with us in any case. So telecom is in focus, gentlemen. Prakash, so again, we need to wait to understand some of the nuances that whenever Starlink comes in, what is the frequency at which they need to operate, and what will be this new spectrum that clearly the minister has said that there's no auction. It will be administratively allocated, because that's the global practice. And he said that India needs to be in sync with the global practice. But it'll come at a cost. It's not going to be handed out for free. How significant do you think this is? Is it too far in the future that we're talking about? Because this seems to be the next frontier.
Good morning, Shurvi. So a couple of things, and this is all on the basis of whatever I've been catching in terms of my reading and talking to some people. This whole thing of the administrative allocation of satellite spectrum, which is the global protocol and trend, makes sense in a lot of nations where there are not too many people who are capable of providing this kind of an alternative service. I mean, there's not much of an option. You have smaller nations where it's just been kind of allocated at a price, because there's one agency, one supplier who's kind of made itself capable to do that, and it's just a matter of price between the government and the service provider. In India, Bharti's been working quite a bit on this whole thing. Jio may not have focused on satellite spectrum or satellite broadband yet, but they are a lot into the last mile connectivity, which is going to be a different part of this, which is a different angle to it. So it makes sense to have a auction-based thing, but it's a government, in the government's wisdom, if they don't want to set a trend or change that and follow the global trend, so be it. But the price hasn't been allocated, as the minister very rightly explained. That's going to be decided by a process which the TRA is going to follow, and they've outlined some broad principles, nothing very specific yet that you can make out from that. But the next question that Starlink and people like Starlink would have to face is the price right enough or justified if the allocation is made at XYZ price? So I think there are lots of things that you need to wait and watch for. But the basic this thing is, the market is massive enough, is huge enough for people to come participate, and still we will have last mile connectivity being the same. In the same breath, at the conference, the minister has also talked about BSNL rolling out 5G by 2025. Now, you can imagine, we are on two sides of the spectrum. Here's a state provider who's looking at that, and then the satellite providers who are coming, wanting to come. So, lots yet to be cleared, Prashant.
Oh yeah, it's it's something to watch going ahead. But, near-term tariff hikes are important, right? And the minister also commented on tariffs, the hikes which happened off very low base and need for more. Listen in.
चाहे आप OFC फाइबर की आप बात करो, वही दाम 95% गिरी है। 1 GB डेटा आपके लिए 10 साल पहले 289 रुपीस होता था, आज 8.8 है। 1 मिनट वॉइस कॉल का 51 पैसे होता था, आज 3 पैसे है। और निवेश कितना हुआ है? पिछले 1.5-2 वर्षों में 4G से 5G जाने में करीब 2 वर्षों में 4,26,000 करोड़ का निवेश देश में टेलीकॉम सेक्टर में हुआ है। 10% वृद्धि हुई है दामों में, पर 10% वृद्धि हुई है दामों में मतलब क्या? कि जो 3 पैसे होता था वो अब 3.3 पैसे हो चुका है। और क्या था ये दाम? ये 51 पैसे था। तो जहां निवेश किया जाता है उस निवेश का रिटर्न भी आना जरूरी है, नहीं तो 4G से 5G, 5G से 6G हम लोग नहीं पहुंच पाएंगे।
Prakash, you heard the minister. How should we read this? Just generic comments overall, shows the intent. But is there anything actionable from a stock point of view, stock market point of view?
No, so I think ARPUs keep on, firming up is very clear, and I think his intention is more from this thing on the BSNL expansion that's happening. Focus on tower companies. There is no better way to play this gold rush with the Shawls and Pixel kind of a this thing. You will find tower companies doing much better, Prashant, given the fact that expansion is something which the government is also very keen on letting happen in terms of price and in terms of geographical representation. So my bet is on tower companies. There are a couple of them which are very efficient, which focus on BSNL. You need to look out for those, and those will definitely play a very phenomenal part in this expansion.
Prakash, thank you very much. Quick conversation this morning. Appreciate you joining in with some of that perspective. I just want to quickly, if we have time, do we have Sudarshan? We want to just address that BSE. Okay, let me just quickly read out some of the, if you can pull up the graphics. So this was a brokerage call coming in from Jefferies, and we just have the lines put out. Basically, what Jefferies seems to be saying with regards to the BSE move is that, remember the discussion paper on F&O was put out on the 30th of July. Stock price of the BSE was about 2,500 rupees. The price has now moved all the way up to about almost 5,000 rupees. I mean, 47.50 or so as of yesterday's close. And they're saying, well, this is excessive. They've increased their price targets, but of course, I mean, the current price is way higher than where they are at. And they're saying the fair value should be about 3,500 rupees for this one. So, we'll talk more about this in just a bit from now. But we've got a couple of seconds to go for the market open. Let's just quickly look at that, and then we'll look at the stocks, etc. We're starting about, what, 0.25%, less than 0.25% lower, 25,020 on the Nifty. The Bank Nifty is down about 0.25%, 51,787. Sensex is down about 0.25%. The mid-cap index is down about 0.25%. So uniform 0.2% cut across the board on all indices. And of course, you've got about 20 stocks higher and about 30 lower. That's the indication as far as the Nifty heat map is concerned. Advanced decline early, but it's almost 1:1. Little more than advances as compared to declines at this point in time. So actually even lesser, higher right now on the Nifty heat map, as you can see. 45 points lower. It's a flat to slightly sideways open, 25,015. Surbhi.
BSE is actually reacting to this note. It's down about 3.5%. The Jefferies note that's calling for 3,500 on the stock. The stock's already at 4,500. That's been the nature of the run. But anyway, to talk about the large cap screen, HDFC Life is trying to recover from the blows yesterday. It's up about 1%. SBI Life as well. Some reassurance that's come in from the management in terms of growth. That seems to be working for the counters. Bajaj Finserv is also on the upside, about 0.5%. But the market overall is subdued, about 43 points lower on the Nifty. The Bank Nifty is losing about 90 points right now. Let's look at the losing side of the screen then. M&M, TCS, IndusInd Bank, Apollo Hospitals, Infosys. It's really cutting across sectoral lines. Not very clear sector trends. But some of the heavyweights which are down include ITC, ICICI Bank, Lever is on the lower side, TCS is losing ground 1%. So it's sort of a slightly weak morning pretty much across the board, so to speak. Most of IT is on the downside. FMCG is not finding much headway, and banks are somewhere in the middle. Look at HDFC Bank, it's up about 0.2%, offsetting the negativity from ICICI Bank. So that's really where it is. But life insurance and insurance in general is definitely an area in focus. A lot of those stocks, Bajaj Finserv, Finance, they're all up and about. There's also Shriram Finance, by the way. So insurance, NBFCs, that's the favorable color. And BPCL is doing its thing again, 1.5% up on BPCL. Even the other oil marketing companies, for obvious reasons. HPCL is up about 2.5%, IOC is up about 1%. So the whole move on oil marketing companies, thanks to the collapse in oil prices, that's a very clear trend that stands out this morning. Nigel.
Well, the stock of the morning is Rallis, actually. The revenue grew by close to 11%. The EBITDA is up 24%. And just take a look at that stock. It's flying away as we speak. It's up close to 9%. After a while, I've seen Rallis rallying in this sort of a manner. So big move is what we're seeing out there. The other stock that's doing well is Ashoka Buildcon. They've got an LOA for a project of around 1,126 crores from BMC. So that's doing very well today. A couple of other notable movers include GR Infra. They have got an LOA for around 1,800 crores from the Maharashtra State Road Development Corporation. So good move is what we're seeing on that one as well. And let's pull up Godrej Properties. Some of these stocks have been doing very well in the last few days. They've emerged as the highest bidder for 3 adjoining plots in MMR. The revenue potential, they said, is close to around 3,500 crores. I think we should just get the right stocks up for you on the screen. Godrej Properties is what we're talking about. GR Infra is the other one that we spotted, and Rallis as well. That's the other stock that we were looking at. So good moves on a whole host of these names. For the time being, back on Maharashtra as well on a very low base. Well, that one as well has, is up close to around 2%. The ones that are losing out, as should be mentioned, BSE now pulled back close to 4%. Angel One was flying away yesterday. It's cooled off close to 1.5%. We'll have the management in a short while from now. But a good, decent looking screen. HDFC AMC is reacting favorably to its numbers. So big move is what we're seeing out there. And HDFC Life, I think, the initial tick was green on that one as well. So yesterday's down tick actually has got bought into today. Most of the street liked what the management had to say. HDFC Life is the one we're talking about.
All right. Let's have the stock up for a quick bit. Yeah, 0.75% higher on HDFC Life right now. 36 points lower on the Nifty. We're at about 25,020 at this stage. Just a few other names. Angel One, which went up 14% by far. Actually, maybe it was more. Is by far the biggest gainer. It's done about 1.5% just in profit booking. All the other brokers also were rallying, right? So Motilal was up 10% yesterday. It's down 1.5%. And maybe we should also just look at JM Financial, which was the other big mover yesterday on the broking side, capital market plays. Let's see how that is doing. It's up another 3%. So no problems there. KEI, who we spoke with, I think Nigel mentioned, is down about 4%. And Cochin Shipyard is down about 3% as well. So this is broadly how we are starting the day. CDSL is up another 3%. Has been a fantastic last few sessions. HDFC AMC reported numbers in the last hour of trade yesterday, 4% on this one. HDFC AMC has got the second largest volumes on the NSE. And we were talking about oil marketing companies, right? So HP is up another 3% after yesterday's 4% pop. And it's never alone. So you should look at IOC and BP as well and see if there is some action there. Sterling Wilson Solar was up 5%. There was a call yesterday and we highlighted some of the takeaways from that call. It's up another 3% this morning. Stocks, of course, fallen quite a bit had fallen from 800 levels to about 550, which was the recent low. Stocks back at about 600 now. Atul Mehra is with us now, fund manager at Motilal Oswal Asset Management Company. Atul, good morning. Good to have you with us here. Thank you for your time. I just want to start with at Motilal, and we've spoken about this with Ramdevji many times. Financialization and especially the capital market segment has been a big focus area for as a thought process.
Yeah.
So just wanted to get a sense from you. I mean, what's your thinking here? Start with exchanges first, and then, of course, brokers and wealth managers second, and maybe also asset managers. What's the thinking? Go on, Atul.
Hi, Prashant. Good morning, and thanks for having me on the show. So, yes, so if you look at capital markets ecosystem, I would say that we are still in the very early stages. We have come a long way. Like, we've seen phenomenal growth in the last few years, especially the last 4 years post-COVID. But if you think about it, the numbers, even today, like we have about 4.5 crore unique mutual fund investors in India. Even DMAT, if you look at it, while the gross number is about 17 odd crores, uniques would still be about 8 to 9 crores, not more than that. So if you draw a little bit of a parallel to what happened to the US in, say, 1980s onwards. So 1984 in the US, the AUM, equity AUM was about $80 billion. And it went to like almost $3 trillion in the next 2 decades, right? So during this phase, you saw that the participation, which was low single digit in terms of household penetration of equities, that went up significantly. And today, like US households own more than, like most of the US households have exposure to equity markets. So I think what has happened is after COVID, we've seen this in terms of digitization wave helping the capital markets wave. Markets have obviously done well. But we believe that even now, we are still in the early stages. So in the next 10 years, you would see that across the board, capital markets participation should continue to do well, and we will see more and more participants coming about. And that underlying theme is what is reflected across exchanges, brokers, asset management companies. So it is the same theme, but everybody is a beneficiary because it's in the same value chain. So we are bullish on in terms of the prospects for in terms of capital markets, ecosystem, financialization, and digitization, and so on.
Atul, so bullish on the prospects and also comfortable with the valuations? What about the second part of it?
So that depends. So we always like have a bottom up in terms of stock picking framework. So we have exposures in terms of some of the names in the ecosystem. But again, like I would say that valuation is a function of the growth outlook ahead and the capital efficiency of the business. So a lot of these businesses are extremely capital efficient. Most of them are agency businesses. You don't need money to grow these businesses. So capital efficiency is absolutely amazing. Growth is on a tailwind. And obviously some of them have done exceptionally well. But in the context of the growth and capital efficiency, some of them are, I would say, even now reasonably priced.
Hi, Atul. Good morning and good to see you. When you manage, I think, the large cap fund as well. And how are you positioned out there? HDFC Bank has been a bit of a drag, for most portfolios in the last 18 to 24 months. But now of late, suddenly it appears the big boys come out to bat. Your view on this large name, do you think now the stars are aligning and things should look up from here on in terms of a stock price move?
Yes, so I would say that HDFC Bank, it's gone through a major time correction for the last 5 years now, almost like we haven't seen any return on the stock. And if you look at the valuation, derating has been absolutely massive. So it has derated in terms of the valuation multiples over the last 4 to 5 years. So at this point in time, what we've seen, at least again more lately, is with this entire FII sell-off that we've seen over the month and so on and so forth. So some of these stocks, they were starting to do well. But with this recent bout of like $8 billion of selling, again, like a lot of the mega caps have sold off. So if you, the way we think about it is like in the portfolio that we run in the large cap mutual fund, we believe that some of the banking names are very well placed. Valuations are very attractive. And as and when you see in terms of participation from FIIs come back, and even otherwise, like as the number delivery comes about, you will see that some of these stocks starting to outperform again.
Atul, just sort of talk about one more sector, and I think you guys were pretty early on Zomato, right? And the whole turnaround, the complete change in the company has been phenomenal, and the stock has been reflecting that, right? So kudos on that call. But what are you making of quick commerce? Because now it's far more than just talking about one stock, right? A lot of companies, FMCG companies, are talking about disruption. Delivery channels are really going all over the place. We had DMart refer to it, we had Dabur refer to it. So how are you looking at the whole quick commerce consumer space? When I don't know if you have any thoughts on Swiggy and also how it is impacting the rest of the consumer ecosystem. So what are you playing here, and what would you stay away from?
So Subi, in terms of quick commerce as a space, in all our conversations and all our ground checks, it suggests that this is an absolutely new channel, and this is a channel of the future. Because what quick commerce has been able to do is something in terms of very unique, and it doesn't exist anywhere in the world. Like the kind of delivery ecosystem that we have in quick commerce here, and it also is a function of the amount of labor that we have, the cost of labor, etc., etc. So all those enabling factors and the population being very dense. So all these factors coming together, quick commerce is a very Indian phenomena, and it is a channel which is becoming much, much bigger. It's growing exponentially, and the use cases are only expanding by the day. So we are, in terms of very, very optimistic on the future prospects for quick commerce. It's also enabling, whenever there's a new channel that comes up, it enables new set of business models. Like, for example, if you think about e-commerce, when it came up, Amazon and Flipkart and all, it gave birth to so many different brands, so many different direct-to-consumer businesses, which would not have had access to the traditional general trade channel. So similarly, in quick commerce, again, we are seeing not just the channel itself, but there are many businesses which are born on quick commerce and which are scaling very, very significantly. And overall, I think that this is something that is going to be a mainstream channel in the next decade or so.
Got that. Atul, just this new frontier for India, of course, is building out the semiconductor ecosystem, right? OSAT is one, and now, of course, we're talking about proper fab, but of course, it's coming through from some of the largest players like Tata's, etc. From a listed perspective, are there any? Are you trying to look? Have you looked? Have you found any? How to play this?
So EMS is one direct proxy to this particular space. So EMS has been a theme which has played out extremely well. And the prospects even from here for EMS as a theme are fairly strong, because the focus is on manufacturing, the focus is on import reductions and more in terms of domestic manufacturing. So while we don't have a direct in terms of semiconductor play as yet, but EMS generally as a space is a direct proxy on the manufacturing theme. So I think that is how it is at this point in time. There are many new businesses also which would likely come in the market over the period of time. And also like some of the traditional companies also are now getting into this space. So I think there are opportunities across the board, and the best way to play this theme is through the EMS players.
Okay. All right, Atul, we'll leave it on that note for this morning. Thank you very much for joining in. Good conversation. We look forward to the next one. You have a good day. Well, moving on now, let's focus on earnings. And HDFC Life is really the stock in question. Look at the stock right now. It's recovering and it's undoing a lot of the damage that it saw yesterday. It's very clear that the conference call that the management had post-market hours, that's kind of sort of soothed nerves, and it's kind of put to rest some of the concerns out there on the margin front specifically. In fact, the total APE and the retail APE for the company beat estimates. The VNB margin was below expectations. Our colleague Yash caught up with Vibha Padalkar, the MD and CEO of HDFC Life, and began by asking her about the APE growth as well as the guidance for this year. Take a look.
I mentioned that in the first half of the year, that growth on the upper end would be around 15%. We are revising it to say growth for the full year FY25 should be in the range of 18 to 20%. The reason why this gives me the confidence level is the first half of the year on a WRP basis, we grew very well at about like you said, 28%. APE basis, we grew by 31%. Whichever way you look at it, very good levels of growth, beat both the industry, overall industry and the private sector very, very comfortably. Market share expansion of 60 basis points. We achieved a watermark of 11% in terms of overall market share of the sector. And many such underlying nuances in terms of retail protection continuing to be strong. Number of policies growing at 22%. So very, very wide spread growth rather than concentrated. Tier 1, Tier 2, and Tier 3 growing very comfortably in their 20s, different levels in 20s. Agency channel roaring back in terms of growth being faster than company level growth. So any which way you cut it, growth has been extremely secular, and that gives us the confidence that the buoyancy that we're seeing in this sector hopefully should see us through towards the end of the year. Last point I want to make is some of the hesitancy, like I had mentioned to you last time, was because of the rollout of surrender charges that was causing a little bit of uncertainty because we didn't know, is it going to get rolled out on 1st of October or not? So that's now behind us. It has got rolled out. 95% of our products are now compliant. So we have all the products in our arsenal to be able to go out and sell. Conversations with our 300 plus partners are very constructive. And I think in a quarter's time, towards the end of this quarter, quarter 3, even that will be history, and we will move into a business as usual mode in quarter 4.
The last interaction, of course, you had spoken about a guidance of 17 to 18% on the value of new business. You're on track as far as the first half is concerned, because there you see a growth of 17% on VNB so far. Confident of maintaining this growth rate and sticking to that guidance of 17 to 18% on VNB? And is there some sort of an upward bias to that 17 to 18% as well?
Yes, so we will target in that range, and right now I'm saying 15 to 17% with the 7. We've already reached at 17%. Now, in terms of upward bias, I will have a better view on this by the end of quarter 3, early quarter 4. There are multiple conversations, as one can imagine, due to the surrender charge implementation on all the products other than unit-linked products. So it's fairly significant. And we are in a multi-tie situation in each one of our relationships. So we have conversations with our partners. Partners have conversations with other insurance companies whose products they sell. They come back to us, they come back to them, and so on. So all of that is going on right now. So things will settle down over the next, in this coming quarter. And we will certainly have a better handle. All things being equal, I think we should be in a slightly advantageous position on margins versus peer set.
Slightly advantageous position on the margin. And that's exactly what I want to speak to you about. For margins, what you had guided the street for as far as FY25 is concerned is 26% plus minus 100 basis points. Now, as far as the first quarter of FY25 is concerned, the margins came at 25%. Second quarter, they dipped a little out of your guided band to 24.3%. Now, what that takes the H1 margin to is about 24.65%. Very clearly, what I want to understand from you is that in the second quarter, what were those couple of things which impacted the margins to make them fall out of your guided band? And are those problems, are those concerns here to stay for the rest of the year, or could they see an improvement and help margins to go up?
Just to deconstruct quarter 2 on a standalone basis, last year was 26.3%, somewhat in a different era because equity markets were very different. But nevertheless, 26.3% versus 24.3% in standalone quarter 2 of this year. This 200 basis points differential is explained as follows. 100 basis points was simply because of product mix and largely because of unit linked, what we have been articulating. For example, in H1 last year, unit link was about 28%, and that increased quite significantly in H1 this year to about 36%. So largely due to unit linked and a little bit due to annuity, but I would stick with unit linked. So that is, of the 200 basis points, 100 basis points is due to product mix. Another 100 basis points is because of a conscious call on repricing of our non-par products that we had to phase out. I'll explain. So we had to phase out some of the earlier products that would no longer be compliant after 30th of September. Given that 40 odd products had to become compliant in a very short period of time, and this is, when I say compliant, all the features, in the product brochures, but more importantly, on our IT systems. And you can imagine all the nuances, because earlier there were no surrender charges at the end of first year. So we had to redesign our IT processes and the customer facing the system to be able to change the product itself, the product architecture itself. So all of that takes time. So we had a toss between, do we reprice our old products that are anyway going to be phased out, which would mean keeping some of our new products on the back burner. Hence, we took a call that it is important for us to have new products from the word go on 1st of October. And hence that somewhat delay in the pricing by about 3 weeks had a 100 basis points impact on our margins for the standalone quarter. On H1, it's about a 30 to 40 basis points impact on H1, but on a standalone Q2, it had about 100 basis points impact.
Okay, so if I understand that right, of course, leaving the point on growing ULIP out of the total APE share aside, there was certain amount of price increase which was deferred by about 3 weeks, as you pointed out. And if that wouldn't have happened, it could have added 100 basis points to the margin straight away. Is that correct?
Yes, except that it would be price decrease. We had to price it downwards because of interest rate movements. These were on a on-par product, but we held on to whatever were the prices, and that had a 100 basis points
impact. Okay, that clarifies one bit, on the margin impact. The second one is, of course, a growing share of ULIP portfolio out of your total AP. I remember the last time that we had spoken, you had said that, boss, ULIP share is rapidly coming down. We won't have to wait for too long before it comes down to sub 30%. I want to understand from you, between the first quarter and the second quarter of FY25, what is the movement that has come about as far as ULIP share of total APE is concerned? In the second half, do you expect this share to go up again? If you could clarify on both these points.
Yeah, so first quarter, ULIP share was about 38%. In Q2 standalone, it had come down to about 34-35%. Some of our channels, say our agency channel, came down to sub 30%. Overall, bancassurance was still a little bit elevated, but some channels got there even quicker. And what we, as a strategy, when we looked at the customers that have come on board, our customers onboarded in Q2, more than 70% of those customers are new to HDFC Life. Now, our realization is that, yes, ULIP margins are lower, but these customers are new to us, and our ability to sell to these customers is going to be quite meaningful. Upsell other products, more margin accretive products, different solutions to these customers and their family members. So rather than saying no to these customers, in the pecking order, let's go for growth. Let's go for increase in or growth in value of new business, and margin will be an outcome, like I mentioned last time. However, with the caveat that there will be a floor to the margins. Margins are not going to be in a free fall, but we're not going to be tethered to a particular margin.
Well, that is HDFC Life, and stock is up 2% as we speak. By the way, the market has recovered. Yes. We're up 10 points now on the Nifty, which means that there is a nice pullback which has happened from the day's low. By the way, the day's low was around right after market opening. So I think from 9:20 or so, in the last 20 minutes, there has been a decent pullback. So from about nearly 25,000 kind of levels, actually the low today was 24,994. Which is, of course, the gap down. From there, we've pulled up almost 75 points on the Nifty. Take a look at the Nifty Bank as well, because I think Nifty Bank is also pulled back from the day's low. The opening low was 51,711, and we are about 200 points off the day's low for the Nifty Bank, currently at 51,956 or so. So this is broadly the picture. Maybe take a look at what is causing some of this pull. So HDFC Bank, of course, is the biggest contributor. We should have the stock up. 30 index points coming in from HDFC Bank. So that's a 16, 17 rupee move. And there is Reliance, which lost about 2% yesterday. That is also, I think, trying to pull back. It's got about a 10 to 11 point push, index point push on the Nifty. So 2700 is about 0.4% higher. There is Bharti as well, which is, I think, up not by much, I think, on a day-on-day basis. But these are the three names, HDFC Bank, Reliance and Bharti, in terms of contribution to the Nifty.
Just one quick point on HDFC Bank. It's at its 20 DMA right now. The 20 DMA is at around 1702. So that's the important mark. The technical factor will play out if it can sustain above that level. So just keep an eye out on that one. It's been moving well for the last few sessions. We had mentioned this yesterday as well. 20 DMA, very, very close out there. You wanted to trade about those levels.
All right. We'll see if it manages to take out the 20-day moving average near term. It's an important pivot. We take a break. Dinesh Thakkar of Angel One will be joining us to talk about their second quarter earnings. Stay tuned.
To enter into this bunker and do a raid into Israel and do a larger scale of massacre than the 7th of October. They were planned with the motorcycles here to go to Kiryat Shmona, to Iftach, to villages and positions inside Israel and conduct a massacre. And all our enemies should know, whether they are close or far away in Iran, they should know that we are determined. We are determined to supply security and safety to our citizens. We need to impose a 1701, a fully imposed 1701 this area, so Hezbollah can never be next to our border with such infrastructure that can do a Conquer Galilee plan like.
Welcome back. Well, let's look at the next company in focus, and the one that we have on our radar now is Angel One. Of course, Angel One came out with its Q2 results, and there is so much that's been going on in terms of regulatory changes that impacts, of course, broking companies. Let's put up the one-year performance of Angel as well. The stock has done well, about 50% up in the last 1 year, and the last 2-3 months has seen the stock go on an absolute tear. Still not at its all-time high levels. That level was closer to 3,800, but yeah, it's not too far away from that either. Now, talking about the second quarter performance, revenue, one could argue, was a slight miss compared to some of the street estimates, but there's a big improvement in the operational performance, and that was received very well by the market. The stock really zoomed ahead once the numbers came out. So what is the road ahead looking like? Dinesh Thakkar, Chairman and Managing Director of Angel One, is with us to take the conversation forward. Mr. Thakkar, good morning. Great to have you on the show. We're speaking to you after a long, at least I'm speaking to you after a long time, so to be here. And, you know, we have to talk about the business in the context of some major, regulatory changes that have happened. One, on the flat fee structure, right? The whole slab-wise system is now a thing of the past. It has to be flat fee, uniform, and that's getting rolled out. The other one, obviously, is the F&O landscape is going to change quite dramatically come the 20th of November, right? With the number of expiries being limited and lots of other regulations coming in. Let's first talk about the flat fee, because that's already happened and you've also revised your broking charges. The worry was that this would spell the death of discount broking completely. And we've seen some of your peers like Zerodha come in and talk about that, tweet about that as well. What is the impact on your business in terms of revenue, in terms of the way the charges will be levied? Because now I think even on cash trades, you will have to levy something. Cash transactions can no longer be free.
Yeah, sure. First of all, like all regulation which comes in the market, we have seen most probably they look at investors' interest. And whenever SEBI have come out with some kind of this kind of reforms or some changes which helps investors to build trust and confidence, we have seen a big growth in customer base. Now coming to this true to label, where we have to charge as per what exchange charges us. I don't think discount broking houses were too much dependent on these differential prices. It was because of differential prices, we were keeping our prices low, or some services were provided free, because we knew back end we are getting some kind of a commission or some kind of rebate because of scales that we have achieved. But if regulator feels that is not the right model, it should be level playing field. I don't think these platform companies, digital companies, when they are serving a customer is sensitive to some charges to be levied on services what they are taking. That's the reason we went ahead and started charging on cash delivery. And we feel that customers are okay to pay it until the platform is functioning well, glitch-free, and they're able to execute their trades. So we don't see any impact in terms of true to the label, because we have done few changes in cash delivery, and we have started charging on non-cash collateral which customer provide. We charge interest on that.
Okay.
So what is, sir, if you could just quantify the revenue impact, because back when we spoke to you, I think this was around July, August, when all of this was being put in motion, at that time the indication was that the impact could be to the extent of 8%. So can you just tell us on revenue, now that you've started with the new charges, what is the net impact on revenue and the impact, if any, on your trading volumes as well?
Yeah, if we come to true to label impact, it was what I had estimated was 8%. And by changes that we have made, it will offset that impact, and we would not be seeing any impact because of true to label.
Okay. Now let's come to the other one, right? That's the big one, which is also new. Mr. Thakur, good morning. Prashant here.
Yeah, good morning, Prashant.
One weekly option, one contract instead of 3-4 per exchange. Exchanges have been privately telling us that market volumes will drop significantly because of this. Some have said 30%, 40%. We don't know. We'll only find out from the 20th of November. What is your own sense, sir?
See, Prashant, I don't agree that volume would be so drastically lower, because based on kind of an analysis that we have done, total impact on our net income would be in the range of 13 to 14%. Because customer who has decided to come to the market, they will come and they will trade. So they may trade in F&O segment, or they may trade in cash segment. So I'm talking in terms of overall income impact on our total income. But when we come to drop in F&O volume, my estimate would be drop would not be more than around 20 to 22% maximum. But lots of these customers are going to move to cash segment. So we believe that impact on discount broking houses in terms of their gross revenue would not be more than 13 to 14%.
Okay. So 20 to 24% drop in F&O volumes market-wide, right? That is your estimate?
Yeah.
And for you said net profit impact could be 13 to 14%.
13 to 14% maybe in 1 or 2 quarters, because customer base is growing at the rate of 40, 50%. So we don't see any impact beyond 2 quarters. And one more thing that you keep in mind, when a customer comes to the market, he has certain wallet share for trading and investment. That is going to continue. Because this person will get less opportunity in weekly options, he may stagger this, or maybe his life in this market will increase. So overall lifetime value of a customer is not going to decrease. In fact, it is going to increase. If they lose less money, they're going to stay in the market for the longer time.
Is there any way you can offset this? Is there anything you can do or exchanges can do?
Discount brokerage houses can do, because we can increase charge per order, because we have seen customers are not very sensitive in terms of charge per order, but they're more sensitive in terms of stability of platform. So there is an elasticity, there is an headroom that we have, but we will look at this kind of a situation for a quarter or so, and then decide whether there is a need to tweak any charges. Because we have seen that previously also, lots of brokerages tried to give 10 rupees per order, but they were unable to get market share because their platform were weak. They were not really user-friendly. So we feel topmost discount brokers have that kind of levers. They can use it if at all they feel impact is beyond what we were anticipating.
All right.
I just had one more question, and this is not with regards to you, but no one really knows, but markets have... So this is with regards to exchanges themselves. Do you think, as an insider, as someone who, of course, knows this business more than anybody else...
In the industry, don't say insider.
Yeah, of course. I mean an industry insider, let me put it that way. So markets are assuming that the one contract per exchange will benefit BSE. Volumes will move, especially on the option side. and they will gain market share. Is that assumption correct? And to what degree in your assessment? This is just purely theoretical, your sense. And we're not going to hold you
Prashant,
to it.
It is not going to happen that way because we have seen that there is a stickiness on platform. So people who are used to like certain products, they don't shift very easily till the time there is a big drastic kind of like thing which they have to do it compulsorily. If you look at contract size was reduced in April 2024, we did not see any big benefit to neither to exchange nor to this thing. So there can be a temporary kind of like blip in volume for 1 quarter or maybe 1 month. The people were not aware that contract size has reduced. Similarly, I feel when contract size would be increased, ticket size is increased and lesser number of weekly option, that is not going to create a big shift from one exchange to other exchange or one broker to other broker.
Because the assumption is that people want to trade. So आपको सट्टा करना है, तो आपको you need a product. So now they will do it. They were doing it on NSE. Now it's not like that. You're saying it won't happen. There's no.
No, people are shifting. It is not that they're shifting because of these changes. They want more product. They want more variety. They will do it.
But this per se will not cause a market. This will not cause a big market share shift on the option F&O side.
Yeah, this option rationalization and ticket size change is would not be an instrumental to change in platform.
All right. Hi, Mr. Tucker. Nigel on this side. Despite all these regulatory changes, you're holding on to your EBITDA guidance of 40 to 50%, right?
Yeah. See, Nigel, look, by all these changes, cost of trade has not increased. So if at all, suppose a client does a lesser volume and staggers their volume instead of 6 months to 12 months, we may be having an extra capacity for a quarter or two, which will get filled as I said that, okay, customer base is growing at the rate of 40, 50%. So cost of trade is not going to increase because of these changes.
But sir, you just said that, brokers like yourselves will check for price elasticity and perhaps, like you just said, you'll be charging on the additional margin that you'll provide, etc. So I'm not understanding. I mean, how is it that you're saying that cost of trading is not increasing once, with the true to label?
Surabhi, let me explain. See, digital model have a capacity created for certain volume. And because if there's a drop in volume, which we feel that we would not be able to fulfill capacity in 2 quarters, we need to take some corrective actions because we can't reduce our capacities. But if you look at cost has not increased. If at all, I am anticipating hit would be, say, on exchange 20%. If it goes beyond that, then our capacity would be remaining unutilized for certain amount of time. So we need to do some corrective steps.
Can you just tell us that when you talk about capacity, sir? I got your point that, I mean, you don't want your trading, Angel One's trading volume should not fall beyond a certain threshold because then you'll have to take those corrective actions. So do you always work on 100% capacity? And what is the trading volume hit that you are anticipating at Angel One as all these F&O changes roll out?
We work on trading capacity. It's in SEBI regulation which says QSB brokers have to work at a capacity of around 50%. So we are working at a capacity of 45-50%. But if at all volume drops beyond what we are anticipating, so we would be running at a capacity utilization of just 30%. If at all it goes beyond what I am saying. Currently, what we are estimating would be an hit of around, say, 20% in F&O. And that will create an impact of 13 to 14% impact on revenue. If it goes beyond that, so we need to protect our margin for that financial year.
All right. Very quickly, sir, you're also planning on distributing insurance policies through your platform. What's the timeline for that? Also, just give us some clarity. Would you be competing with the likes of Policy Bazaar? What's your strategy to capture some market share?
Sure. So, as last year, we introduced Super App and we started distributing mutual fund. Today, as we speak, we are number 2 in terms of incremental SIP. This quarter, we started distribution of loan product, personal loans, and we were able to disburse around 360 crores of loan disbursement. So that is where we are very bullish. We think that we'll be able to get a decent market share in that space also. By last quarter, we'll start introducing insurance business, but our model is different. It is purely digital model. We don't have a call center and all that. So we'll sell only products which are fully digitized, which has a digital journey.
Right. Sorry, pushing it with timing, but just one more question since we have you and we only chat quarter to quarter. The other thing which we don't know if it'll happen and by when, but I'm told that beta testing has already started is essentially, ASBA for secondary markets as well, right? If that is implemented and depending on when, etc., what are implications then? Will that require another sort of pricing reset to offset the impact?
Currently, it is too early for us to do any assessment. We have to see systems and what kind of there are two kind of an option given to us, Thin one and ASBA. So we have to see that what is the readiness of system, and based on system, which product or which area we have to give options or whether it is mandatory. I think by December, by next quarter, we would be very clear in terms of if there is any impact because of ASBA and all that.
Okay, all right.
But my sense is that that impact would not be very high. So all that kind of very heavy impact things have been announced was introduced in this quarter.
It's all relative, right? So maybe the impact keeps reducing. The big stuff has been done, and
big stuff has been done. I say that. Yeah.
You provided a clear picture on what implications are and how you're thinking about it. Thank you very much, Mr. Thakkar, for joining us with that perspective. It's always a pleasure speaking with you here. Markets up about 25 points at about 25,000, just under 25,100 right now.
Okay, all right. Let's quickly move on to our next discussion. We're putting the spotlight on the auto sector now. Remember, Bajaj Auto is kicking off the earnings season for the sector today. And the expectations are running really mixed. Two-wheeler volumes have been reporting a pretty healthy rise of almost 13% in the quarter. But we all know that CVs and PVs have been pretty sluggish. Kumar Rakesh, India analyst at BNP Paribas, who tracks the space, is now joining in. Kumar, great to have you on. That's really the question, right? So let's take it, dissect it. And I'm going to start with the weak news first, which is passenger vehicles, right? So what are you expecting for the large players? I think on the SUV side, M&M has still managed to keep the flag flying high. There is Maruti. What's the overall sense on PV and on the passenger vehicle stocks?
Hi, good morning. Thank you for having me on the show. So yeah, for passenger vehicle and the commercial vehicle sectors, this quarter was quite weak, and we would expect that to reflect on the revenue performance as well. The high base and now pent-up demand not being there in the system has obviously started impacting the demand, which has started reflecting in inventory buildup, the discount also going up. And that is a phenomena we are tracking globally as well, not just in India, where the demand has started slowing down in some markets far more dramatically than what it is visible in India. But that's a phenomena which we are seeing in India as well, that for passenger vehicle, at least the demand in the near term seems to be slowing down. But we'll have to keep in mind that we are coming off from a very high base over the last 2-3 years, where there was very strong pent-up demand. So we are going through that adjustment phase in which, given the high base and lack of pent-up demand, we'll see some moderation for a few quarters.
Yeah, I was just coming to that. So you're saying moderation for a few quarters. So basically, we are somewhere in the middle of the slowdown cycle, right? We are nowhere close to the end. Is that for PVs or also CVs? Where are we in terms of the downtrend? And when do you see light at the end of the tunnel?
So for passenger vehicle, we would possibly see another quarter of sluggish growth, and then we would expect by fourth quarter the base should start getting a little more favorable. And going into next financial year, the underlying fundamentals of the sector continues to be quite robust, and we would expect that to start playing out. And hence for the next year, we would expect FY26 volume growth to be better than FY25 volume growth. From CV perspective, the first quarter in this financial year was surprisingly quite strong, but second quarter, given the low infrastructure spending and more importantly, monsoon, we possibly saw much weaker demand in the September quarter. It would be critical to see how the demand is panning out in the immediate next one month or two. If that starts picking up there, we would start believing that there is an upcycle which should be underway and the trough should largely be behind, which is what our base case expectation right now is, that the trough with September quarter is behind us. But we would need evidence of that in the immediate month or two numbers as well.
Okay, all right. So that tells us about the CV and the PV picture and the wait ahead before things start turning around. Let's come to two-wheelers. That's the more exciting space, right? So just tell us how you're expecting the trends to be, and also give us a sense on stocks under your coverage. Which are the ones that you that you have a buy on, which can still be bought at current valuations? I don't know if Bajaj makes the cut because it's already seen such a huge move, right?
Yeah. So first on the overall sector, that definitely since last year's festival season has seen a very strong demand pullback recovery, and that partly is also helped by a much better financing which is available for two-wheeler customers. And you would see that across OEMs, the financing penetration has increased. And in the recent data which we are tracking, both for the rural as well as urban demand drivers, seems to be turning more favorable. So there appears to be a holistic, both from financing perspective as well as from demand driver perspective, things turning out to be far more positive for the two-wheeler sector. And the only challenge with the two-wheeler sector would be that from second half of this financial year onwards, the base will start becoming far more tougher. In the first half of this financial year, we have seen close to mid-teen volume growth. We would start seeing a far higher moderation from that high level of volume growth that we have seen in the recent months as we get into the second half. And from there on, we would see a much more normalized growth for the two-wheeler industry going into FY26 onwards.
Okay,
From
so
stock pick perspective.
Yeah, carry on.
From stock pick perspective, Bajaj, we think that should be looked at more from the dividend yield perspective and free cash flow yield, because their payout and more importantly, their free cash flow generation over the last 2-3 years have significantly improved. So when looked at from a PE perspective, it obviously looks like it has dramatically re-rated and there may not be a lot of potential left. But their dividend yield still looks reasonably attractive despite the re-rating, given the higher free cash flow generation and better payout ratios.
All right, Kumar, thank you very much for stopping by and giving us the perspective on the auto space. Appreciate your views. Well, on that note, we have to take a quick break. We'll come back on the other side and get some fresh trading calls going with Mitesh.
Hassan Nasrallah, this ruthless terrorist that we eliminated, that is responsible for the deaths of many people, not just Israelis, Germans, Americans, French, and others. The world is a better place without Hezbollah. The world is a better place without Nasrallah.
CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
I have a solemn duty to perform. 4 days ago, we lost a great son of India. The passing of Mr. Ratan Tata filled us all with immense grief. He was a dear friend of my father-in-law, of Mukesh, and of our family. He was also a mentor to Akash. He was a visionary industrialist and a philanthropist who always strove for society's greater good.
Welcome back. You're with us in the last leg of Bazaar. Well, we have Mitesh joining in with some trading calls. Mitesh, good to have you back. So there's been some attempt at a recovery. What would the bets be now? Mitesh, I think you're on mute.
Yeah, can you hear me now?
Yes, yes.
Okay. So I think, my understanding is that the markets are, contracting, and therefore you will not see follow through on either side. Trading has to be stock specific. The good thing is that the recovery has been led by Bank Nifty when the hourly charts are improving. So if somebody wants to trade the index, my choice between the two would be Bank Nifty. Keep a stop below 51,775 on this spot, which is about 150 points lower. So you might want to buy slowly, buy a bit here now, 50, 60 points lower, add more, and keep a stop below 51,770. And I think on the upside, we might get 52,500 plus kind of levels on the Bank Nifty. So that's where the focus will be.
No, absolutely. And, that's basically was the view out there. By the way, Mitesh, BSC, I just want to revisit that, right? 6.5% cut. We just had Dinesh Thakkar of Angel join us in the last conversation. And there are two things. One, there is the Jefferies downgrade, which I referred to in the morning. But on the other hand, there's also, for the first time, a CEO of a broking company is coming in saying that this perceived shift of market share from NSE to BSE because of limitation on number of weekly option contracts, it says ain't happening. Any thoughts technically on BSE now?
So, Prashant, two things. One, I think, we talked about the stock yesterday as well, and we talked about some kind of pullback because while the charts are good, I think, it's extremely overbought. So I think that pullback process has started. Today, the opening was gapped down, obviously, because of this brokerage note. I think this could be a slightly deeper pullback than what I initially anticipated. My initial estimates were around 4,100. So 4,100 to about 40-50 is the first area. But in the worst case scenario, I think even pencil in levels of around 3770 to 3,800 levels. So I think the stock will be corrected for the next few days. If people still have it, time to take profits here.
Okay. All right. Mitesh got that. Thanks very much for the calls. We'll touch base with you a little later in the day. Let's now shift the focus to the commodity markets. We have Manisha joining in with the latest. Manisha, I wonder if you managed to look away from crude because that's the one that's grabbing all the global attention, right? What are you tracking right now?
Well, yes, crude oil prices after the 2 days of decline have stabilized a bit. So trying to look at other commodities at this point in time. So I'm looking at metals, and precious metals and industrial metals really seem to be trading in two different directions. I'll talk about precious metals first, where we have seen the gold prices continue to gain. Remember, 2685 is an all-time high, and we're not trading too far away from those kind of levels. And this is even as geopolitical tensions seem to have simmered a bit. We've seen crude oil prices come off because of that, but not gold. Gold continues to hold on the higher side, and we've seen 29% of gains happen in this year itself. And by the way, with those kind of gains, gold is headed for the best annual gain in 14 years. I mean, that's the kind of surge that we've seen in prices. 37 occasions in this year when you have seen all-time highs, yet all-time highs in this year itself. Well, if you look at the markets itself, we are looking at traders putting a probability of 90% for a 25 basis point rate cut in the month of November. Now, that has been factored in. For the gold prices to run further from here, we really need to see some more strength for that matter. Silver also has followed gold, 1% of gains in the overnight market, and silver has gained 32% in this year until now. Also, we are looking at silver prices much off its all-time highs of 49 that we saw in 2011. So more people believe that silver could outperform going forward from here. But then when you come to industrial metals, well, we have seen a bit of a decline in this week until now. Overnight markets were not too strong. There has been a lack of details on China's stimulus. China export numbers have come in on the weaker side. Is the reason we've seen copper prices decline 1.5%, 3-week lows onto that one. Aluminum is trading at off 3-month highs as well. You have nickel prices trading at a 3-week lows right now. Even as individual fundamentals here and there are positive, especially for aluminum, where there is a bauxite shortage coming in from Guinea, and that has led to higher TC numbers as well. But even with that, there is profit taking across board that we have seen. And finally, the kind of data that is coming in this week will tell you on where the prices will move from here. You have US retail sales, industrial production, and jobless claims coming in on this week, and the further cues would come in from this.
Okay, all right, Manisha, thank you very much for that. So that's basically what we are watching out for on commodities. Let's focus on some stocks which are moving, and what else but BSE. Vamakshi is here. Vamakshi, take it away.
Well, absolutely. BSE is reeling under pressure today after a note that has come in from Jefferies. They've gone ahead and downgraded their rating on this counter to underperform, but they've raised their target price to 3,500 per share. They say that the stock has run up over 100% post-release of SEBI's new F&O framework, and this run-up largely came on the back of expectations of market share gains for BSE at the cost of NSE. Now, they're assuming a 25% hit to overall market volumes. BSE's valuation based on this is pegged at a PE of almost 40 times FY26 estimates. This in turn implies, the market share rising from 13% in the second quarter to 30 to 35%, with nearly 40 to 50% share in weekly contracts. In Jeffrey's opinions, this appears to be quite stretched. They also fail to they also say that this fails to capture risks from higher impact on overall market, low spillover gains, as well as further regulations. They say that they see near-term risk reward as unfavorable, and given those factors, they've gone ahead and downgraded their rating to underperform on BSE.
All right, Vamakshi, thank you very much for that. So that is, of course, what's happening on BSE. Stock is under pressure. We'll take a quick break here. My colleague Lata will get chatting with Nidhu Saxena of Bank of Maharashtra, and they talk about the second quarter earnings coming in from the bank. Stay with us. That's coming up.
As a mark of respect, may I request all of you to stand and observe a minute of silence in the honor of Sir Ratan Tata. Om Shanti Shanti Shanti.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com.
Carefully.
Welcome back. We are sticking with results. Bank of Maharashtra has reported practically eye-popping results, actually yet again. And this at a time when banks are fighting for deposits. This bank has reported a marginal rise in their net interest margins to nearly 4%. Accompanied, of course, by impeccable asset quality and good fee income growth, the bank has reported an all-time high return on assets of 1.74%. Joining me now is Mr. Nidhu Saxena, Managing Director, CEO of Bank of Maharashtra. Good morning, Mr. Saxena. Congratulations, great set of numbers. Thank you very much for sparing time for us this morning. Let me first start with the margins. How did you manage to improve margins when the world is fighting with higher cost of funds?
Right. I think rightly the question is quite appropriate. And if we look at the leading brokerages also talking about that, probably the cost of deposits have gone up in the system, and it will impact 2 to 5 basis points on the NIMs, which may see a reduction. But if you look at my profile of business, my cost of deposits have gone up by 37 basis points, but cost of funds have actually gone up only 27 bips. And this is through, we have exercised options of refinance through SIDBI Mudra wherever eligible. We have also seen a good traction in our CASA deposits. So if you see deposit in the overall has grown YOY by 15%, within which CASA has grown by 12%. And above all, to top this is that my yield on advances have actually improved to 9.21 levels. So all these have sustained that I have not been able, I have been able to actually do a NIM which is not lower than what we have done in the last 2 quarters. In fact, 1 bips we have actually improved on a YOY basis. 9 bips improvement in the NIM is there, what we have showcased. Having said that, I'm also mindful that whenever the rate cuts do happen, I have a loan book of 37% which is linked to repo. So that will see an immediate repricing, and the corresponding deposits will reprice with some lag, as we all know about that. So I'm keeping a conservative margin guidance for me of 3.75 to 3.90 in terms of NIM to be maintained. And although I've been performing much above this guidance in the last 3 quarters, I don't see much of challenge. But with this event likely to happen, I want to remain conservative going ahead.
Okay. Well, I don't know, the event-wise, the rate cut, if anything, is getting pushed by the Reserve Bank after we looked at the last inflation number. But that's another discussion altogether. Let me just dwell on what you spoke in terms of cost of deposits and yield on advances. Your cost of deposits, I'm looking at page 17 and 18 of your investor presentation. Cost of deposits has gone up by about 20 basis points, and yield on advances has gone up by 25 basis points. Okay, I'm only looking at advances and deposits. Now, that can be a bit of a worry, isn't it? Yield on advances going up so much. Where are you lending? One hopes it is not risky lending.
Yeah. In fact, we are very, very quality conscious. Whatever loan book that is getting created, first of all, if you look at my RAM corporate share, currently I am 62-38. So I'm in that space where the margins are higher. Not that corporate we are averse to do. We will definitely not like to miss out on any emerging opportunities in any of the sectors or segments going forward or even now. So currently that high RAM share is sustaining this higher NIM. Also, we are conscious, if you look at my exposure in the AAA category, I've actually reduced my exposure in AAA category, where I have gone below A and above. It is not that I have done any lending in a segment which is not an investment grade. We have just moved away from a space where the margins to earn or nothing is left on table for the banks.
I agree.
And we have, in fact, in the segments of MSME, BBB and above, where we are having sole arrangements, we are also planning, and we are actually turnaround time in conveying decisions from the bank has been expedited. And I am able to charge a premium to this through my efficient working, and customers are happy to pay that. So that's how we are seeing that whatever segment we are entering and taking exposures, quality is the first and foremost requirement for me. Beyond that, maybe if we can earn better margins through negotiations, through my better delivery, I'll do that.
Okay. No, I actually was coming to exactly that point, and now I'm looking at page 23 of your investor presentation, where you have given us the rating bond-wise, percentage investments. Your AAA investments have gone down from 8% of your outstandings to, from your 6% of your outstandings to 4% of outstandings, whereas the exposure to AA has gone up from 31 to 34. Exposure to A has gone up from 23 to 24. Exposure to BBB remains steady at 14. But it has gone up year on year from 11 to 14. Are you sure? Because BBB, when you go, there would be a little of a worry. Are you sure that you will be able to maintain this asset quality?
So, as I said, the data that you just shared proves the point and doesn't require me to say anything more. But we are building a loan book and we are very conscious about the quality. And even in the RAM segment, I am actually not underwriting below a certain benchmark. I am even contemplating to improve the benchmark. Today, I am growing at a very fast rate, which is high double digits of 22 plus. And I don't mind shedding off 1 or 2% here there.
Got it.
Still, I'll be growing the fastest in the industry. So, but I'm completely quality conscious. But yes, we want to do a business. We want to be present where something remains to the bank on the table. We should have some earnings also. Top line alone is not sufficient for me.
No, I agree with you. Actually, your slippages are up 2%. So, I mean, there are no doubts on your quality as of now. I was just looking at the bond exposures. Now, if your quality is so steady and good and net NPA is down to 0.2%, why are you providing? Why this 825 crores? And last quarter, it was another 900 crores. Where is the 1700 crores just going into contingencies? Is it floating provisions?
So, see, to maintain that NNPA of 0.2%, today, whatever slippages I encounter, slippages are bound to happen. So, beyond the IRAC norms, I am providing completely 100% for the fresh slippages also, just to maintain that 0.2 to 0.25 range of guidance that I have kept for NNPA. So, it is that kind of provisioning that we are doing. And yes, couple of things, we are having accelerated provisions for ECL, and which time to time I'm actually already started build up on those fronts to provide whenever the guidelines are going to come. I would have done something already in the balance sheet to cover that requirement.
Okay. Actually, how long do you have these tax advantages? I mean, you're paying peanuts as taxes, 53 crore because of your netting off the DTA. How long do you pay such low taxes?
So that advantage is going to be there definitely for this FY. And I would say in the next FY also, 25-26, for the half of the financial year, I will continue to get this advantage of setting off against accumulated losses.
Okay, that's excellent. But I'm running out of time. I have to push this question in. You know, at 1.74, your ROA is comparable to some of the best private sector banks. It's a very good set of numbers. Would you consider rebranding your bank? Now you have got QIP money also. I mean, call it Maha Bank, or I don't know what, just to appeal to the next Gen Z. Are you planning any rebranding? You know, like Ratnakar Bank became RBL. Are you planning something like that?
Right. So, yes, I think not very consciously, we have not gone to board to do, but if you granularly see lot of activities that we have done around our products, around our as basics as the account essentials. Today, I have a rebranded, debit card. I have a rebranded passbook. We have adopted metal card for our premium customers, premium branches where we are supplying those kind of materials. So we can always look at this option. I want to be present to the sectors, the segments where the growth is happening. And definitely would not like to miss on the young segment, which holds a lot of promise for future as well. And to address them, I need to upgrade on my technology. I am working on revamping my entire mobile banking app, and that new lifestyle option will be available to me by end of this December. So a lot of rebranding through that is going to happen. And we did celebrate our 90 years of foundation last month. And we have done a lot of activities around what is the aspiration, because so far we have been, the good part is we have been performing on a very consistent scale for last 13 to 15 quarters. And this quarter particularly has been also exceptionally good, I should say. But I have my own aspirations, because as of now, we've been operating on a smaller scale. So we want to become a bank of greater significance. We have our aspirations to go in the PSB space, say 1 or 2 notches in the next 2 to 3 years. And to do that, a lot of initiatives we are taking around products, processes, use of technology to reach out to clients and so on.
I will want another chat with you out of time today because it's results season. We will want a more relaxed chat on all these issues. You know, Bob went to Bob World and SBI went to Yono. So perhaps some rebranding is on the cards for you as well. All those questions for a later time. Many congratulations for these results. And thank you very much for joining us. We have to wrap up on Bazaar. On that note, Chartbusters come.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
You see, the EV space is where probably, we have a lot of headroom to grow. You would have seen in our RHP that we are going to launch the Creta EV in financial year 25 Q4, which is absolutely basically next quarter itself. Creta is a very strong brand. We believe this could be a very big game changer. And then going forward, 3 more EVs in the mass and premium segments will be introduced. And not only that, we are lining up these EVs along with a very strong localization plan. So as we speak, the battery packs are being localized. We have already announced a collaboration with the local Indian partner for the LFP cell manufacturing. We are looking at power electronics, drivetrain as well. So the entire EV ecosystem is being localized. Regarding royalty, as you know, the royalty rate is 3.5%, and we believe that it is going to be there for a long time. Regarding the effect of royalty on the results, if you can see our financial year 25 quarter 1 result, which is including of the new royalty rate, and you have seen that we have managed to have a EBITDA of 13.5%. So that is one. As far as Hyundai is concerned, we have a big range of SUVs, and January to September period SUV percentage is at 67%, much higher than the industry. In fact, in the month of September we touched 70%. And what is exactly happening is actually our rural markets are also contributing the same to the SUVs. You know, the rural penetration also stands at 67%. I think this is a very clear indication how the aspirations in the rural markets have also caught up.
T Street trades flat after a muted start following a weak handover from Wall Street. Banking stocks relatively outperform.
Telecom stocks rise following Telecom Minister Jyoti Aditya Scindia's comments on supporting tariff hikes and adding that they were extremely low, suggesting more tariff hikes by companies could be likely.
HDFC AMC and HDFC Life gain in trade. HDFC Life is among the top Nifty gainers, reacting to Q2 earnings. Management tells CNBC-TV18 they are revising their APE growth guidance to 18 to 20% from 15% earlier and target VNB growth in the range of 17 to 18%.
Hello and welcome to Chartbusters. I'm Nigel. With me is Vivek. And as we speak, the markets are trading more or less flattish with a bit of a negative tinge. The good news, though, is that we still have a fair number of stocks that are advancing in comparison to the number of stocks that are declining. It's a flattish start, Vivek, but a few of those stocks are doing quite well. I think the HDFC group itself is doing well. You have HDFC Bank that's close to around its 20 DMA, and both the other two twins, that's HDFC Life and HDFC AMC, they're holding strong in today's trading session.
Well, good morning, Nigel. You know, when we started off trade, you actually saw quite a bit of a sharp dip, and it appeared also, you know, looking at the GIFT Nifty that we will open with a very sharp gap down, but there's been quite a bit of a recovery. Yes. Markets holding on, but now, you know, trending near the lowest, trending lower compared to where it was yesterday. Like you mentioned, HDFC Life yesterday reacted very negatively to its results, given the margin compression. But after that, you've actually seen today the stock doing quite well. HDFC Life is the one that we're talking about. But moving on, TD Power Systems is the stock on our radar. The company has recently won gas engine generator orders worth 142 crore rupees, and the company has also issued encouraging commentary for further order wins. Nikhil Kumar, who's the managing director of TD Power System, joins us now to discuss the outlook for the business in detail. Good morning, Nikhil. Thank you so much for joining us. First up, you know, take us through these order wins. What does it do to your order book, and what is the kind of execution timeline you're envisaging for this particular order?
Okay, all right. I'll tell you what, you know, we'll just try to patch that line yet again with Nikhil, and then, you know, we'll get that conversation going. But for the time being, I think we can shift focus to our special segment, Money Control Pro, where we get you a few ideas for profit. And, you know, to help us out today with, you know, a few ideas for profit from Money Control Pro, we have Anand who joins us. Anand, over to you.
So today's stock idea is V-Guard Limited, a strong brand in the electrical and household sector, predominantly in South India. Over the past 4 decades, a company has expanded its product portfolio from a single product, stabilizers, to 22 products today. It is the market leader in stabilizers, holding a 42% market share in the organized segment, and also has a strong presence in water heaters, fans, pumps, housing wire cables. The company is transitioning from an outsourcing model to in-house manufacturing. The contribution of in-house manufacturing has increased from 40% in FY20 to 65% in FY24, having a target to reach 75% in next 12 to 18 months. V-Guard is also pursuing geographic diversification, the non-southern region market has grown significantly, rising from just 5% of total revenue during 2008 to 50% by Q1 FY25. The company aims to increase its market share by 200 basis points annually over the next 4 to 5 years. The acquisition of Sunflame Enterprises has strengthened V-Guard's kitchen appliances portfolio. Although Sunflame has faced several growth challenges due to weak institutional demand. To address this issue, the company is establishing a new sales team to drive sales growth in this segment. The stock is currently trading at 43 times on FY26 earnings, and the recent correction of 15% from its all-time high looks like a promising opportunity for the investors.
Thank you, Anand. Let's now slip into a short break. On the other side, we will be joined by Nikhil Kumar, who's the Managing Director of TD Power Systems, to discuss the company's business outlook at large. Stay tuned.
You see, the EV space is where probably we have a lot of headroom to grow. You would have seen in our RHP that we are going to launch the Creta EV in financial year 25 Q4, which is absolutely basically next quarter itself. Creta is a very strong brand. We believe this could be a very big game changer. And then going forward, 3 more EVs in the mass and premium segments will be introduced. And not only that, we are lining up these EVs along with a very strong localization plan. So as we speak, the battery packs are being localized. We have already announced a collaboration with the local Indian partner for the LFP cell manufacturing. We are looking at power electronics, drivetrain.
Welcome back. You're watching Chartbusters here on CNBC-TV18. Well, we had a bit of a connection issue with TD Power Systems, but like we promised, we have the MD of the company with us, Nikhil Kumar, who's the Managing Director at TD Power Systems, joins us now. Good morning, sir. Thank you so much for joining us. First up, take us through this particular order wins, the quantum, the size, the timeline of execution, and what does it do to your order book?
Yeah, this is a very big order for us from the gas engine segment. We have 2 major international gas engine OEMs. There is a very large increase overall in the gas engine business worldwide. We are well connected with this business in the sense that we have two large OEMs who are two leading players in the world in this business. The end use is, grid stabilization units, where, for example, if you have a country where there's a lot of renewable power generation, then suddenly, let's say, wind stops blowing or the sun stops shining, you need hundreds of megawatts to come onto the grid instantly. Then these gas engines are used to stabilize the grid. So there's a big increasing requirement for this kind of application. Then data centers, artificial intelligence, server farms, they need backup power, emergency power. That's also a huge sector, which is again booming. And then we also have the regular business of baseload power. So we are seeing a significant, a huge uptick of business in this particular segment, not just gas engines, but also gas turbines. So overall, TDPS is in a very, very good position in the international market to capitalize on this opportunity.
Okay, all right. Hi, Nikhil. Good to speak to you. It's been a very, very long while. And it appears, the business is looking up. Fill us in with a couple of details then. What is the current order book? What has been the order inflow till now? And what are you factoring in for this year, FY25?
Yeah, the overall order book is very strong. So, I don't want to talk about the exact numbers. I can't talk more than what was declared already for Q1 because we are in this, until I declare the results for Q2, I need to be silent about the actual numbers. But all I can say is that, we are going to exceed the guidance. And we are in a situation where right now the factory is absolutely full. Orders for this year are absolutely full. And we had given a guidance earlier for 1,200 crores for the company for the whole year. Looking at the current situation, we're going to exceed that guidance. So we are putting up a third plant because we're just running out of capacity. And until the third plant is ready, which is somewhere middle of next year, we have to find innovative ways to push more products out of our current factories. The situation is extremely strong in terms of order book, order inflows from international markets.
Nikhil, so you're most likely going to go ahead and exceed the order inflow guidance of 1,200 crores that you're given. Would you also be exceeding the guidance for the top line that you had given earlier? And another question
is... I talked about the top line guidance. Actually, we're going to exceed the guidance for top line. We're going to exceed the guidance for bottom line. We're going to exceed the guidance for order inflow. So we are in a situation where, we have been working for the past decade to establish ourselves in international markets. And now we are well positioned to really capitalize on this big energy transition which is taking place all over the world. And this effort of the past 10 years is now paying off for the company.
There was a period where order inflow was not coming in, and now you're talking about your factory being fully full, and that's why you're setting up another unit as well. So it seems that the cycle has turned big time for you all. Give us a few more details. What's likely to be the split between export as well as domestic business? I believe that the export business is margin accretive. So clarify on that as well.
Yeah, the export is overwhelmingly export. So, if we look at the order book for Q1, it was something like 70+% export. I think, although I can't declare the exact numbers, it's going to be in the similar range for Q2, even a little bit more. And looking at the upcoming order inflows, this trend is going to continue. The growth for us in the export markets, penetration in export markets is far, far greater than what we're seeing domestically. Of course, for us, because we have a larger product range and we have more markets that we can address for the export markets. And of course, the market, is much larger internationally compared to what we have domestically. The domestic market is also good, but compared to what the opportunities are for the company internationally, the growth for the company is much more exciting from the international perspective compared to the domestic perspective.
Thank you so much, Nikhil, for joining us. We'll get you once again after Q2 where you can talk exact numbers. Well, moving on, MasterCard has opened its largest global facility in India, in Pune, placing an even bigger bet on India to power its global solutions. Shireen Ban caught up with Michael Maybach, the global CEO of MasterCard, to learn more about the company's plans in India and how the new facility will help MasterCard achieve its global ambitions. Listen in to an excerpt of that conversation.
In all of your visits here over the last 20 years, what do you believe has been the most significant change?
So when I look at India First of all, in the broader global ecosystem, I sense this sense of optimism about the India opportunity. So MasterCard isn't a standout from that perspective. We're deeply involved in the market, so we might have a deeper view than others. And from that perspective, what I've seen, particularly over the last 4 or 5 years, when previously at product in MasterCard and now at the CEO role, is this tremendous growth of the digital economy in India. So as India leverages technology to pull more people into a more inclusive digital economy, that's a real standout. That obviously is a tide that lifts everybody's boats, including MasterCard's, and we're happy to be on that journey. So I like that. Yesterday we launched a very big facility here in India. One of our 7 tech hubs has been launched in Pune. It's about 6,000 people there in a state-of-the-art facility. And the sentiment of our employees, first of all, there's excitement.
Yeah.
They see the commitment to India with this investment, but there's also this excitement and this sense of opportunity, and we will find a solution, we'll find an opportunity. The level of ingenuity here is just infectious. So every time I come here, that is one thing to look forward to. There will be one new idea that I will find out about, which I did.
A new idea yesterday?
Yeah, well, actually, we launched a big this new idea here only when was it? The Global FinTech Festival,
right.
A few weeks back here, which was passkeys, which is basically biometric authentication for online commerce. Might not sound very exciting to most people listening to this. I find it personally very exciting because it makes something very complex very easy and very safe. You're online and you know it will just work. And you just can rely on that. I thought that is a very exciting idea, and it was first launched in India.
Well, I will come to the launches in India and what India is likely to do for MasterCard in terms of powering your global solutions. But coming back to Pune, as well as your aspiration for India, you talked about the 7 global tech hubs that you have. I believe this is going to be your largest facility for MasterCard globally. As you were allocating resources, what made you want to double down on India?
Right. So we have been in India for 40 years as a company. We've been, bringing our payment solutions here. We set up our initial facility in Pune 10 years ago. So we have 10 years of experience with our ability to attract the best talent in the country, to attract talent that allows us to co-innovate out of India, catering to some of these special situation, where everything in India has to work at scale. Now, this makes it a very unique market. We're a business that's all about scale. We're in 200 plus countries, so learning about scale and having employees that, have that mindset sets India apart versus some of our other tech hubs where we do other things really well. We've learned over 10 years on how these tech hubs can work with each other, and it is a global network of innovating tech hubs, follow the sun model, spanning the globe. And we said, okay, we're going to double down here because we have the talent, we have the scale aspect, and we have this aspect of, coming back to the culture point that I made earlier, the ingenuity is just really strong here. So puts us in a position to do that, and we feel very welcome because for 40 years now, there's a strong partnership with the government here, with the fintech sector. So for all of those reasons, I can go on. But we made a decision, and it's a commitment to India, but it's also a commitment to innovation and what we do around the globe.
Can you quantify the commitment in terms of the incremental investments that this will entail in this new facility, this expansion that you have announced, as well as what we could expect over the next 5 years from MasterCard?
So over the last 5 years, we invested $1 billion here. This project's been, we opened it yesterday, but it's been a 2.5-year kind of construction project, absolutely state-of-the-art of employee experience. So we expect the staff number to grow in India, and it's been laid out for that. So many more opportunities that will be investing in.
Well, speaking of opportunities, and you talked about collaborating with the thriving fintech ecosystem in India. Take me through what excites you about what's happening there. Also, what worries you? Because, the pace of change is significant and the pace of innovation is pretty remarkable as well. So both from an opportunity point of view, but also a threat point of view, how do you look at that?
Right. So we started off talking about us being bullish, me personally being bullish on the India opportunity. I had a first-hand experience to see that it's not just us. At the Leadership Summit of the U.S.-India Strategic Partnership Forum, I'm on the board there. I'm also on the board of the U.S.-India CEO Forum. So a lot of perspective.
So you've got a ringside view on what CEOs are saying.
A lot of perspective of what others are thinking. And when it comes to the startup community, India has a super strong startup ecosystem. It really fueled that. FinTech in particular is strong. So at the Leadership Summit, we had a few unicorns on stage, and they were talking about their growth story from a government support perspective, from a regulatory perspective, from a funding perspective. So here's a government that really is able to mobilize funding. So from that perspective, that's an important sector for us to engage in. What do? We are a FinTech, a very large one, but we are a FinTech. And we're engaging with other FinTechs, helping them with our payment solutions. So giving you an example, take the world of credit-based solutions. So in India, there's a tremendous opportunity to further democratize the access to credit. There's a lot of businesses that innovate around that. In the end, money has to flow. Payment solutions are needed for that. Data is needed for that to assess credit and make that easier for banks. So we provide those solutions. There's a whole opportunity in the world of commercial payments. There's a lot of fintechs that focus on helping businesses digitize their processes, enable reconciliation of data, engage their customers in a better way. Those are all solutions that we provide for years on consumer engagement, on customer engagement, on data management, and all of this, everyone in the sector needs one thing. In an ever more digitizing world where the digital economy becomes like the economy, cybersecurity rises to the top.
Well, and you can catch the entire conversation with the global CEO of MasterCard tonight at 7:30 p.m. only on CNBC-TV18.
Canada has provided credible, irrefutable evidence of ties between agents of the government of India and a murder of a Canadian citizen on Canadian soil. Now it is time for India to live up to what it said it would do and look into those allegations.
The Parsi legacy is a testament to how a small community has made a massive impact on India's industrial, scientific and cultural development despite representing just a tiny fraction of the population. They reportedly make just 0.004% of India's population, but their contribution has been immeasurable. This is the story of the Parsi. From Jamshedji Tata, who laid the foundation of India's industrial revolution, to Dr. Homi Bhabha, the father of India's nuclear program. The Parsi influence is like a secret ingredient that's added flavor to India's growth recipe.
The Tata Group started as a humble textile business in the 19th century and has now grown into one of India's largest business giant, with its listed entities' combined market capitalization at rupees 30 lakh crores. Jahangir Tata took to the skies with Air India, and Ratan Tata kept soaring, expanding globally and championing philanthropy. In 2023, Ratan Tata's foundation pledged millions for healthcare and education, proving the Parsi spirit of giving. And let's not forget Adair Godrej, who unlocked a whole new world by founding the Godrej Group, introducing India's first locks and safes. Today, it's a global sensation known for its eco-friendly products and commitment to social responsibility, perfectly embodying Parsi values of philanthropy.
Welcome back to Chartbusters. Well, a few stocks on the radar, some of them reacting quite sharply to the kind of earnings that they've delivered. First on our list is KEI Industries. The stock, after seeing a margin miss, has seen accelerated sell-off today, down over 8% in the session. The second stock on the radar that's seeing some follow-up buying is actually HDFC AMC. A good set of numbers from that particular company. The stock higher by almost 5%. HDFC AMC is the one that we're talking about. And after HDFC AMC, there appears to be a rub-off effect, a positive rub-off effect on other AMC companies. For instance, if you look at the intraday chart of Aditya Birla Sun Life AMC, ABSA, that particular stock, it's up almost 9% in the session today. So significant up move, and a valuation catch-up is what you could attribute to this particular run-up that you're seeing as far as Aditya Birla AMC is concerned. But with that, it's a wrap on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.
Dreams. Palanji Mystery turned construction into an art form with Shapurji Palanji. From iconic skyscrapers to vibrant residential complexes, this powerhouse is shaping skylines worldwide. Cyrus Poonawalla, the mastermind behind the Serum Institute of India, is a health superhero. Producing over 1.5 billion vaccine doses a year, he took center stage during the COVID-19 pandemic by churning out the AstraZeneca vaccine. That's a Parsi powerhouse, making the world a healthier place. Also, did you know Freddie Mercury, the legendary frontman of Queen, attended boarding school in Panchgani, Maharashtra? With his incredible voice and flamboyant stage presence, he proudly celebrated his Parsi roots while giving us timeless hits. From innovation to philanthropy to music, Parsis have made their mark everywhere. Despite their shrinking numbers, now less than 60,000, they continue to shine bright and inspire.
Now I come to the schedule for Maharashtra. This will be in single phase. The notifications, date of notifications are in front of you. 22nd October would be date of notification. Last date of making nomination would be 29th October. Scrutiny on 30th October. And last date for withdrawal 4th, and date of poll in Maharashtra would be 20th 11. Counting would be on 23rd 11 24, and you will notice that date of poll is Wednesday. This is deliberately, which lot of scheduling, whatever goes into scheduling, we have tried that it is midday so that issue of urban apathy is handled. झारखंड एक बहुत ही समृद्ध स्टेट है, बहुत ही उसकी विरासत है, और वहां पर हम फिर से अपील करेंगे कि सब वोटर्स अधिक से अधिक मात्रा में वोट दें. Schedule would be like this. Jharkhand would be in 2 phases. The date of poll First phase would be on, date of poll would be on 13th November. And the second phase would be along with Maharashtra on 20th November. So the date of issue of notification for Jharkhand phase 1 would be 18th and for phase 2 would be 22nd along with Maharashtra. Nominations for phase 1 would be till 25th of October.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Bhutra, and it's another quiet session for markets. At least the morning has been pretty much unchanged in the benchmark indices. Autos continue to struggle in trade. In fact, today as well, the Nifty Auto Index is down close to about 1.5%. IT Pharma too a bit on the back foot. On the way up, while the Nifty Bank is absolutely flat, you are seeing Nifty, the PSU Bank showing a little bit of a green. Metals are also higher in trade. But again, right, we're just talking about moves of about, 0.5, 1% here and there.
Oh, yes. And, we were expecting, or at least the GIFT Nifty suggested a bigger cut that we could have seen in the markets today, but that hasn't happened. It's a 21-point cut, but yes, some of the sectoral movers which are making way today, as Reema pointed out, auto index continues to sulk. And remember, today it's Bajaj Auto's numbers as well. That was the top loser yesterday. And today, again, it is in focus. But other than that, we do have earnings reactions coming in. Today, the stock is in the green. But other than that, HDFC Life, that's the top Nifty gainer. We have HDFC Bank, which is lending some support to Bank Nifty. So Bank Nifty is the only index from the benchmarks which is in the green right now. Bank Nifty up around 23 points. The other gainers include the likes of Hindalco, there's Dr. Reddy's. SBI Life too is gaining in trade as we speak after a decent set of numbers coming in from HDFC Life. A lot of moving parts. We have the update coming in Hyundai IPO as well. The total subscription has been 0.22 times. Yesterday at around this time, it was around 0.1 times. Hasn't been that big a subscription so far, but the size also is very big.
Right?
Exactly.
And the size is so much. It's hard to, have those lofty...
Yes, and we are just used to those numbers now. I think for all the other smaller ones, you've seen subscriptions for more than 50, 60 times. And I think this number in front of that looks small, but of course, it's a huge IPO.
There's also another one coming up, Bari Energies, that opens up next week. And that's also looking to raise a sizable amount, not compared to Hyundai, but it's looking to raise about 4,300 crore rupees with a valuation of close to about 43,000 crore. We'll be talking more about it. But let's talk about Rallis. Good set of Q2 numbers.
And yes, and it has come in after a long time. This is one company which has been seeing declines for almost 6-7 quarters. And now we have seen an improvement that has come by. And that's the reason that why the street is so is cheering these numbers that we are seeing. So revenues, they increased by 11% on a YY basis. We saw an EBITDA growth of 24% to come in at 166 crore rupees. Profits were also up for the company to come in at 98 crore rupees. Both the segments have done well. If we talk about the crop care segment, the company says that's where the EBITDA was up 5% versus Q2 due to volume growth and better cost management. So the volume growth this time around in the domestic crop care business has come in at 17%, but there was a drop in pricing of around 11%. So the agrochemical industry continues to see pricing pressures. Export volumes were flat, but again, there was a decline in pricing, and that's why the overall export revenues declined by around 9% this time around. If we talk about their seeds business, that is where a strong growth has come by. 48% on a YY basis because of better Kharif liquidation. So this season has turned out very positive for the company. EBITDA also increased on the account of higher sales. There's higher operating leverage also. So both the segments have done really well. The seeds business especially, which has been under pressure. And that's why this stock is buzzing in trade. A 14% rally, and that is coming after a long time for this one.
But, it looks like the street was expecting, or, they believe that things have bottomed out, because this year the stock has given a 47% return.
Yeah, but that despite the fact that last few quarters haven't been
coming out with muted numbers, I think the narrative that things are going to get better, the worst perhaps is behind, has been playing out for a while now, because the stock has done pretty well. But let's talk about BSE, because that's clearly one of the stocks of the day, slipping after a Jefferies downgrade. Vamakshi joins in with the details on this. Vamakshi.
Well, yes, Reema, BSE under pressure today. Jefferies has gone ahead and downgraded their rating on this counter to underperform. However, they've gone ahead and raised their target price to 3,500 rupees per share. They say that the stock has seen a run-up of over 100% post the release of SEBI's new F&O framework. This run-up that was seen was mainly on the expectation of market share gains for BSE at the cost of NSE. Now, they're assuming a 25% hit to the overall market volumes, and based on that, BSE's valuation is at a price to earnings ratio of 40 times FY26 estimates. This in turn implies that the market share rising from 13% in the second quarter to 30 to 35% with a 40 to 50% share in the weekly contracts. Jefferies highlights that this seems quite stretched, but they also highlight that this fails to capture risks from higher impact on overall market, lower spillover gains as well as further regulations. Near-term risk reward in their opinion seems very unfavorable, and given those factors, they've gone ahead and downgraded their rating on BSE. Resultantly, the stock is declining in the trading session today.
Okay, all right. Thank you so much for joining us with all those details, Vamakshi. The other stock that I'm tracking today is AB Real Estate, because Nomura has initiated coverage on the stock with a buy rating and the target price of 3,700 rupees. They think there are three reasons why they like the stock. First is the long-term visibility because of development potential of 40-acre prime land that they have in Worli, and this could drive pre-sales of around 400 billion rupees. This is with 40% EBITDA margins over the lifetime of the commencement of projects as well. There's large-scale quality business development in Mumbai, NCR, Pune region, Bangalore as well that the company has. And as a part of the Aditya Birla Group, they talk about better management practices here, and that is something that could lead to them becoming a major player in the real estate market as well. They are pegging a gross development value of around 900 billion rupees going forward. The operating cash flow should be positive from FY25 in the real estate segment. It should be free cash flow positive from FY27, FY28 as well. Most of the projects are turning free cash positive from the start of the commencement as well. So that is something that they like, that the balance sheet is not stretched because of this gross development value that has come by as well. Between FY25 and FY27, they believe that business development will be largely financed by debt, and they expect the net debt to equity to come in at 1.1 times, but that would be a comfortable level considering that they are going through a big phase of business development. So they are quite positive, and the stock on the back of that is up around 7%. It opened higher, but still 7% is not a small pop that we're seeing on the stock.
Okay, and let's talk about HDFC Life. Today, it's the top Nifty gainer with the 2% rally. But remember, yesterday, HDFC Life was under pressure. In fact, one of the big Nifty losers after they came out with their Q2 numbers. Q2 numbers came out during market hours, and the key takeaway was that there was growth, but it came in at the expense of margins. So margins contracted for the company. The street didn't like it. The stock fell. But yesterday, there was an earnings call, which happened post-market hours, where the company has revised the growth outlook higher. So that's gotten the street excited. Now, we spoke to Vibha Padalkar, MD and CEO of the company. Listen in.
In the first half of the year, that growth on the upper end would be around 15%. We are revising it to say growth for the full year FY25 should be in the range of 18 to 20%. The reason why this gives me the confidence level is the first half of the year on a WRP basis, we grew very well at about like you said, 28%. APE basis, we grew by 31%. Whichever way you look at it, very good levels of growth. Beat both the industry, overall industry and the private sector very, very comfortably. Market share expansion of 60 basis points. We achieved a watermark of 11% in terms of overall market share of the sector. 200 basis points differential is explained as follows. 100 basis points was simply because of product mix and largely because of unit linked, what we have been articulating. For example, in H1 last year, unit link was about 28%, and that increased quite significantly in H1 this year to about 36%. So largely due to unit linked and a little bit due to annuity.
Okay, get into a break. We'll come back and talk more earnings. The management of Nugent Software, again, came out with numbers yesterday. The stock was down 5%. Today, it's a bit flat. We'll talk with Virinder Jeet, the CEO of the company, on the other side.
to 29th. This slide we will share with everyone. And date of poll would be 13th November and 20th November, both Wednesdays. And date of counting would be 23rd 11, that is Saturday. With this, we end our presentation with the request that through you, that all the voters of Jharkhand and Maharashtra कृपया बाहर आइए, कृपया वोट करिए। लोकतंत्र के उत्सव में आपकी भागीदारी कि हम बहुत ही रिक्वेस्ट करते हैं, अपील करते हैं आपसे। थैंक यू वेरी मच।
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
Baba Siddiqui actually had police protection. It was non-categorized police protection, but still he had 2 + 1 constables with him. That means that during the day, 2 constables were deployed for his protection, and in the night, 1 constable. This makes this matter even worse. Remember, Baba Siddiqui, who was a loyal Congress political leader, in February, he shifted sides and he joined NCP Ajit Pawar. This means that he was a political leader of a party which is in the government, is a part of ruling alliance. And despite police security, he was shot dead on Dussehra night, a night when police security, police deployment is anyway at its peak in Mumbai. The clarity on motive is yet to come, but what has been established by Mumbai police that this is a case of contract killing. These 3 accused, one Gurmail Singh, hailed from Haryana. He's a 23-year-old person who actually has a record, a criminal background. He has extortion and murder cases against him, and it is believed that when he was in the jail, at that time he established a contact with some members of the notorious Lawrence Vishnoi gang. There are 2 more other shooters, and both of them are from UP. One is Shiv Kumar Gautam and one is Dharmraj Kashyap. Now, Dharmraj Kashyap was arrested by the police along with Gurmail Singh, but Shiv Kumar Gautam managed to flee away. He's still absconding. It was yesterday, on Sunday, a Facebook post went viral. The Facebook post was uploaded by a person called Shubham Lonkar. In that person, now this person is allegedly a member of Lawrence.
Welcome back. You're still tuned into Trading Hour. It's time to talk about the commodity space. Manisha Gupta is joining in now, and today we are focusing on crude. A lot of movement here, Manisha.
Well, yes, Sonal, and some sanity really seems to be returning back into this counter right now. 0.5% of gains in the Asian markets, and this is after 4% decline on Tuesday, 2% of decline on Monday as well. But 74 or thereabouts seems to be holding right now, and we are back by $1 in sense of the lows that the market hit yesterday. Well, this is because of some opportunity buying, some technical buying triggers as well that you have seen some buying come in. But apart from that, with the kind of cues that we are working with, it still seems under pressure. The high for this year for crude prices, by the way, is 91. So from there, we're trading at around 75, even with the bit of a gains that we are seeing right now. Well, to begin with, it is about weak global demand growth. OPEC and IEA both have suggested or revised their global demand outlook lower for this year and for 2025 as well. The second is that Israel has continued to reiterate that even as it will retaliate to Iran, but nuclear and oil facilities is not something that they're looking to strike on. The third thing really is about the dollar index itself, which has seen a bit of a decline coming into the markets. And then it also is about the Middle East. Markets are quite divided on where this quarter could really end by. If the tensions continue to ease, then you could be looking at crude oil prices perhaps breaking below 70. But if there is an impact on the crude oil facilities itself, then there are targets being put out from Bernstein, Bank of America, Citi even, that prices could go to 90, 95. There are 3-digit conversations as well. So that's the kind of range that the global industry is working with for this quarter.
Thank you very much for that. Let's get to a corporate conversation then. It's Nugent Software, which reported a very steady set of Q2 numbers. The company's top-line growth came in at 23% on a year-on-year basis. On a year-on-year basis, we saw the margins also expand to 23%. To talk more about the quarter gone by and the second half of the year, Virender Jeet, CEO of Nugent Software Technology, now joins in. Thank you very much, sir, for joining in. This is Reema here. Now, in the first half of the year, you've clocked in a 24% revenue growth. H2 is typically much stronger than H1. So how is H2 likely to shape up for you? What are the key trends?
Good morning, Reema, and thank you for having me on your show. You're right. I think we have consistently grown on Y about 20% for now, almost last 10 quarters, and also with expanding margins. As you understand, the business is a product business, so margins do expand with the higher growth numbers. Our H2 revenues are generally stronger than H1 in terms of total value, which also puts more pressure on growth for H2 because the Q1 and Q2 being on the smaller base, the growth rates could be higher. Having said that, we do expect to maintain the same growth momentum in H2 also. There's no reason. There's a strong funnel. Our traditional markets are doing very well, especially on the financial services, both in India, Middle East, and APAC. We continue to do well, and we don't see any challenge that we should not be able to sustain this growth.
So, Mr. Jeet, can we say that FY25 revenue growth would be 25 to 30%, anywhere between there?
No, I think we can't go there right now because as I rightly said, we always try to project that we can sit somewhere between 20 to 25% of growth, and that's what we have been doing historically, and we base our assumption on that historical numbers. As I said, Q3, Q4 are larger quarters for us, and we expect to meet the goals of those on larger license deals. So there's a variability on that in terms of any kind of a change in that sometimes shifts the numbers. So I would still hope that we continue the current growth momentum for the whole year.
So guidance stays at 20 to 25% for the full year?
Yes.
Even though the funnel is very strong. Can you quantify how much better is the funnel today versus say 6 months ago?
So I think what we have pivoted to slightly larger deals in all our geos. So in fact, the size of the funnel, number of opportunities may not be same, but we have on the value of the funnel, it has gone up by 30-35%. So we do expect that to translate in subsequent quarters into revenue for us.
Okay. In your press release also, you said that while banking and financial services continue to be your core verticals, you're seeing increasing traction in insurance and government segment in the quarter. Can you give us more details on this? How much contribution came in from here? Will this pie improve going forward? And will margins also improve if this pie becomes bigger? How does it differ from the other segments?
So if you look at the numbers, we predominantly are based on financial services where banking almost drives around 70% of the revenue. So sometime back, we really doubled down and tried to get our revenue share on both insurance and government. What we have done is we have invested in those. We have invested in both territories, building teams, refining products for that vertical. So the early green shoots of that have started happening. I think in this quarter, we had a significant deal on insurance at multiple in Middle East as well as in India. We also had a significant deal on government side out there. So it's showing returns. But for it to become substantial, I think we are expecting that both what you call government as well as insurance are able to almost contribute to 30-40% of our overall revenue next 2 to 3 years. For that, they have to become much larger than the current numbers. But I do expect that this momentum to continue. While as the margin has no correlation with that, because margin is a function of what we sell, and we sell in both cases, we have a license-based business. So every deal has a healthy gross margin, and we should continue doing that.
So you want insurance and government to contribute 30 to 40% of your revenues in the next 2 to 3 years, right?
Yes. Yeah.
What is it in terms of revenue contribution today, and what was the growth seen in insurance and government in the quarter gone by?
So the bases are small. Right now, both combined is going to be more like 20% of our revenue, approximately that number. And I think this quarter, since there have been some deals in both the areas, the growth rates of that will be substantial. They will be about 30-40% in these areas. But that's on a smaller base, so I think the percentage does not matter. But we do expect that we keep on building this, and through this, we also accelerate the company's growth.
Okay. While the growth has been broad-based, APAC in particular has done really well for you. Over 50% growth for 2 quarters in a row. Is this something which is sustainable? What's working there for you? And even in the US markets, what's the outlook? Because you have been focusing more on mature markets like US and Europe.
Yeah, you're right. So APAC, we started from a very low base last year. The last year, the deal closures in Q1 and Q2 was poor. So as a result, the H1 is looking much stronger in numbers. While I don't think a 50% number is what we are targeting, but I think since the base out there is small, it can grow at a faster speed. You're absolutely right. Our focus on mature markets is yet to really show results. What's happening, the traditional accounts which we have out there are showing business, and the current growth is more on what you call the opportunities in existing accounts. But and our new logo acquisitions has not really kicked in. Having said that, I think in next 2 to 3 quarters, we should be able to see both momentum on the financial services, that is banking, insurance, and we also do as a segment as health insurance out there. All three should start kicking in and contributing to that revenue.
Mr. Jeet, we have more questions, but out of time. It's a busy earnings season. Thank you very much for joining in and wish you all the very best. Get into a break. We'll come back and discuss market technicals. Mitesh Thakkar joins in on the other side.
And in that social media post, he hinted that it was Lawrence Vishnoi gang which was responsible for this shootout, and Baba Siddiqui was attacked, was killed due to his proximity to Bollywood star Salman Khan. And it's known fact that Salman Khan is on Lawrence Vishnoi gang's radar for a very long time now. And the reason cited by the Vishnoi gang is the Black Bug case. Now, after that, Mumbai police said that they are looking into this post. They are trying to verify its authenticity and the whole context. Later in the night, that was yesterday night, a person called Praveen Lonkar was arrested by Mumbai police. Now, this person, Praveen Lonkar, is said to be Shubham Lonkar, the person who uploaded that Facebook post, his real brother. Now, Mumbai police said that both the Lonkar brothers, they were the ones who, orchestrated this whole conspiracy and the killing. Now there are 3 more accused who are wanted by Mumbai police. There is another angle which is panning out, that is a disputed SRA slum rehabilitation project. Now that was son Dhyaneshwar SRA project where Baba Siddiqui, recently his son Jishan Siddiqui staged a protest when the contracts were shifted from one set of builders to another set of builders. So this dispute could also be one of the reasons why Baba Siddiqui's murder was ordered. But there are larger questions and Mumbai police are looking for the answers whether or not Lawrence Vishnoi gang is actually responsible for this, or is it just a distraction tactic to divert the attention from the real motive.
Carefully.
Welcome back. There is a dip in the markets. We were largely flat. Now we're down close to about 80 odd points, and some, levels are being coming off from IT names. So pull up something like an HCL Tech that's dipped into the red. TCS is a cut of close to about 0.7%. So some profit booking is visible there. Tata Motors, Trent, Nestle are some of the other stocks where, we've come off from the levels that we had about 10 minutes ago. All in all, not too much. It's just down close to about 80 odd points, but there is red on the screen. Mitesh is now with us for a quick tech check. Mitesh, your thoughts on the day so far and your top trading ideas?
Yeah. So, morning. See, I think the market is still remain under pressure, and I've been, calling for some kind of contraction. I think that is what is going on. Today is basically on Monday we had a move, and then Tuesday and today I think is some kind of retracement. So it's still a market which is, contracting and getting into a range. In that sense, I think, we're not hitting the index. And on the stock side, I have a buy on Grasim. That's giving a good breakout on the hourly charts. So that could be some follow through over here. Grasim, I would recommend buying with a stop at 27.40 for targets of 28.30. And Eicher Motors, that's a negative or a sell side kind of call. Keep a stop above 4,700, look for targets of 45.75.
All right. Thank you so much, Mitesh, for joining in as always and taking us through your technical picks. Time for a short break now. After technicals, we'll now discuss market fundamentals with Jyoti Vardhan Jaipuria, founder and MD of Valentis Advisors. Stay tuned.
We're now in the bunker that we found underneath a Lebanese house in a Shia village only a couple of kilometers from our border. This bunker was ready for Radwan forces, for a battalion of Radwan forces to enter into this bunker and do a raid into Israel and do a larger scale of massacre than the 7th of October. They were planned with the motorcycles here to go to Kiryat Shmona, to Iftach, to villages and positions inside Israel and conduct a massacre. And all our enemies should know, whether they are close or far away in Iran, they should know that we are determined. We are determined to supply security and safety to our citizens. We need to impose a 1701, a fully imposed 1701 this area, so Hezbollah can never be next to our border with such infrastructures that can do a Conquer Galilee plan like he planned. Hassan Nasrallah, this ruthless terrorist that we eliminated, that is responsible for the deaths of many people, not just Israelis, Germans, Americans, French and others. The world is a better place without Hezbollah. The world is a better place without Nasrallah.
CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership.
Welcome back. You're still tuned into Trading Hour. It's time to talk about market fundamentals now. Jyoti Vardhan Jaipuria, founder and MD of Valentis Advisors, is joining us now. Mr. Jaipuria, good morning. Thank you so much for joining in. Well, you know, you're expecting lower returns to come by and lower earnings growth is expected in FY25 as well. Can you give us a sense of what is the Nifty earnings growth that you're expecting? And Q2, how have you looked at it so far? I know not a lot of results have come out, but do you think this trend could continue going forward as well?
Yeah, so certainly, I think over the next 2 years, we'll probably end up with a very low double-digit sort of return, maybe 10 to 12% over the next 2 years. In fact, of them, this year is probably going to be a high single-digit return rather than a double-digit return because of the base impact. This quarter earnings, like if we look at a lot of the analyst forecasts which have come, everybody looking at between 5 to 7% sort of growth. So it's going to be a quarter which will be muted in terms of earnings growth. So far, of course, we've seen a very small sprinkling of results, and they've been, like I would say, on the whole, more or less in line with expectation. But, it's the very, very start of the season. So far, there are very few results which have really come out.
So you would be fully invested, Jyoti, because as you've pointed out in your recent note, that we are headed for the 9th consecutive year that the Nifty is given annual returns. Has that even happened before in the past? Shouldn't the law of averages at some point kick in and we see a bit of a correction?
Yeah, Rima, so this has never happened. The 9th year or the 8th year is like a record for us, whether we take the Nifty or we take the Sensex also, which has got a longer history. So it's been really, I would say, a very, very smooth market where, you made some returns every year. So then for people, the risk of equity goes away. Because if you don't really see a meaningful negative return, you are like, okay, if I make 10% return every year, I make 5%, then it doesn't matter. So at some point, the law of averages will catch up. I guess, even valuations the way they are, at some point, they're signaling that we'll probably have a weakish year for equities. But, frankly, if you think about it, most of us thought this year is the year where we'll not make too much returns in the market. When we started the year, we thought it could be a year of flattish to very low returns. It has turned out to be much, much better than what we thought. So I think partly it's because the economy is doing well, partly because the global markets are doing well. So keep our fingers crossed that bull times continue.
Okay, so tell us which are some of the sectors where you are looking for further correction, where you think there could be growth but valuations are stretched, or something that you think still is reasonable and you can put in some money there?
Sonal, there are lots of things where earnings growth is there, but the valuation are looking stretched. So one thing which we've been negative on, which a lot of other people like, has been the auto segment, where I think especially on the passenger car vehicle, we think growth will be very slow over the next few months, and you've seen a very good rally in the share price there. Valuations are not cheap. So that's one thing which may struggle to give returns to the investors. The other is a sector which we like a lot, which is the capital goods sector. We've done very well with it because we had picked it up very early in the cycle. There again, valuations are starting to look stressed in some pockets. In fact, I think they're extreme. Like I would say, things like defense and railways, which are the market favorites, there the valuations are very, very extreme, even though the long-term prospects are good. But even within capital goods, we've trimmed some of our position, more because we think that at those valuations, the risk return is not that favorable. And so we've continued to be a little negative on it. What we've been nibbling on is actually the banks. So this is like a sector which now everybody loves to hate and nobody really owns it. Valuations, they are looking very cheap. So we've done an exercise where we looked at, let's say a 10-year PE average and the current P's, or 10-year price to book and current price to book. And there are only two sectors which are actually trading at lower than 10-year averages. One is the banks and the second is the media. So these are the only two sectors trading below. So banks is some space where we've been nibbling a bit. There are going to be NIM pressures over the next 2 quarters, and especially once interest rate cuts start, you'll probably see the first impact of that will be negative on NIMs, and only after like 3-4 quarters NIMs start to increase. So there are negatives, but the valuations are so cheap that at some point, we think we'll make decent money on the banks.
So it's time to accumulate banks through this period of perhaps a little bit of bad news when the stock's correct due to the NIM compression. What about media? Are you buying media because valuations there are also attractive?
So, we actually have a media stock which we bought in the last 3 months. So that's like the first time we bought media in the last 4-5 years. So, in media, like I have a mixed view. The stock we bought is very, very cheap. It's like very, very cash surplus. At the same time, the business is not very promising to me in the sense, there are a lot of avenues opening up. So right from OTT to, the cable TV business is going down because a lot of the youngsters are preferring OTT. So the growth element is probably not very strong, but just the cash flows which we are getting and the free cash flow we have taken a stake in a media company, basically.
All right. Okay. Thank you so much for joining in today with your take on what the markets would look like going forward, especially on the earnings and the valuation front, because it's a lot happening that we are tracking in the markets as well. With that, we'll slip into a short break. But as we do that, CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers, industry leaders, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. Don't miss your exclusive opportunity to be a part of the conversation that is shaping the future of business and innovation. Reserve your spot today.
Rivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Well, let's get to the earnings then. The big ones today, you've got Bajaj Auto in the auto pack in the large cap space. And then in IT, we've got LTTS and Emphasis. So we'll discuss all three of them. Let's kickstart with Bajaj Auto. Sudarshan joins in with the expectation. Sudarshan.
So Bajaj Auto will be reporting its Q2 FY25 earnings today post-market hours. First, talk about the stock performance in 2024. Stock has risen 70%, and in the last 2 years, stock has moved higher by more than 200%. Now, focusing on earnings, we are expecting strong earnings growth both sequentially and year-on-year, and revenue is likely to be aided by volume growth and better realization. Volumes in Q2 FY25 have increased 15% year-on-year and 10% sequentially. For margin, we might see an expansion of better net pricing, as some of the margin tailwinds are operating leverage and PLI benefits, and margin headwinds are higher aluminium price and higher two-wheeler electric vehicle sales. Watch out for the demand outlook for CNG and e-mobility sales. Now on to the main numbers. We are expecting an increase of 21% net profit. It might come at 2,228 crore. Revenue is seen rising 23% to 13,270 crore. EBITDA may increase by 27% to more than rupees 2,700 crore, and margin may expand by 60 bips to more than 20%, that is likely at 20.4%.
All right, we'll be watching out for that big number. Thank you so much, Sudarshan, for joining in with what to expect from Bajaj Auto. But a lot in the IT space as well, the mid-cap IT space. L&T Tech is the first one. What are we expecting, Rima?
Well, expect a strong quarter, a revenue growth of 4.5% on the top line. But this, remember, comes on the back of Q1, where revenues had fallen by 3.3%. So basically, revenues will bounce back after a weak Q1. Margins will expand owing to the large, the good growth in the top line. So margin expansion of close to 70 basis points, profit growth seen at about 7.5%. Now, amongst their verticals, mobility, that's basically automotive, did very well last quarter. We had about a 6.5% quarter-on-quarter revenue growth. This growth number may moderate, but mobility will still do very well. What we need to find out is the other verticals. For instance, industrial products, medical devices. Here the management has been a bit cautious. Also, one more thing to watch is that their current margins, according to our poll, should come at 16.3%. Right? Last quarter, they were at 15.6%. But their aspiration was to get to margins of about 17, 18% in the medium term. So how do you get to that, right? The levers, how soon? I think that's something the street will want to watch.
So management commentary for sure on that, but emphasis as well. Busy day again for you. Tell us more.
So expect a steady quarter, a fairly decent quarter. Remember, so this time we're expecting a revenue growth of about 1.5 to 2%. Growth for the company has been very muted for the last many quarters because of their exposure to BFSI. But this time, now expectation is things will start bouncing back. Margins are seen up 30 basis points. Profits are seen up 4.6%. Now, investors, though, are very optimistic going into Mphasis' numbers that things have bottomed out and there is a recovery underway. Since June, the stock is up nearly 30%. So the street is getting incrementally bullish because the last 2 years have been tough for Mphasis. So last year, revenues for the company declined by 6.3%. This year, things are likely to be, like a mid-single digit kind of a revenue growth is what the street is anticipating. But the key is the recovery in BFS and BFSI. So BFS is 47% of their revenues. Mortgage constitutes 6% of their revenues. And this segment is likely to benefit from falling interest rates in the US. So, they say, right, it's like a big V fall on the way down. And that's the way, growth should recover for Mphasis. Does that happen in this quarter? Is the management talking about it in the subsequent quarter? The stock is down, 30% since June.
Okay, so talking about V-fall, we are seeing a fall in the markets, a further pressure that has come by. Nifty is down 130 points right now. It is at the day's low. It's a cut of 165 points from the highs of the day. The mid-caps are down further, 300 points gone there. The advanced decline ratio has worsened in favor of the declines right now. All the sectoral indices, they are in the red right now, barring Nifty Financial, and some of the stocks which are leading to these losses from the top. We have something like a Wipro, Tech Mahindra. These two stocks are at the day's low right now. Apollo Hospital, Britannia and ITC. So the Nifty IT pack and the Nifty FMCG pack, that is something which is leading to the pressures that we are seeing right now on the Nifty as well. Some other names which have a big weightage on Nifty and are leading to the losses, something like a TCS, Mphasis. So we were talking about what to expect from the mid-cap IT space. The large-cap IT has come in under some bit of pressure. So watch out for the market moves because there's been a sudden fall that we are seeing in last couple of trading minutes itself. For now, we'll slip into a short break. When we come back, we'll get you our special offering, FinStreet. On the other side, our colleague Abhishek will focus on the recent Q2 business updates from banks.
We're now in the bunker that we found underneath a Lebanese house in a Shia village only a couple of kilometers from our border. This bunker was ready for Radwan forces, for a battalion of Radwan forces to enter into this bunker and do a raid into Israel and do a larger scale of massacre than the 7th of October. They were planned with the motorcycles here to go to Kiryat Shmona, to Iftach, to villages and positions inside Israel and conduct a massacre. And all our enemies should know, whether they are close or far away in Iran, they should know that we are determined. We are determined to supply security and safety to our citizens. We need to impose a 1701, a fully imposed 1701 this area, so Hezbollah can never be next to our border with such infrastructures that can do a Conquer Galilee plan like he planned. Hassan Nasrallah, this ruthless terrorist that we eliminated, that is responsible for the deaths of many people, not just Israelis, Germans, Americans, French and others. The world is a better place without Hezbollah. The world is a better place without Nasrallah.
carefully.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. This is a special offering Fin Street. Abhishek Kothari is putting focus on all the recent Q2 updates by banks and what are the trends looking like.
Well, 25 lenders have given the pro forma business update for Q2 FY25. Now, they form about 50.6% of the deposits in the system and 54.5% of the credit in the system. The trend is worrisome. Now, banks have seen high deposit growth on a sequential basis. The fight is on for deposits. Now, most of the growth in this deposit on a sequential basis has come in from high-cost bulk deposits, which are shorter tenure in nature and very costly as well. Hence, one can expect majority of the lenders to see pressure on their net interest margins. Now, CASA ratio continues its downward trajectory as seen in the last few quarters in the banking sector. Loan growth has remained tepid for many of them as the focus is clearly on lowering their credit deposit ratio. Let's take a look at the deposit growth on a year-on-year basis. Dhanlaxmi Bank, Indian Bank, South Indian Bank, J&K Bank, Bank of Baroda and Union Bank of India, all of them have seen single-digit deposit growth on a year-on-year basis. On the other hand, Utkarsh Small Finance Bank, Suryodaya Small Finance Bank, IDFC First Bank, Equitas, Bandhan, CSB Bank as well as RBL Bank, all of them have seen robust deposit growth of more than 20% on a year-on-year basis. So on a sequential basis, that is quarter-on-quarter, deposit growth has been weak for IDBI Bank, Federal Bank, Dhanlaxmi Bank, Union Bank of India as well as Indian Bank, all of them seeing less than 2% deposit growth on a sequential basis. While Suryodaya Small Finance Bank, Bank of India, HDFC Bank, Equitas, CSB Bank, RBL Bank, Bandhan Bank, Utkarsh Small Finance Bank have seen robust deposit growth of more than 5% on a quarter-on-quarter basis, and the best deposit growth has been for AU Small Finance Bank at more than 12%. Now, credit growth has been lower for many of them as the focus is on credit deposit ratio getting lowered. So, Yes Bank, J&K Bank, HDFC Bank, Union Bank have seen single-digit loan growth on a YOY basis, that is year-on-year basis. While Suryodaya Small Finance Bank, Utkarsh Small Finance Bank, Bandhan Bank and IDFC First Bank have seen robust loan growth on a year-on-year basis. On a sequential basis, that is quarter-on-quarter, loan growth has been tepid for J&K Bank, Ujjivan Small Finance Bank, HDFC Bank, RBL Bank, Utkarsh Small Finance Bank and Union Bank of India. Year-on-year, the loan growth has been the best for CSB Bank, Bank of India, IDFC First Bank, South Indian Bank as well. Lower loan growth than deposit growth has been seen for some players, which has had an impact on their credit deposit ratio as well. Now, absence of deposit growth has meant an improvement in CD ratio or credit deposit ratio for IDBI Bank as well as Federal Bank. CD ratio has declined massively for Utkarsh Small Finance Bank, RBL Bank, HDFC Bank by almost 400-450 basis points sequentially, Ujjivan Small Finance Bank, Bandhan Bank and Equitas Small Finance Bank as well. So what are the key trends to watch out for? Now, the net interest margin will come under pressure for many of the lenders due to inflow of high-cost deposits and decline in CD ratio as well. Banks cannot grow their high-yielding unsecured segment growth, which can impact their net interest margin as well. Credit costs will rise due to pain in the unsecured lending that has been seen in the financial space. Other income will not be very high. Thus, there can be moderation in the return ratios, especially return on asset. This, in turn, may have an impact on valuation of some of the lenders as well.
Interesting. Thank you very much for that. The Nifty is at 24,950, now down more than 100 points. So after taking out 25,000, now 24,950 also gone. Sensex lower by 360 points. The top Nifty loser today is Trend. It's under pressure for the third day in a row. This week it's lost more than 5%. But remember, last week Trend was the top gainer as the company forayed into lab-grown diamonds and other beauty products. Titan too is, Titan in fact, pull up a one-month chart of Titan and you would see that the stock continues, has been struggling now. This month, it's down nearly about 10%. Outside of, in the mid-cap space, Cochin Shipyard is a stock we've been highlighting. It's down close to about 4.5%. As the 2-day offer for sale, where the government is looking to sell about a 5% stake, kicked off today. The floor price has been set at 1540. The stock is weak, but still holding on to that floor price. With that, it's a wrap on Trading Hour. Stay tuned. Halftime report is up next.
The Parsi legacy is a testament to how a small community has made a massive impact on India's industrial, scientific and cultural development despite representing just a tiny fraction of the population. They reportedly make just 0.004% of India's population, but their contribution has been immeasurable. This is the story of the Parsi. From Jamshedji Tata, who laid the foundation of India's industrial revolution, to Dr. Homi Bhabha, the father of India's nuclear program. The Parsi influence is like a secret ingredient that's added flavor to India's growth recipe. The Tata Group started as a humble textile business in the 19th century and has now grown into one of India's largest business giant, with its listed entities' combined market capitalization at rupees 30 lakh crores. Jahangir Tata took to the skies with Air India, and Ratan Tata kept soaring, expanding globally and championing philanthropy. In 2023, Ratan Tata's foundation pledged millions for healthcare and education, proving the Parsi spirit of giving. And let's not forget Adair Godrej, who unlocked a whole new world by founding the Godrej Group, introducing India's first locks and safes. Today, it's a global sensation known for its eco-friendly products and commitment to social responsibility, perfectly embodying Parsi values of philanthropy. Talk about building dreams. Palanji Mystery turned construction into an art form with Shapurji Palanji. From iconic skyscrapers to vibrant residential complexes, this powerhouse is shaping skylines worldwide. Cyrus Poonawalla, the mastermind behind the Serum Institute of India, is a health superhero. Producing over 1.5 billion vaccine doses a year, he took center stage during the COVID-19 pandemic by churning out the AstraZeneca vaccine. That's a Parsi powerhouse, making the world a healthier place. Also, did you know Freddie Mercury, the legendary frontman of Queen, attended boarding school in Panchgani, Maharashtra? With his incredible voice and flamboyant stage presence, he proudly celebrated his Parsi roots while giving us timeless hits. From innovation to philanthropy to music, Parsis have made their mark everywhere. Despite their shrinking numbers, now less than 60,000, they continue to shine bright and inspire.
Canada has provided credible, irrefutable evidence of ties between agents of the Government of India and a murder of a Canadian citizen on Canadian soil. Now it is time for India to live up to what it said it would do.
Markets slipped to the day's low. The Sensex and the Nifty see a 0.5% cut each, led lower by auto and tech stocks. Financials eke out some gains.
Telecom Minister Jyotiraditya Scindia stirs things up with his comment that Satcom spectrum will be allocated, not auctioned as industry desires, on terms set by the TRAI. He adds that tariff hikes are needed to sustain the investments.
HDFC Life Insurance CEO Vibha Padalkar tells CNBC-TV18 that they have opted to focus on growing their customer base with some sacrifice on margins. She, however, sees margins improving in the second half of the year.
Angel One CEO Dinesh Thakkar tells CNBC-TV18 that SEBI's revised F&O rules can impact turnover in the segment by 20 to 24% and the brokerage's income could dip 13 to 14% following the recent revisions, but he expects business growth to help offset the impact going forward.
Very good afternoon. You're watching Halftime Report. I'm Ekta Batra and with me is Hormuz Fatakia. Well, it's turning out to be a session where we're seeing a sudden dip which has come into the markets. We've recovered from the day's low, but nonetheless still weak at this point in time. So we have the Nifty, which is down around 100 odd points. We have the mid-cap index, which is shed over 200 odd points, and the Bank Nifty, which is just about holding its head above the water. What probably stands out today is the advanced decline ratio, which is on the declining side. So let's see whether there's any kind of improvement in that. And the India VIX, which has jumped up around 3 odd % as well. So just do watch out for the India VIX, which is up now around 2.5 odd %. But nonetheless, we do have gold prices which have hit record highs based on the rupee depreciation as well as probably risk-off sentiment. So that's probably where the trend is, a little bit of risk-off, as you can see on the screen. A lot of results today. Bajaj Auto, Emphasis to name a few, and tomorrow as well, Infosys, Wipro, LTI, Mindtree, Axis Bank, one of the big first corporate banks which will hit the screen in terms of numbers, Nestle, Havells. So a lot to watch out for in terms of commentary as well as cues.
Good afternoon, Ekta. And it's not been a very good day. It's not been a very good week actually for the last couple of days. The trend that you're seeing, that the higher levels continue to get sold into. Even yesterday, you could not cross that 25,200 mark on the Nifty. Today has been a similar story. We fell to the lowest point of the day, which was around 24,900. So the Nifty remains locked in that range of 24,900 to around about 25,200 on the upside. If we go below 24,900, then the lower levels come into play, which is the September 9th low of 24,750. And then, of course, the last week low that we made, which was 24,693. Those come into play on the index. What is not doing well is the auto index. That continues to be the top sectoral loser ahead of Bajaj Auto's results later in the day. So that is not having a very good day in today's session, as is IT. But the other sector that is not having a very good day, Ekta, is pharma. What's happening there?
Well, yes. Well, I'm looking at a couple of stocks which are in focus in today's trading session, which is Strides as well as Zydus. So I'm going to start with, Strides, which is in focus because they had announced a particular piece of restructuring a couple of months ago with regards to OneSource, which is formerly Stelis Biopharma, and which will now be a specialty pharma pure play CDMO company. So it will have the Stelis Biologics CDMO business, it will have a complex injectables business, and it will have Strides soft gelatin business. So it's going to be a combination of that. So what they have announced today is that OneSource has received equity commitments of around 801 crores or $95 million from investors. And the pre-money equity valuation of OneSource is 1.65 billion. The fundraise is being led by HBM Healthcare and associated investors. There's additional participation from the likes of White Oak Capital, Param Capital, Motilal Oswal, Enam, SBI Life Insurance. The company has said that the embedded value of around 633 rupees per share for Strides holding in OneSource is now at an 82% premium as compared to what it was in September of 2023. So this is basically what the update is on Strides, where OneSource has got a pre-money equity valuation of $1.65 billion and equity commitments of 801 crores. I assume that it's probably going to be listed in the first half of 2025. The other one that I'm watching is Zydus, which is where there's news on a cancer drug in the US. And what has actually taken place is that a US court has ruled in favor of the innovator company Exelixis on a drug which is used for cancer, which is carboaxtinib generic. So they've said that basically the generic defendant, which is MSN in this case, does not have a claim over the patent, or the patent litigation didn't go in favor of MSN, and MSN and Zydus are partners. So that's the reason why Zydus is down, because their partner in the US, MSN, has lost a case on this particular drug. Now MSN what will happen is that this is a large drug, $1.6 billion. The street was assuming they'll launch in FY27, so Zydus will get some benefit FY27 onwards, but now it's probably pushed to FY30 or 2030. So there's a delay in terms of the possible launch. There will be a delay in possible earnings. And just to put it into perspective, there are a lot of drugs going off patent in the next couple of years for not going off patent, rather getting more competition, such as Revlimid generic as well as Mybetriq generic. So Zydus's earnings will be under pressure. So the street was compensating this as probably one of the earnings fillip, which now might get delayed.
And a delay is very significant at that one, right? Because you're planning to launch in FY27, now probably gets pushed to FY30. So that's a 3-year delay, and it's showing up on the stock price as well, right? 4.5% lower there.
Yes, but this is normal course of business for the US generic companies. We've heard this about Mybetriq. We just discussed Mybetriq generic. There's Entresto, we discussed that with Divi's yesterday, that there's always a risk to litigation. It's always a risk in terms of first to file and patent challenges in the US, and that's a result of that.
We'll pose that question to Vishal Manchanda as well, right, who's pharma analyst at Systematics, who is joining us now on the show. Vishal, good afternoon. Thank you so much for joining in. You just heard Ekta on this news flow that has come in for Zydus. How negative do you see this as a development for Zydus based on the news that you just heard?
Hi, good afternoon. I think so. This was, as Ekta said, this was supposed to take care of the post-Revlimid decline that was anticipated in FY27. So now with this drug getting pushed to FY30, there is nothing that Zydus can fill up with. While they obviously can leverage their cash position to acquire something to kind of fill the hole that Revlimid would leave. But we have to wait and see how they do that. And again, Revlimid is so replacing Revlimid is a challenge because that was a high value opportunity. I think so for someone to replace Revlimid. So say if Revlimid was a $100 million drug, to replace that they would need something around $600 million or more on top line, because margins is something that we also need to understand. Revlimid was a very high margin product. So a very uphill task, and the task has become a bit more difficult for them now.
Vishal, any numbers in terms of what the anticipated revenue was from this particular cancer drug FY27 onwards?
So I think this was a $1.6 billion top line opportunity for the innovator. So assuming the exclusivity would have been triggered in that year, they would have got 6 months of exclusive position. It would have been a meaningful product. They could have added about almost $250 million on top line for the combined entities, Zydus and MSN, and then there would have been a margin flow. So since this was a partnered opportunity, my sense is the margins would not have been comparable to Revlimid, but much lower, say maybe around 25-30% at best.
Okay. The other news is on Strides. Their OneSource business, which will eventually be listed by the first half of next calendar year, is going to see some amount of fundraising, a pre-IPO fundraise. What is your reading of that? 800 odd crores, and the pre-equity valuation is 1.65 billion.
Right. So I think OneSource is into an exciting space. So they are into contract development and manufacturing, plus they are also into biologics. They are doing something around GLP-1s also on the contract manufacturing side. So I think all of this put together, there is all of these requires humongous funding, because as we know, these assets, biologic L assets, will require immense amount of investment in terms of the fixed cost, the upfront capital cost. So the valuations are encouraging at $1.6 billion. So a significant premium to the last valuation they had, around $900 million is where they had pegged the valuation to be. But I think there's a long runway from here in terms of the monetization of the opportunities. We have to be patient and also be aware of the risks that go along such investments.
Quickly, if you can tell us, why is most of pharma down? Is there fear of maybe the US elections, what comes out of, any kind of Medicare pricing, which we've discussed some time ago with regards to generic pricing, or do you think that there's just profit booking because of the kind of run-up that we've seen?
I think there is some amount of caution that is setting into the sector. We are also seeing some. So we have always been seeing. I think the sector has been witnessing good news for quite some time. Now I think with this, I think this Zydus news flow is a bit negative, and we have to be aware. The US will always be volatile in terms of the development. We'll see both sides. We'll see some very exciting development, and we'll see things going the other way around. Even compliance is something that's not getting factored into the price right now. So I would say the prices currently were on the optimistic side. There is some caution setting in now, and I think it's better the price is correct and there is the risk reward becomes favorable then.
All right, Vishal, thanks a lot for sparing time and telling us your views on the stocks in the pharma space that's in the news. Well, no amount of time is enough to discuss pharma, such a broad gamut at the sector that it is. But we have to call time on this conversation for sure. We take a short break here on Halftime Report and back with more buzzing stocks on the other side. Stay tuned, we'll be right back.
Those allegations.
Baba Siddiqui actually had police protection. It was non-categorized police protection, but still he had 2 + 1 constables with him. That means that during the day, 2 constables were deployed for his protection, and in the night, 1 constable. This makes this matter even worse. Remember, Baba Siddiqui, who was a loyal Congress political leader, in February, he shifted sides and he joined NCP Ajit Pawar. This means that he was a political leader of a party which is in the government, is a part of ruling alliance. And despite police security, he was shot dead on Dussehra night, a night when police security, police deployment is anyway at its peak in Mumbai. The clarity on motive is yet to come, but what has been established by Mumbai police that this is a case of contract killing. These 3 accused, one Gurmail Singh, hailed from Haryana. He's a 23-year-old person who actually has a record, a criminal background. He has extortion and murder cases against him, and it is believed that when he was in the jail, at that time he established a contact with some members of the notorious Lawrence Vishnoi gang. There are 2 more other shooters, and both of them are from UP. One is Shiv Kumar Gautam and one is Dharmraj Kashyap. Now, Dharmraj Kashyap was arrested by the police along with Gurmail Singh, but Shiv Kumar Gautam managed to flee away. He's still absconding. It was yesterday, on Sunday, a Facebook post went viral. The Facebook post was uploaded by a person called Shubham Lonkar. In that person, now this person is allegedly a member of Lawrence Vishnoi gang, and in that social media post, he hinted that it was Lawrence Vishnoi gang which was responsible for this shootout, and Baba Siddiqui was attacked, was killed due to his proximity to Bollywood star Salman Khan. And it's known fact that Salman Khan is on Lawrence Vishnoi gang's radar for a very long time now. And the reason cited by the Vishnoi gang is the Black Bug case. Now, after that, Mumbai police said.
Welcome back. Well, let's talk about certain stocks which are in focus. We have Rallis, which is in focus. It is reacting to what is a good set of Q2 numbers. Sunil is here to tell us more.
Well, yes, it's a strong set reported by the company, and that is what the street seems to like because it has come in after quarters of disappointment. If you look at the numbers, revenues are up 11%, EBITDA has increased by 24%, profits have come in at 98 crore rupees versus 82 crore rupees. Even sequentially, it's a good growth that the company has seen. And both the segments, the crop care and the seed business, has done well for the company. In the crop care segment, EBITDA is up 5%. The company says this is because of volume growth and better cost management. The domestic crop care volumes, they were up 17%, but there are still pricing pressures that the industry is facing. So 11% drop in pricing here. The export volumes, they were flat, but there was a pricing decline, and that's why export volumes export revenues were down 9% this time around. If you talk about the seeds business, revenues were up 48%. So strong growth here in the seeds business this time because of better Kharif liquidation. EBITDA increased on account of higher sales, helping in positive operating leverage. So most of the things work for the company this time around, and they are positive on the outlook as well. And that's why that big surge in stock price.
15.5% higher is Rallis. Thanks a lot, Sonal, for that update. Very good quarter there from Rallis India. But on the flip side, what is not having a very good day is BSE, and that comes after days of having a stellar run. The stock has now been downgraded by Jefferies. Vamakshi is joining in with more details on that. Vamakshi.
Well, Hormaz, yes, not such a great day for BSE. Jefferies has gone ahead and downgraded its rating on BSE to underperform. However, they've raised their target price to 3,500 per share. Largely, they say that the stock has seen a run-up of over 100% post-release of SEBI's new F&O framework, led by expectations that BSE could gain some market share from NSE. Now, this also assumes that they're assuming a 25% hit to the overall market volumes. BSE's valuation, given that, is at a price-to-earnings ratio of 40 times FY26 estimates, which implies that market share could rise from 13% in the second quarter to 30 to 35% going forward, with a 40 to 50% share in the weekly contracts. Now, Jefferies believes that this is very stretched. They also say that this fails to capture risks that could come from higher impact on the overall market, lower spillover gains, and further regulations. They see near-term risk reward as unfavorable. So given those factors, it's a thumbs down coming in from Jefferies on BSE. Resultantly, the stock is taking a knock in the trading session today.
Okay, yes, absolutely. It has seen a strong run-up, but that downgrade definitely impacting the stock today. So down around 4.5%. Thanks, Vamakshi. For that, we'll take a short break. On the other side, Nigel will tell us about what's taking place in the futures and options space today.
Looking into this post, they are trying to verify its authenticity and the whole context. Later in the night, that was yesterday night, a person called Praveen Lonkar was arrested by Mumbai police. Now this person, Praveen Lonkar, is said to be Shubham Lonkar, the person who uploaded that Facebook post, his real brother. Now Mumbai police said that both the Lonkar brothers, they were the ones who, orchestrated this whole conspiracy and the killing. Now there are 3 more accused who are wanted by Mumbai police. There is another angle which is panning out, that is a disputed SRA slum rehabilitation project. Now that was son Dyaneshwar SRA project, where Baba Siddiqui, recently his son Jishan Siddiqui staged a protest when the contracts were shifted from one set of builders to another set of builders. So this dispute could also be one of the reasons why Baba Siddiqui's murder was ordered. But there are larger questions, and Mumbai police are looking for the answers, whether or not Lawrence Vishnoi gang is actually responsible for this, or is it just a distraction tactic to divert the attention from the real motive.
Carefully.
Welcome back to Halftime Report. The Nifty continues to hover around that mark of 24,950. Some results flashing on your screen as well for South Indian Bank. The net interest income is up 6%. We'll get you more details on that in just a bit. But Nigel is joining in now with how the setups are looking like on the FNO front on the Nifty Bank weekly expiry day. Nigel, good afternoon.
Well, that's right. You know, Hormuz, earlier today I made this point that I'm expecting the Nifty Bank to actually outperform what the Nifty is doing, because in the last couple of sessions it's been coming back to life, and even in yesterday's trading session the dip was got bought into. And as we speak, the index that was down close to 200 points, that's just moved into the green. So I expect a relative outperformance from the Nifty Bank. And as you correctly mentioned, today is weekly expiry day. On the Nifty, it seems the call writers are getting overconfident, you know, because the Nifty PCR has now come down to around 0.7. How does that happen? Because the amount of call writing is moving up. And just take a look at the 25,000 call, 25,100 call, 25,200 call. All of them are seeing a fair bit of open interest build up. This contract expires tomorrow. And the bears believe that they can defend the recent high. But, you know, that could be that could be one of the reasons that we see a bit of a bounce if we can get some good news coming in from somewhere. Because as of now, the positioning is such that we don't get past the 25,250 odd mark. And that's the chart that we're looking at on the screen. This morning, we opened near the 50 DMA, but we couldn't trade above those levels. We're still 80 points away from those levels. So first, you like the Nifty to conquer the 50 and then move to around the 20 DMA. That's going to be an important mark. The Nifty Bank, that 51,500 mark, that becomes the first level of support on the downside. And that's where the 50 DMA is also at. In terms of stocks that I'm looking at, well, HDFC, AMC, that's seeing a big fresh build up is what we're seeing. Open interest is up more than 10%. The stock is up close to around 5%. HDFC Life made this point earlier that yesterday positioning was such that any kind of good news will lead to a bit of a bounce. And the shorts are covering out because yesterday there were big shorts that got into the system. And finally, a couple of pharma names, Ipca Laboratories as well as Glenmark. Both of them are down in today's trading session, but there is some unwinding of long positions. Open interest sharply lower on both these two counters. So let's see whether or not the Nifty Bank can fight back. But otherwise, that's the one that's actually looking like it will relatively outperform the Nifty. Back to you.
Okay, all right, Nigel, thanks very much for that. So that's on the FNO space. Well, for South Indian Bank, the asset quality looks quite stable at this point in time. So there's no real big movement which has taken place in terms of the gross NPAs as well as the net NPAs. So the gross NPA stands at around 4.4% versus 4.5% and 1.3% versus 1.4% sequentially for the net NPAs. In fact, there's an improvement which has taken place marginally on the asset quality. So stable to marginal improvement is what you've seen. And that's the reason that you're probably seeing the stock higher by around 3.8%. So stable set of numbers. We'll wait by for the commentary as well as the presentation to get to know more. We'll take a short break, but we'll get you more on the stocks once we're back. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and investing.
Welcome back. Well, let us now shift focus to Waaree Energies. The company's 4,300 crore IPO will open for subscription on the 21st of October and close on the 23rd. The management says that they will use 2,750 crores of the fresh issue for part financing of the establishment of manufacturing facilities in Odisha. Reema caught up with Hitesh Chimanlal Doshi, who's the chairman and MD, and Sonal Srivastav, who's the CFO of the company. Listen in.
So talking about your financials, so last year you had a very solid growth of I think close to about 68%. But in Q1, revenue growth moderated to 2.5%. What was the reason for that?
See, we continue to focus on expansion of our module sales. We will do that. The prices did soften a bit. However, like I said earlier, we focused completely on our margin. So in spite of a revenue growing 2.3% odds, our actually costs grew less than 1%. And therefore, it helped us on the margin expansion. I think as we go along, that's going to be our focus. How do you and with technology, we do expect price points to evolve, and so will the cost.
So since the focus is on margin expansion, your margins today stand at closer to 18%
Correct.
around. What is the goal with evolving technology, improving efficiency, value addition, etc.? Where do you think you can take your margins?
We will see how it evolves. I can only say that we have certain strategic direction which will help us on the cost, especially with our own modules coming on, cells coming online. And as we expand there, our own US expansion coming as well. And a good mix of export and domestic, I think margin expansion will play out.
Okay, so margin expansions should continue from
we will continue to focus on our costs, so that's where we will get at.
What is cost today? What is the cost of production per unit?
Cost of production today is ranging about 15 cents to 16 cents.
And you sell in the market at?
It's a higher, so for the quarter it was about 19 to 20 cents, and it was you will see both costs and prices were higher last year. So as it evolves, both like I said, we focus on the gross margin. So as the price evolves, we also look at how we will manage the cost.
And how has your cost of production come down because of technology? So today you gave us a number. What was it, say, a year back?
A year back, of course, it was higher. It was ranging more around 18 to 19 cents. Also because of input prices, So they really move in tandem, and it all depends on how we are managing that, both from sourcing point of view as well as efficiency on the production line.
Mr. Doshi, exports, right? You are, I think, India's leading exporter of solar modules. But exports, as a percentage of your overall revenues, has been very volatile. 1 year it's 68%, then it goes down to 23%. In Q1, your exports dropped 54%. Explain that to us.
Like Sonalji said, as you know, we have a very large order book, and it is constantly growing. So when you're focusing on the margin, you have the choice to choose on the orders, and when you have the large order book. So that luxury of the order book gives us the opportunity to choose time to time which order is good for the organization and good for customers also. Sometimes customers have the challenge of executing the project or they delay the project due to the certain issues, or at that time you get this opportunity to choose the orders. Domestic, it is ranging between 17 to 25% quarter on quarter. And that again, if you choose a more export in this quarter, your market share in India comes down. So you choose more local.
But export margins are higher?
At this moment, yes.
How much higher?
Around again 300 to 350 basis points.
300 to 300. So let's talk about CAPEX. As I can see, I think you have 3 levels of CAPEX coming on board. There is a solar cell coming up in Chikli, you've got US, and a large one in Odisha, 6 gigawatts. Just tell us all your CAPEX plans.
The cell capex, it's ongoing, and it should be completed in the in the current fiscal.
Q4 of this fiscal year.
Yes.
And the size?
The size is about 2,500 to 2,600, and it's coming to an end. It has been funded already. We are looking for a capex of additional 9,500. 500 is for the US operations, and 9,000 crore is going to be for the Orissa operations, which will be an integrated facility of 6 gigawatt module, cell and wafer ingots.
And all this, so you said the Chikli one, solar cell in Gujarat, comes on board in Q4 of FY25. What about US and what about the Odisha plant?
So US also, we will be putting it on stream this fiscal as well. The capacity will be 1.6 gigawatt for US. This is the first phase. And for Orissa, we are targeting about 2 years, so fiscal 27.
So once, Mr. Doshi, by FY27, all your CAPEX should be completed, right? Right. At least as of the visibility that we have today. I know you're constant. Okay. So your capacity today is, I think, a little more than 30 gigawatts.
Yeah.
What would that number go up to by FY27?
It will be 21.
21.
In the modules. Cells will be 11. Ingot and wafers will be 6 each.
Okay. And today you have no solar cell manufacturing capacity. Everything is imported.
Right.
Okay. So that's...
we buy the domestically also.
Sir, but you're adding a lot of capacity. From 13 you go up to 21, but your capacity utilization is only 45%.
Right. Let's see how Waaree is working. Waaree has been always ahead of the technology. Even in the last exhibition we were the first in India to introduce 730 watt module. So when you're constantly changing the production lines, you're coming up with the new products, you're not able to utilize the capacity which is normally 60-70%. So if you look to some of our lines, they are above 70% today. Some of the lines we are changing the equipment. We change our equipment continuously to give the latest products offering to our customers. And not only the product in terms of the output, but the technology, reliability, longer the life. And that definitely brings some pressures on the capacity utilization.
Fair enough, got that point. So out of your total capacity of about 13 gigawatt, currently what percentage of it is upgraded to the latest technology?
Almost 90% plus. For example, we don't have the line.
Then you should be operating at higher capacity utilization.
The capacity expansion is so fast. We moved from poly to the mono.
To top car.
Till we stabilize now top car. And the model we launched in the last exhibition is HJT. Okay. Right? And it's not full stop there. Our team is already working on the what's next to the HJT. And
So
this will keep on coming.
capacity utilization should stay at these levels in a business where technology is constantly adapting and improvising, or is there scope to push it up to 60-70%?
It's very good scope to push to the 60-70%. Probably you will see in the coming days. Yeah.
You will see capacity rising. So that should further push up your margins and the kind of top line that you do. So your annual report also states that the group company is planning to set up a 3.5 gigawatt lithium ion cell plant. Can you tell us under which listed entity will this be in, and give us some timelines and what your plans is, because this is public. It's a part of your annual report which you've shared with all shareholders. So they'd like to know a little bit more. And will it come under Vari Energies?
As a company or as a group, we are committed for the energy transition, and we'll continue to grow into the new technologies, new products. If you look to, we won recently for the hydrogen PLI also, and we had bidded for the battery PLI also. So we'll continue in a complete energy transition. It looks a solar company, but if you look to the annual report in detail or our RHP in detail, we are working in the entire energy transition space, because we strongly believe this is the Vari is committed. Whatever the electron we are seeing in the electricity here, it has to come from the green energy. Batteries will definitely come. Now, which company, when, the time will speak about that in future.
So you haven't decided it will be housed
Not
under
at
which?
this moment.
Where do you think it makes most sense?
Not decided anything. Probably post IPO, we'll talk to the our team, our investors, bankers.
And any timeline?
As I said, we had already applied for the PLI, and we'll continue to, and we are working on this direction.
Another upcoming IPO, Vari Energies. Keep an eye out on that one on the 21st of October. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. We'll be back on the other side.
The most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I have a solemn duty to perform. 4 days ago, we lost a great son of India. The passing of Mr. Ratan Tata filled us all with immense grief. He was a dear friend of my father-in-law, of Mukesh and of our family. He was also a mentor to Akash. He was a visionary industrialist and a philanthropist who always strove for society's greater good. As a mark of respect, may I request all of you to stand and observe a minute of silence in the honor of Sir Ratan Tata. Om Shanti Shanti Shanti.
Back with us here on Halftime Report. Earlier today, we spoke to the management of Angel One, who spoke about the drop in F&O volumes, where he said that he's expecting a 20 to 22% drop there because of the new F&O regulations that market regulator SEBI had received. He spoke about a whole host of things as well. Listen into what he had to say.
A label, because we have done few changes in cash delivery, and we have started charging on non-cash collateral which customer provide. We charge interest on that. I don't agree that volume would be so drastically lower, because based on kind of an analysis that we have done, total impact on our net income would be in the range of 13 to 14%. But when we come to drop in F&O volume, my estimate would be drop would not be more than around 20 to 22% maximum. It's not going to happen that way, because we have seen that there is a stickiness on platform. So people who are used to like certain products, they don't shift very easily till the time there is a big drastic kind of like thing which they have to do it compulsorily. If you look at contract size was reduced in April 2024, we did not see any big benefit to neither to exchange nor to this thing. So there can be a temporary kind of like blip in volume for 1 quarter or maybe 1 month. The people were not aware that contract size has reduced. Similarly, I feel when contract size would be increased, ticket sizes increase, and lesser number of weekly option, that is not going to create a big shift from one exchange to other exchange or one broker to other broker.
Okay, we'll take a break on that note, but on the other side, Manisha Gupta will join in. She's going to take us through what she's tracking in the commodity space today.
Now I come to the schedule for Maharashtra. This will be in single phase. The notifications, date of notifications are in front of you. 22nd October would be date of notification. Last date of making nomination would be 29th October. Scrutiny on 30th October. And last date for withdrawal 4th, and date of poll in Maharashtra would be 20th 11. Counting would be on 23rd 11 24, and you will notice that date of poll is Wednesday. This is deliberately, which lot of scheduling, whatever goes into scheduling, we have tried that it is midday so that issue of urban apathy is handled. झारखंड एक बहुत ही समृद्ध स्टेट है, बहुत ही उसकी विरासत है, और वहाँ पर हम फिर से अपील करेंगे कि सब वोटर्स अधिक से अधिक मात्रा में वोट दें. Schedule would be like this. Jharkhand would be in 2 phases. The date of poll, first phase would be on, date of poll would be on 13th November, and the second phase would be along with Maharashtra on 20th November. So the date of issue of notification for Jharkhand phase 1 would be 18th, and for phase 2 would be 22nd, along with Maharashtra. Nominations for phase 1 would be till 25th of October, and for phase 2, 29th. This slide we will share with everyone. And date of poll would be 13th November and 20th November, both Wednesdays. And date of counting would be 23rd 11, that is Saturday. With this, we end our presentation with the request that through you, that all the voters of Jharkhand and Maharashtra कृपया बाहर आइए, कृपया वोट करिए. लोकतंत्र के उत्सव में आपकी भागीदारी कि हम बहुत ही रिक्वेस्ट करते हैं, अपील करते हैं आपसे. थैंक यू वेरी मच.
We're now in the bunker that we found underneath.
Investing.
Welcome back, and joining us on the show now is Siddharth Srivastava. He's head ETF product and fund management at Mirae Assets. Siddharth, hi, thank you so much for joining us. And gold is a bandwagon which everybody wants to jump into right now with the kind of all-time highs and run-up that we've seen in prices. At your fund house, what is the sense with gold? How are you treating this as an asset class?
So I'll obviously talk from a performance point of view because that is what caught the eye of a lot of investors. So right now, obviously gold has run up significantly in last 1 year or so, almost seeing an upside up movement of almost 30% in last 1 year. So it has in fact outperformed Nifty. Even when we are looking from a 3-year point of view, gold has given almost 16% return compared to just 12% of Nifty 50. But we think that this will sort of persist. We expect from a near-term gold to be in the range of 78,000. Right now it's around 75.5. So we think that there is some room left for gold to rally further. And also from a long-term point of view, I think we have already, the industry has talked about it, that with lower correlation with equity, etc., it makes a very good asset class to form part of any investor's portfolio.
Oh, well, absolutely. Siddharth, your fund's opening up today, and I mean, as you rightly said, there is still much upside there. And from a 1-year perspective to a 3-year perspective, as you mentioned, gold has given very strong returns. But when it comes to gold ETFs, and there are various other fund houses also into the space here, how are you looking at, one, the participation within the Indian markets? And when you look at the Indian ETFs versus gold global ETF numbers, would you say India has a lot of room on the higher side?
Yeah, so in last 1 year, we have seen almost 8,800 crores flowing into gold ETFs. In fact, in last 6 months, the number is around 5,500 crores, and September alone pulled 1,200 crores in gold ETFs. So we are seeing a reasonable rally, sorts of not only gold prices, but also in terms of inflows in gold ETFs domestically. Now, also interestingly, when we look from a global point of view, you are seeing not so much of inflows till April, but now we are seeing positive inflows in gold ETF globally also. So last 4 months have been very good for gold ETF flows globally, and I think everything is sort of aligning. If you look at parameters, US has started cutting the interest rates. You have central banks buying gold, lowering their dependency on US treasuries. Then you have geopolitical issues, and also now we are seeing interest building up gold ETF globally. And also, if you look at in gold futures market at COMEX, you are seeing increased net long position. So I think there are a lot of tailwinds which are supporting the gold prices right now, and I think that is going to persist for some time.
So Siddharth, when it comes to Mirai, are you looking at gold as a very long-term business proposition here? And with gold done, can we expect silver ETFs as next?
So right now, gold looks good from a tactical allocation point of view also. And gold as an asset class, I think should be in an investor's portfolio up to almost 10%, because as I mentioned, that it has lower correlation with equities and does well when equities typically does not perform. Now on silver, we are a bit more bullish. We see that within next year or so, silver can touch or cross 1 lakh mark. It is right now at almost 89,000, 90,000. So a bit more bullish on silver. We see that rally in silver may be a bit more stronger in coming times, while silver also has given almost 29% return in last 1 year. So a bit more bullish on silver, but silver has always been a very volatile commodity, so people should obviously a bit more cautious when they take exposure in silver compared to gold, which we believe is needs to be part of an investor portfolio from a long-term point of view.
Siddharth, a quick final question. And when it comes to gold ETFs itself, what kind of participation are you anticipating on this one, given, as you said, the month of September has been quite strong by itself? What you have done as back-of-envelope calculations for yourself?
So I think this inflow sorts of will persist. We in fact launched gold ETF a while back and silver ETF a while back, and we are seeing good inflows in both schemes. And I think equity markets, the level at their wish, people are obviously sorts of diversifying, moving into other asset classes, and gold and silver are right now the investors' favorite when they are looking at other opportunities. And I think the inflows will persist, and we also hope for good participation in our NFO.
All right, so after gold and silver ETFs, this is Fund of Funds that has been launched by Mirai, and as Siddharth tells us that the expectations are good in sense of participation, and the products really seem to be doing quite well, the ones that have been already launched. Siddharth, as always, thank you so much for joining us and talking to us about gold, prices, and of course the ETFs there. With that, it's a wrap on Halftime Report. Business Lunch will take all the action forward.
House in a Shia village only a couple of kilometers from our border. This bunker was ready for Radwan forces, for a battalion of Radwan forces to enter into this bunker and do a raid into Israel and do a larger scale of massacre than the 7th of October. They were planned with the motorcycles here to go to Kiryat Shmona, to Iftach, to villages and positions inside Israel and conduct a massacre. And all our enemies should know, whether they are close or far away in Iran, they should know that we are determined. We are determined to supply security and safety to our citizens. We need to impose a 1701, a fully imposed 1701, this area, so Hezbollah can never be next to our border with such infrastructures that can do a Conquer Galilee plan like he planned. Hassan Nasrallah, this ruthless terrorist that we eliminated, that is responsible for the deaths of many people, not just Israelis, Germans, Americans, French, and others. The world is a better place without Hezbollah. The world is a better place without Nasrallah.
Market slips to the day's low. The Sensex and the Nifty see nearly 0.5% cut each, led by auto and tech stocks. Financials eke out some gains. Telecom Minister Jyotiraditya Scindia stirs things up with his comments that Satcom spectrum will be allocated, not auctioned, as industry desires on terms set by the TRAI. He adds that the tariff hikes are needed to sustain investments. HDFC Life Insurance's CEO Vibha Padalkar tells CNBC-TV18 that they have opted to focus on growing their customer base with some sacrifice on margins. She, however, sees margins improving in the second half of the year. Angel One CEO Dinesh Thakkar tells CNBC-TV18 that SEBI's revised F&O rules can impact turnover in the segment by 20 to 24%, and the brokerage's income could dip 13 to 14% following the recent rule revision. But he expects the business growth to help offset the impact going forward. Hello, good afternoon. You're watching Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at what the markets are doing. Not that great of a day coming in for the benchmark indices or even the broader markets. The Nifty, the Sensex, even the mid and small cap today, when you're looking at it, all of them as of now are trading in the red. The Nifty is down almost 0.4%. Like you can see below that 25,000 mark, 24,900 levels is what it's trading at. Sensex at 81,400 levels, that too down 0.4%. Let's also look at the mid and small cap because that's not performing anything great today. Tried to make a recovery from the day's lowest point is what we're looking at. But yes, the Nifty mid and small cap too is down 0.3%. Let's pull out Nifty Bank because at one point of time, Nifty Bank was the one which was managing to hold on to some bit of a green, but that also has now slipped into the red, down 0.05% is what we are watching out for the Nifty Bank. Some of the top losers that we're seeing for the Nifty today, we have M&M, Infosys, TCS. So these are the big names that are seeing a bit of a fall, and obviously because of that you can see the names. So it's mainly the auto pack and the IT names that are under pressure today. M&M, TCS, Infosys, keep an eye out on that. A bit of a pressure for these IT as well as auto names. Bajaj Auto to report its numbers today. Let's also move on, talk about some of these AMC stocks. Now, HDFC AMC, they reported the numbers yesterday. So that is buzzing on the back of a better than expected number from the street. So keeping an eye on that, 6% uptick that over there. But with that, we're seeing Aditya Birla AMC, UTI AMC, that's also managing to hold on to gains. So these AMC stocks today are among some of the green that we're seeing on the screen today. Tata Group stock, some of these big names, Trent, Titan, let's look at a Tata Consumer, Tata Motors, all of them also under pressure, and keeping an eye out on RailTel, PNC Infra on the back of order wins and some of earnings impact like KEI, Rallis and HDFC Life. All of them are under pressure. But HDFC Life actually gaining. Now, what was the reason behind this? The company did say that HDFC Life, they will be focusing in terms of the growth outlook. In their earnings call, they highlighted that the growth outlook would be higher after posting the company's second quarter numbers yesterday. We also spoke to Vibha Padalkar, the MD and CEO at HDFC Life, regarding the outlook. So let's listen in to what she had to say.
In the first half of the year, that growth on the upper end would be around 15%. We are revising it to say growth for the full year FY25 should be in the range of 18 to 20%. The reason why this gives me the confidence level is the first half of the year on a WRP basis, we grew very well at about like you said, 28%. APE basis, we grew by 31%. Whichever way you look at it, very good levels of growth, beat both the industry, overall industry and the private sector very, very comfortably. Market share expansion of 60 basis points. We achieved a watermark of 11% in terms of overall market share of the sector. 200 basis points differential is explained as follows. 100 basis points was simply because of product mix and largely because of unit linked, what we have been articulating. For example, in H1 last year, unit link was about 28%, and that increased quite significantly in H1 this year to about 36%. So largely due to unit linked and a little bit due to annuity.
Okay, let's move on. And as Bharti Airtel founder Sunil Mittal called for satellite communication on companies to buy spectrum at an auction, Telecom Minister Jyotiraditya Scindia rules out an auction, stating that the spectrum will be allocated to Satcom players at the price that will be determined by the regulator. Let's listen in.
For Satcom, spectrum will be allocated administratively. Now, that does not mean that spectrum does not come without a cost. What that cost is and what the formula of that costing is going to be will not be decided by you or me. It will be decided by TRAI. And there is a paper that has already been circulated by TRAI, and we have a regulatory authority for telecom, and that regulatory authority of telecom has been empowered by the Constitution to decide what that administrative pricing is going to be.
And Elon Musk, meanwhile, has welcomed the statement by the telecom minister. He took the platform X and said, and I quote, "We will do our best to serve the people of India with Starlink." So that's an interesting quote that we're keeping an eye out on. But the telecom minister, while supporting tariff hikes, said that tariffs are extremely low and recent hikes have come in at a low base. Listen into what his views were on this.
चाहे आप OFC फाइबर की आप बात करो, वही दाम 95% गिरी है। 1 GB डेटा आपके लिए 10 साल पहले 289 रुपीस होता था, आज 8.8 है। 1 मिनट वॉइस कॉल का 51 पैसे होता था, आज 3 पैसे है। और निवेश कितना हुआ है? पिछले 1.5-2 वर्षों में 4G से 5G जाने में करीब 2 वर्षों में 4,26,000 करोड़ का निवेश देश में टेलीकॉम सेक्टर में हुआ है। 10% वृद्धि हुई है दामों में, पर 10% वृद्धि हुई है दामों में मतलब क्या? कि जो 3 पैसे होता था वो अब 3.3 पैसे हो चुका है। और क्या था ये दाम? ये 51 पैसे था। तो जहां निवेश किया जाता है उस निवेश का रिटर्न भी आना जरूरी है, नहीं तो 4G से 5G, 5G से 6G हम लोग नहीं पहुंच पाएंगे।
Okay, on that note, we're going to take a very short break, but don't go anywhere because after the break, MasterCard has opened largest global facility in Pune to power its global solutions. We get you an excerpt from our exclusive conversation with the MasterCard's global CEO on the other side.
The Parsi legacy is a testament to how a small community has made a massive impact on India's industrial, scientific and cultural development despite representing just a tiny fraction of the population. They reportedly make just 0.004% of India's population, but their contribution has been immeasurable. This is the story of the Parsi. From Jamshedji Tata, who laid the foundation of India's industrial revolution, to Dr. Homi Bhabha, the father of India's nuclear program. The Parsi influence is like a secret ingredient that's added flavor to India's growth recipe. The Tata Group started as a humble textile business in the 19th century and has now grown into one of India's largest business giant, with its listed entities' combined market capitalization at Rs 30 lakh crores. Jahangir Tata took to the skies with Air India, and Ratan Tata kept soaring, expanding globally and championing philanthropy. In 2023, Ratan Tata's foundation pledged millions for healthcare and education, proving the Parsi spirit of giving. And let's not forget Adair Godrej, who unlocked a whole new world by founding the Godrej Group, introducing India's first locks and safes. Today, it's a global sensation known for its eco-friendly products and commitment to social responsibility, perfectly embodying Parsi values of philanthropy. Talk about building dreams. Palanji Mistry turned construction into an art form with Shapurji Palanji. From iconic skyscrapers to vibrant residential complexes, this powerhouse is shaping skylines worldwide. Cyrus Poonawalla, the mastermind behind the Serum Institute of India, is a health superhero. Producing over 1.5 billion vaccine doses a year, he took center stage during the COVID-19 pandemic by churning out the AstraZeneca vaccine. That's a Parsi powerhouse, making the world a healthier place. Also, did you know Freddie Mercury, the legendary frontman of Queen, attended boarding school in Panchgani, Maharashtra? With his incredible voice and flamboyant stage presence, he proudly celebrated his Parsi roots while giving us timeless hits. From innovation to philanthropy to music, Parsis have made their mark everywhere. Despite their shrinking numbers, now less than 60,000, they continue to shine bright and inspire.
Canada has provided credible, irrefutable evidence of ties between agents of the government of India and a murder of a Canadian citizen on Canadian soil. Now it is time for India to live up to what it said it would do and look into those allegations.
Welcome back. You're tuned into Business Lunch on CNBC-TV18. MasterCard that has opened its largest global facility in India in Pune, and this is placing an even bigger bet on India to power its global solutions. Shireen Bhan caught up with Michael Maybach, the global CEO of MasterCard, to learn more about the company's plans in India. Listen in to the snippet of that conversation.
In all of your visits here over the last 20 years, what do you believe has been the most significant change?
So when I look at India, first of all, in the broader global ecosystem, I sense the sense of optimism about the India opportunity. So MasterCard isn't a standout from that perspective. We're deeply involved in the market, so we might have a deeper view than others. And from that perspective, what I've seen, particularly over the last 4 or 5 years, when previously at product in MasterCard and now at the CEO role, is this tremendous growth of the digital economy in India. So as India leverages technology to pull more people into a more inclusive digital economy, that's a real standout. That obviously is a tide that lifts everybody's boats, including MasterCard's, and we're happy to be on that journey. So I like that. Yesterday we launched a very big facility here in India. One of our 7 tech hubs has been launched in Pune. It's about 6,000 people there in a state-of-the-art facility.
So where does that leave the growth algorithm that you've laid out for the company? What does it mean now in terms of future launches? What does it mean in terms of further expansion? And, any new ideas that you're working towards taking forward? Any announcements that we should expect globally or here in India?
So our timing is in a way good, but it's also not that good because on the 13th of November we have our Investor Day coming up, and I don't want to preview the Investor Day with you today. But the opportunity that I just talked about, long-term, secular opportunity around the digitization of the world. There's a whole host of things you can do to make those payments smarter, safer. The passkey launch here with biometrics in India is only one aspect. It's interesting, that one, I'll just dwell on that for a moment because it's a global opportunity. So underneath that is a tokenization engine that basically takes your biometric details and puts it into a one-time token that's passed through the system, and if it's ever hacked, nobody else can do anything. It's only for one-time use. A lot of detail, but this is the vision of the RBI. This is what the RBI put out and said this has to be a safe payment ecosystem. India is the first pretty much completely tokenized market in the world. We have 240 million tokens here in India. Now, we see the whole world being tokenized following India's example. That's a tremendous growth opportunity for us.
And you can catch the entire conversation with the global CEO of MasterCard tonight at 7:30 p.m. only on CNBC TV18. Let's move on, and at the India Gaming Convention, Karnataka's IT Minister Priyank Kharge positioned the state as a thriving hub for gaming and animation. Highlighting its strong infrastructure and innovation-driven environment, he also emphasized on the sector's potential for job creation and foreign investment. Listen in.
Well, we already run the Center of Excellence for Animation, Visual Effects and gamings in the state of Karnataka, which is churning out a lot of startups with original IPs. So we intend to collaborate with the industry leaders in the gaming sector for three things. One is gaming, one is helping us incubate and create more IPs from the state, and number three, try to help us with innovations as well. We intend to be the skilling capital of the sector. We intend to be the incubation capital of the nation, and also the innovation capital in the sector through collaborations.
Okay, on that note, we're going to slip into a very short break. But after the break, we'll bring you updates on US, what they are doing, and they're urging Israel to address humanitarian concerns in Gaza. We get you more after the break.
Baba Siddiqui actually had police protection. It was non-categorized police protection, but still he had 2 + 1 constables with him. That means that during the day, 2 constables were deployed for his protection, and in the night, 1 constable. This makes this matter even worse. Remember, Baba Siddiqui, who was a loyal Congress political leader, in February, he shifted sides and he joined NCP Ajit Pawar. This means that he was a political leader of a party which is in the government, is a part of ruling alliance. And despite police security, he was shot dead on Dussehra night, a night when police security, police deployment is anyway at its peak in Mumbai. The clarity on motive is yet to come, but what has been established by Mumbai police that this is a case of contract killing. These 3 accused, one Gurmail Singh, hailed from Haryana. He's a 23-year-old person who actually has a record, a criminal background. He has extortion and murder cases against him, and it is believed that when he was in the jail, at that time he established a contact with some members of the notorious Lawrence Vishnoi gang. There are 2 more other shooters, and both of them are from UP. One is Shiv Kumar Gautam and one is Dharmraj Kashyap. Now, Dharmraj Kashyap was arrested by the police along with Gurmail Singh, but Shiv Kumar Gautam managed to flee away. He's still absconding. It was yesterday, on Sunday, a Facebook post went viral. The Facebook post was uploaded by a person called Shubham Lonkar. In that person, now this person is allegedly a member of Lawrence Vishnoi gang, and in that social media post, he hinted that it was Lawrence Vishnoi gang which was responsible for this shootout, and Baba Siddiqui was attacked, was killed due to his proximity to Bollywood star Salman Khan. And it's known fact that Salman Khan is on on Lawrence Vishnoi gang's radar for a very long time now. And the reason cited by the Vishnoi gang is the black bug case. Now, after that, Mumbai police said that they are looking into this post. They are trying to verify its authenticity and the whole context. Later in the night, that was yesterday night, a person called Praveen Lonkar was arrested by Mumbai police. Now, this person, Praveen Lonkar, is said to be Shubham Lonkar, the person who uploaded that Facebook post, his real brother. Now, Mumbai police said that both the Lonkar brothers, they were the ones who, orchestrated this whole conspiracy and the killing. Now, there are 3 more accused who are wanted by Mumbai police. There is another angle which is panning out, that is a disputed SRA slum rehabilitation project. Now, that was...
Welcome back. You're tuned into Business Lunch on CNBC-TV18. The United States has urged Israel to address humanitarian concerns in Gaza, giving Israel 30 days to take action or face potential restrictions on military aids from Washington. NBC's Ala Gurani has more details on this.
The State Department has today confirmed that the Secretary of State, Antony Blinken, and the Defense Secretary, Lloyd Austin, have co-signed a letter addressed to the Israeli government. In it, they demand that the Israeli government improve humanitarian conditions in the Gaza Strip. The Gaza Strip that has suffered some of its worst death tolls and shortages of food and medicine since the beginning of the war on October 7th last year. In fact, James Elder of UNICEF has said that almost no food has entered the northern part of the Gaza Strip since the beginning of the month of October. This as the country and indeed the region brace for Israel's response to Iran after it sent missiles and rockets toward Israel following the assassination by Israel of the Iranian proxy leader Hezbollah Hassan Nasrallah. The question is going to be what they target and where they strike. Senior administration officials have told NBC that Israel has promised not to strike nuclear or energy facilities. Meantime, Israel is waiting for the complete setup of the THAAD anti-missile defense system. Several troops have already arrived, and the first few components for that missile are already in country, with more on the way.
Okay, let's move on to some news from the SEO Summit. External Affairs Minister S. Jaishankar is currently attending the summit in Islamabad. He is the first foreign minister to visit Pakistan in about 9 years. Jaishankar, who arrived in Rawalpindi on Tuesday and exchanged handshakes with Pakistan's Prime Minister Shahbaz Sharif at the dinner ahead of the multilateral meeting. No bilateral meeting is scheduled to take place during his one-day visit, but Jaishankar is expected to raise concerns about terrorism and issues concerning the Global South. And moving on to some news from Jammu and Kashmir, where Omar Abdullah of the National Conference took oath as the Chief Minister. Jammu and Kashmir finally has a government after it became a union territory in 2019. Meanwhile, his party colleague Surinder Kumar Chaudhary took oath as the Union Territory Deputy Chief Minister. In recently concluded elections, the National Conference Congress Alliance won a comfortable majority in the 90-member assembly. Let's get you some other updates. Heavy rains lashed Chennai and 6 adjoining districts, prompting a red alert from the IMD. Schools and colleges are shut and rail services have also been thrown off gear. The Tamil Nadu government said that the disaster response teams are on standby. Several houses were submerged due to the downpour. Meanwhile, the IMD has issued an orange alert for Bangalore. The Karnataka government has issued work from home advisory after heavy rains lashed through Bangalore. Several roads and tech parks face heavy waterlogging, forcing schools and colleges to shut down. Rainfall is likely to remain for the next 3 days. So yes, keeping an eye out on the rainfalls in the southern region. And with that, we're absolutely out of time on this edition of Business Lunch. Thank you so much for tuning in. And Midcap Radar up next, so don't go anywhere.
Bhubaneswar SRA project, where Baba Siddiqui, recently his son Jishan Siddiqui staged a protest when the contracts were shifted from one set of builders to another set of builders. So this dispute could also be one of the reasons why Baba Siddiqui's murder was ordered. But there are larger questions, and Mumbai police are looking for the answers, whether or not Lawrence Vishnoi gang is actually responsible for this, or is it just a distraction tactic to divert the attention from the real motive.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Another down day for our own markets. This is in line with what was expected, what's happening with the global space as well. But yes, we started with cuts which were lower. That has actually accelerated now. The mid-caps, they are the ones which are down around 0.3%. Bank Nifty slightly outperforming. But in the market, it's very individual in terms of stock moves today.
That's right. Morning the GIFT Nifty indicated a gap down. We saw a sharp recovery intraday, but that hasn't held on. But quite a lot lined up on the show. Let's start off with the top headlines. Markets off opening highs. All key sectoral indices trade in red. Mid-cap index down nearly 150 points. Auto and tech stocks under pressure, while financials eke out some gains.
HDFC AMC shares surged to a record high as Q2 earnings come in above estimates, driven by a beat on AUM growth and yield expectations. Other AMC stocks like UTI and Aditya Birla Sun Life also gain in trade.
KEI Industries slumps in trade on the back of a muted show in Q2 FY25. Profit and margins miss street estimates. Management sticks to revenue guidance of 15 to 17% and EBITDA margin guidance of 10.5 to 11% for FY25.
Rallis India sees a stellar 15% gain in trade today on the back of good Q2 performance. Company's EBITDA and profits see healthy double-digit growth. Management says EBITDA aided by volume growth and better cost management.
Zydus Life under pressure as company receives a setback from the US court over a generic drug used to treat cancer. US court rules against generic defendant pharma company MSN's claim, with whom Zydus had exclusively partnered for the drug.
Okay, all right, those are the top headlines. We'll discuss them in greater detail, but the market today is very stock specific. The advanced decline ratio is largely in favor of the declines right now. There's a wee bit of recovery that we're seeing on the Nifty from the lows, but it's still a cut of around 86 odd points. We have most of the sectoral indices which are in the red today, barring Nifty financials. Most of them in the red. We have the Nifty auto space, which continues to be sluggish, 1.5% lower there. That's second day running that we are seeing that weakness in the auto space. IT too is contributing to the losses that we are seeing today. But we do have some earnings expected and a lot of earnings reactions which have come by as well. But yes, Nifty IT has recovered from the lows.
Nifty IT has recovered quite sharply from the lows in the last half of trade. That's an important spot. Quite a lot of the mid-cap IT names have actually recovered, names like Birlasoft, etc. But when you're talking about the broader end of the markets, Hormaz has all of the stocks on its radar. This is our special segment, Mid-Cap Movers. Hormaz is standing by the wall to take us through the mid-caps that are moving around in the session.
It's a stock-specific market indeed, so we will start off with the losers then within the broader market, since the mid-cap index is underperforming in today's session, and most of those stocks are skewed towards the declines. In KEI Industries at one point was down 10% after results, 6% lower now, slightly off the lows of the day. BSC, we'll hear from the management in just a bit, so keep an eye out on that. Cochin Shipyard and Balrampur Chini both down to the lowest point of the day. AMCs are doing well in today's session after HDFC AMC's results, and the reaction on the other peer companies too, almost 5 to 13% worth of gains seen in today's session. Pharma is not having a very good day in today's trading session. That's the sectoral loser in today's trade. 2 to 4% down. Almost all sectoral constituents of the pharma index are trading with losses in today's session. Stocks that are gaining on the back of very strong volumes, and Aditya Birla Sun Life, as you just mentioned, on very strong 14% higher now. Railtel on the back of the order win. BEML won an order yesterday. Now the stock is up in today's session, and PNC Infratech on the back of yet another order win, up another 5% in today's session. And lastly, some other gainers within the broader market space. Amber Enterprises, after the JV that it signed yesterday with a Korean company, 7% higher. Ace and Sterling and Wilson too seeing healthy gains in today's session. Back to you guys.
All right, Hormaz, thank you so much for joining in. With that, we'll do one thing. We'll slip into a short break. On the other side, we have an exclusive conversation lined up with Sundaraman Ramamurthy, who's the MD and CEO of BSE. They have completed 1 year of launch of BankX derivatives, and there's a lot more to talk about with him as well. So stay tuned for that.
I have a solemn duty to perform. 4 days ago, we lost a great son of India. The passing of Mr. Ratan Tata filled us all with immense grief. He was a dear friend of my father-in-law, of Mukesh, and of our family. He was also a mentor to Akash. He was a visionary industrialist and a philanthropist who always strove for society's greater good. As a mark of respect, may I request all of you to stand and observe a minute of silence in the honor of Sir Ratan Tata. Om Shanti Shanti Shanti.
Welcome back. You're still tuned into Mid-Cap Radar. Let's get an important conversation going now. BSE today completes 1 year of launch of BankX derivatives. The stock so far this year has doubled, mainly after the SEBI's proposal to tighten norms for F&O trading. We have a lot to discuss on the show today about this. We are joined by Sundar Ramamurthy, the MD and CEO of BSE. Mr. Ramamurthy, good afternoon. Thank you so much for joining in today. And BSE is something that everyone's talking about, a lot of action happening there. But first up, let's talk about this 1 year anniversary of BankX. How has the journey panned out in last 1 year? And also we saw some changes which SEBI proposed recently. One of them is moving from that weekly to monthly expiry. How have volumes changed there? What are the trends that you're seeing?
Namaskar and good afternoon. Thanks for having me in the CNBC studio for this program. Exactly 1 year before this day, we relaunched the BankX derivatives. The journey has been really very pleasant and smooth. In short span, we were able to see very good amount of participation from the market participants. Around 450 plus brokers are trading this product now, and around 110 FPIs are participating. A huge amount of contracts have gotten traded, around 643 crore contracts have gotten traded in this. It's really the great support and trust of the entire market into this product that made this possible in such a short span of time. SEBI has recently come out with a requirement that for an exchange, there can be only one weekly contract of a benchmark index. Sensex is the benchmark for BSE, and we will have weekly contracts on that. So naturally, therefore, BankX contracts will move to monthly. We feel that option products, as you know, are very versatile products. Every product has its place. Weekly had its place, and the volume spanned out according to that. Monthly products have a very important role and very important place and lot of advantages. We are sure that the market participants will continue to show the same amount of trust and support, and monthly contracts of BankX will also pan out to be as sound as what the weekly contracts were.
Mr. Ramamurthy, hi, good afternoon, sir, and congratulations. Prashant here. Could you tell us, did you consider choosing the BankX for the weekly contract, or was it always going to be Sensex?
In our minds, we always had Sensex in our mind, because see, Sensex is an index which is the oldest benchmark index of the country. And today, if you look at any common man, even if he trades any other index, if you go and ask him in vernacular, "Bazaar kaise raha?" he will say, he will talk in number of points, Sensex has moved up or down. In a common man's mind, it is still Sensex. Probably that is one of the major reasons why, you know, that when we launched the Sensex derivatives contract, people were able to immediately relate to it and trade in it. So given that unique position of Sensex, we did not want to take it away from a weekly product and put it monthly. So our choice for a weekly product has always been.
So I have two questions. One, so there is the sort of course, emotional appeal. I mean, I think it's the best known in a way, almost a synonym for markets, right? Sensex, everyone knows it. So that makes sense. But in terms of pure business considerations, volumes traded on the Sensex and the BankX, was that telling you a different story, or that kind of aligned with your thought process? And second, now that the NSE has sort of chosen the Nifty, is there a rethink at all that maybe you should offer the BankX, or no?
So for us, what we have been always looking at it is, let me first answer your first part of it. The volumes at Sensex are higher than that of the volumes in BankX. So that, but notwithstanding that, that has not been the consideration for choosing Sensex or BankX. The point for choosing Sensex was exactly what I told you before. The second question was part of whether we should rethink on Sensex or BankX. No. As I always tell, we have been benchmarking ourselves with ourselves. We have been trying to see how better we can perform tomorrow compared to yesterday. So given the inherent strength of Sensex, we have gone ahead with it, and we feel that is the right thing that we have done. So there has been no rethinking on it.
Mr. Ramamurthy, after the imposition of these norms, what is the kind of change have you seen as far as trading behavior of market participants of concern? Has there been an increase in cash market volume activity, given that there is expected to be a dip as far as the F&O market activity is concerned?
Honestly, I feel that number of days that have gone post the changes are very minimal to assess a trend. There has been quite a few. There have been quite a few changes that have come in. So it is too early, in my opinion, to say that this SEBI requirement has brought in these type of changes. The volumes in the last 3-4 days have been lower in derivatives market. It could be for very many reasons. So to give a trend based on this is happening, I think it is a bit too early. We may have to wait and watch.
Absolutely. The execution would take some time, and that is when there will be clear trends available as well. Mr. Ramamurthy, there's been a lot of anticipation that there could be a change in market share gains. There could be movement of market share gains from NSE to BSE now because of the changes that we've seen. We were speaking to Angel One today as well, and there are varied opinions that we are getting. Some are of the opinion that there could not be big market share gains for BSE, while some brokerages also think that there could be. Just generally, what is your sense? What are some of the calculations that BSE has gone through to understand the trends here? Will there be a movement in market share from NSE to BSE, or just market share gains for you?
No, I always have been repeatedly telling this in the media. We have been looking at what more we should do. And in my opinion, combining different products and assessing a market share is not totally, it could not be taken as a fully correct thing. The products are very different. When people used to ask me in the initial days, jocularly I used to tell the market share of Sensex is 100%. Because whatever it is doing, it is what it is doing. They are unique products, you see. They are very complementary products. So we are not looking at our success in terms of what market share we are garnering. We are looking at our success in terms of how much we are deepening the market, how much we are broadening the market. If you recall, even before the SEBI rule, we have always been talking about deepening of the market and broadening of the market through monthly contracts. To start with, when you start with a weekly product, but subsequently you want to go to more participants, different types of participants, different types of time horizons, and more of a monthly product.
Mr. Ramamurthy, I hope you will be a little more specific also. I completely get your point that, I think you put it very nicely. Sensex market share is 100% because everything which happens there. But it is, you would acknowledge, right? Markets, BSE is a traded stock. From the time, 30th of July, when the SEBI proposals came through on F&O, the BSE stock is doubled from 2,500 to 5,000. So obviously, there is expectation. It's driven by expectation that you will gain share. So without combining different segments, as you said, in options, could you tell us what is BSE's market share in the options segment, right? Index options, and any expectations? Where would you like to be? What do you see?
See, since you're asking for specifics, people talk about 20% market share, 25% market share in terms of notional. I would repeat that we track our success not based on market share. If you ask me, what were the number of market participants last year, what it is this year, what you are planning to have next year, I'll be able to give you a number. That's how we track our success. We started with 8, we went to 250, we went to 350, today we are talking about 450. The target is at least 600 brokers should be participating in BSE's derivatives segment. We started with no FPIs, today we are at around 110 FPIs. We feel that at some point of time we should reach to a number of 500 FPIs. Today we started with no product, we had one product, now we are talking about 2 products. At some point of time we should have at least a couple of products. So that is the way we are looking at it. That is the honest answer for this question.
You're not giving us a number. Let me put it another way, right? So, for example, we had the Angel One management with us. They said that overall futures and options volumes, industry level volumes, because of what SEBI has done, could drop 20 to 22% is what they said. The management said. My question to you is, for the BSE, just because of the F&O changes which have been implemented, which will be implemented as per SEBI direction, the latest ones, is it possible that BSE may gain relatively? Because if the total pool is 100 and say it drops to 80, and you are at 10, but you gain say 10%, and on a relative basis you're gaining, but because the absolute size is shrinking, on an absolute basis, standalone basis, BSE may not gain much. Is that the right way to look at it?
Honestly, I do not know whether it is right or wrong, because that's not the way I am looking at it. What I am looking at it is, if I am doing today X number of contracts, I want to do 2X number of contracts tomorrow. I want to do X number of contracts more, Y number of contracts more day after tomorrow. Why do I say that? This is a product which is in nascent stages. Compared to a mature market where you have 800 market participants already working as brokers, I have only 40% or 50% of them with me. That is not sufficient for me. So in real basis and in absolute basis, I am working to increase the volumes of myself. Do I benchmark it in terms of acquiring market share? No. I am benchmarking it in terms of deepening and broadening my market. I feel my volume should go up and will go up because it's a nascent product. It has not reached that levels of maturity and that levels of participation. More participation brings more maturity and therefore more volumes. That is the way, honestly, we are looking at it from BSE.
Got it. Is that number of overall market volumes, F&O market volumes, falling 20 to 22%? Now, this is not about BSE, but overall market volumes, F&O volumes, is that a in the ballpark correct estimate, what we got from Angel earlier?
I will not be able to comment on the number, but overall market volumes, will they fall for the entire market put together? Clearly there is a probability, because weekly products have been taking the attraction and attention of the market participants. And there were multiple weekly products that were available. Now going forward from November 20, there will not be multiple products, right? There will be only 2 weekly products available. Since weekly products were taking most of the volumes, in the short run, till the monthly products pick up, certainly there will be a decrease in volume overall for the market. What percentage it will be, that is anybody's guess. We have not fathomed any guess there, because we feel that we need to work to increase the market volumes under all circumstances. We feel that monthly has a role to play, we should work to increase the volumes. Therefore, we have not, when you're asking, when you say whether there will be a fall in market volumes, it looks like there will be certainly a fall, because the number of weeklies are reduced.
More than 10%? More than 10% or more than 20%? More than 10% or more than 20%?
I will not fathom a number. Because that is going beyond my remit to talk about what will be the fall in some other exchange. That is not my right way of doing it.
Okay. All right.
We tried hard.
Mr. Ramamurthy, thank you very much for joining us and appreciate you sort of giving us your perspective and broad take on some of the most hot button issues. And I hope post numbers when we speak, you'll be able to post quarterly earnings when we speak. You'll be able to share some of those numbers, and we can pencil them down. Thank you very much for joining us, guys.
Okay, all right. Thank you, Prashant, for taking us through that conversation. Thank you so much, Mr. Ramamurthy, for joining in. That's all about BSE, but we have to slip into a short break. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned.
Now I come to the schedule for Maharashtra. This will be in single phase. The notifications, date of notifications are in front of you. 22nd October would be date of notification. Last date of making nomination would be 29th October. Scrutiny on 30th October. And last date for withdrawal 4th, and date of poll in Maharashtra would be 20th 11. Counting would be on 23rd 11 24, and you will notice that date of poll is Wednesday. This is deliberately, which lot of scheduling, whatever goes into scheduling, we have tried that it is midday, so that issue of urban apathy is handled. झारखंड एक बहुत ही समृद्ध स्टेट है, बहुत ही उसकी विरासत है, और वहाँ पर हम फिर से अपील करेंगे कि सब वोटर्स अधिक से अधिक मात्रा में वोट दें. Schedule would be like this. Jharkhand would be in 2 phases. The date of poll, first phase would be on, date of poll would be on 13th November, and the second phase would be along with Maharashtra on 20th November. So the date of issue of notification for Jharkhand phase 1 would be 18th, and for phase 2 would be 22nd, along with Maharashtra. Nominations for phase 1 would be till 25th of October, and for phase 2, 29th. This slide we will share with everyone. And date of poll would be 13th November and 20th November, both Wednesdays. And date of counting would be 23rd 11, that is Saturday. With this, we end our presentation with the request that through you, that all the voters of Jharkhand and Maharashtra कृपया बाहर आइए, कृपया वोट करिए. लोकतंत्र के उत्सव में आपकी भागीदारी कि हम बहुत ही रिक्वेस्ट करते हैं, अपील करते हैं आपसे. थैंक यू वेरी मच.
We're now in the bunker that we found underneath a Lebanese house in a Shia village only a couple of kilometers from our border. This bunker was ready for Radwan forces, for a battalion of Radwan forces to enter into this bunker and do a raid into Israel and do a larger scale of massacre than the 7th of October. They were planned with the motorcycles here to go to Kiryat Shmona, to Iftach, to villages.
Welcome back. It's a 92-point cut on the Nifty. The mid-caps are sulking too, but it's a very stock-specific market, and we'll keep tracking that for you. For now, that's all the time we have on mid-cap radar. Stay tuned. Your stocks when we return.
Inside Israel and conduct a massacre. And all our enemies should know, whether they are close or far away in Iran, they should know that we are determined. We are determined to supply security and safety to our citizens. We need to impose a 1701, a fully imposed 1701, this area, so Hezbollah can never be next to our border with such infrastructures that can do a Conquer Galilee plan like he planned. Hassan Nasrallah, this ruthless terrorist that we eliminated, that is responsible for the deaths of many people, not just Israelis, Germans, Americans, French, and others. The world is a better place without Hezbollah. The world is a better place without Nasrallah.
The Parsi legacy is a testament to how a small community has made a massive impact on India's industrial, scientific and cultural development despite representing just a tiny fraction of the population. They reportedly make just 0.004% of India's population, but their contribution has been immeasurable. This is the story of the Parsi.
A very good afternoon. Welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a day where we're seeing some amount of consolidation on the screen with a negative bias, you'd have to say. So currently we have the Nifty, which is down around 69 odd points, and the Bank Nifty, which is absolutely flat at this point. The mid-cap index also trading with a cut of around over 100 odd points. We do have a lot of cues lined up in the next couple of days, especially from the earnings space. So that's probably going to be top of mind in terms of what the markets are probably bracing themselves for. We have the likes of Bajaj Auto, which will be releasing numbers today, Infosys tomorrow, Axis Bank tomorrow. So a lot of cues in terms of earnings. Hi, Vinny.
Hi, good afternoon, Ekta. And yes, a lot of cues that we're keeping an eye out on. And today what's interesting is that the Nifty, Auto and IT, both of them are severely under pressure. Both of them among the top losers. So yes, because the auto names, whether you look at an M&M, that's under pressure today. And in the IT side, we do have Infosys, TCS. That's also a bit under pressure. So let's keep an eye out on earnings because those are going to be the important cues that we're keeping an eye on now, starting obviously this week and going on for a month. But let's get started with all your stock-related queries. And to solve all your queries and doubts, today we have our experts. We have Rajat Bose joining in with us, as well as Sharath Awasthi joining in with us this afternoon. Good afternoon, gentlemen, and thank you so much for joining in with us on the show. Rajat, I want to start with you and just let's talk about the markets, right? Last couple of days, we've seen that subduedness creep into the market. What are you watching out for in terms of the Nifty 50 as well as the Nifty Bank? What are we watching out there in terms of levels?
Good afternoon and thank you for having me. What I would like to say about the Nifty is that Nifty currently in a range-bound situation. Immediately, it needs to take out 25,050 to about 25,100. If it manages to do that and sustains above 25,100, then the next level to watch out for would be 25,400. On the other hand, suppose if it were to come down, then I would say that if it starts going below, say, 24,900, then it might test going forward 24,600. Unless that is taken out on the downside, it will be more like a range bound, someday up, someday down, that kind of a situation. Regarding Bank Nifty, I would say that Bank Nifty, somewhat a similar situation, but slightly weaker. Bank Nifty needs to take out 52,200, 52,400 range. And on the downside, if Banking Nifty were to fall below 51,500, then 51,000 might also be tested. So it's a range-bound scenario, as you said, that more numbers are coming. And on the basis of that, the direction of the market will be found. Generally, looking at the Nifty, it is kind of a consolidation. But if it were to fall below 24,500, then it will be down.
Okay, all right. Well, 52,400 to 800 are important levels that you're watching out for on the Bank Nifty. That's the word coming from Rajat. Well, let's get in our first query for the day now. We have Joseph, who is joining in on the line from Kerala. He's made investments in Sundaram Finance. Hi, Joseph. Afternoon.
Good afternoon.
Go ahead. You have a question on Sundaram Finance.
Yes, I'm holding 500 shares of Sundaram Finance, holding at an average price of 330.
Okay.
Would you explain me the future prospects of this share, please? Thank you.
Okay, your average cost, your average acquisition price, if you could repeat it again?
330 per share.
350 per share?
330, 30.
Okay, 330. So you're sitting on a good profit. Excellent profit. And that's what I just wanted to clarify. What is the extent of the profit that you're sitting on? So you want to know what to do with your current profits, whether you should go ahead or, book some profits there. Sharad, let's go over to you. It's a massive gain that Joseph is sitting on when it comes to Sundaram Finance. What would you recommend? Do you recommend, he should probably just stay on and wait for higher levels? Or do you think it's better to probably skim some profits off?
Yeah, I think it's already gone up to nearly, 5 times price to book. I think a year or two ago it was trading at 2 times price to book. Though I think the business ramp-up has been good, the type of diversification after the merger, that's very much in place. So now the retail book is also a very strong book. It's not largely a vehicle, second buyer, this vehicle financing company now. So I think the volatility numbers from here on should be much lesser. The growth rates have been good. The new initiatives the management has taken have worked out very well. But I think at 5 times price to book, maybe I think, most of the positives are more than priced in. Though they can continue to improve from here on also. So I think in a staggered way, what you could do is you could try exiting every time it goes higher. Because we are expecting a year-end rally kind of scenario. So maybe over the next 2-3 months, you could gradually exit it whenever you get a price, a higher price, whenever the stock goes up by say 5-6%. On that day, you can trim 25-30% of your exposure. Because at these valuations, I don't think in the long term it makes much sense to stay put into it.
Okay, so gradually start selling. That's the word coming in there from Sharad. But Rajat, what's your word on the technicals? Are you also concurring with what Sharad is saying? And, maybe start selling is the best option for the viewer on a divided basis?
I would say if I were in his shoes, I would start selling if it falls below 4,800. Otherwise, if it doesn't fall below 4,800, then what can happen is that it might once again try to scale up 5,200 to about 5,500 kind of range. But once that goes, definitely you start booking profits, or else if you book profits, first sell at 4,800, then 4,650, and thereafter wait for 4,400. But in a staggered manner, you sell, but at least hold a part of your portfolio, because it is a 17 times kind of, or say maybe 15 times kind of appreciation. So don't sell everything. This is a great company. Even going forward, you will make good money if you continue to hold it.
Okay, surely keeping an eye out on Sundaram Finance, and obviously staggered manner, one could look to sell. That's a word coming in from both our experts. Let's move on to the next query, and Krishnamurthy is writing to us from Coimbatore. He's holding 608 shares of PFC at a price of 277 rupees per share, and 324 shares of REC at a price of 343 rupees per share. So obviously they make a good amount of profit in both these stocks. Wants to know the future prospect of his holdings. Sharath, coming to you, in the last 1 month, at least looking at PFC, quite flat, not much of a move that we're seeing. But let's not forget that both these stocks have seen a very sharp run up in the last 1 year, 2 years when you look at it. So what should one be doing with PFC RSC? Long term, is it still a good bet?
Yeah, I think in the long term, it would continue to be a good bet. But the period that we are talking about over the last 1.5, 2 years, they were seeing a very strong re-rating. Both PFC and REC were trading at 0.3, 0.4 times price to book. So I think they have normalized over the last 1.5, 2 years. And now they're trading at 1.5, 2 times. And the renewable energy portfolios for both companies should do very well. REC probably is already at a price to book of around 2. PFC probably is comparatively cheaper at 1.6 times price to book. This is all what has been reported. And I think in forward terms also, both these companies should find it very easy to grow 15-20%. And most probably you would not have much of a GNPA hang for both these companies over the next at least 18 to 24 months. And for them to trade at 2 times price to book would not be very difficult. So I think REC is more or less there. Maybe whatever earning accretion happens over the next 12 months, that will add on to the book value and the multiple thereon. But comparatively, I think PFC is a better idea to hold on. But return expectations, yeah, they should be normalized unless and until these companies can prove that they can continue to, latch on to the opportunity of having very high disbursements without any pressure on GNPA and margins. I think that is something most people would want to look into. Now the valuation catch-up story is over. Whether they can get re-rated or not is something that is to be seen. And re-rating is something that does not happen very often in the markets. So it's better that you use the rallies over the next, 3-4 months to exit part of it and maybe diversify into some other stories that you get an opportunity to buy at a later date. But if you're a long-term investor and you're not bothered, you want to stay in for 5 to 10 years, I think then probably they still make sense. But expect annualized returns of 15 to 18%, not the kind of return that they've seen over the last 18 to 24 months.
Okay, Rajat, what about you? What would you recommend on both the twins, PFC, REC?
Regarding PFC, my take is that if it manages to get past, say, 500, then continue to hold it. Because 50-day moving average has not been crossed for quite some time. It is at 492. So that's why I said above 500, continue to hold it. And if it fails to take out 500 or 490 to 500 range, then you should sell. Otherwise, if it were to fall below 440, then also you sell. But at least book some profits because there are some signs of distribution. But you may hold part of it, but do not hold the whole thing because the correction will eventually happen. Regarding REC, it's almost a similar kind of a situation. Here, if it were to fall below 500, then sell. And if it manages to stay above, say, 560, 575 kind of range, then expect further upswing to about 625 or so. But if it were to come to those range, that is 600 to 625, definitely book some profits or else get out of it if it falls below 500 on closing price basis.
Okay, all right, got it. So that's on REC and PFC. That is the trade deficit data, which is coming for the month of September. It's going to come in at a total of around $20 billion, and this exports should come back up for you as well. We'll get back to the data, but nonetheless, that's the September trade deficit data, which is flashing on your screen. 20.78 billion, which compares to around 20 billion on a year-on-year basis. So year-on-year, it's pretty much been the same. and 34.58 billion in terms of exports, and that too has been stable on a year-on-year basis. Well, we now have Poonam, who writes to us from Mumbai. She holds 152 shares of Titan, which she's bought at around 3,000 rupees per share. So she's sitting on a profit on this one. And she's asking, she wants to know what to do, whether she should hold or book her profits. Well, Sharad, let's come to you first on Titan. What would your recommendation be? The earnings are coming out, but from a medium to a longer term perspective, what would you recommend?
Yeah, I think it's been an excellent story over the last few years. Carrot lane kind of businesses could do very well even going ahead. I think they could be the flavor, going ahead, because the women workforce in the country is going to go up substantially. And I think the urban landscape should also increase over the next, long term, 2-3 decades continuously. So that should help that part of the earnings, even the lifestyle part of it. Though other than gold, rest of the divisions have not really racked up much of growth over the last few years. They've not become very material to the company. And I think gold and jewelry remain the dominant positioning. And I think even there, gold jewelry as such is not getting a lot of traction. And when you are trading at, 70-75 times 1 year forward, and expected growth of sales of around 16-17% and a bottom line growth of 20-25%, I think the stock is a tad expensive, though it has corrected a bit from the upper levels, 10-15%. But even then, I think 70-75 times is a bit too high on the valuation front 1 year forward. And I think you would get opportunities to buy it at much lower levels. So I think one should try to exit at current prices, or maybe gradually, over the next 2-3 months, whenever you get an opportunity or an uptick in the stock. But long-term investment wise, I don't think at these valuations, it makes much sense to stay put in Titan.
Okay, that's the word on Titan. But on that note, we're going to slip into a very short break. Don't go anywhere, because we'll be back with more of his stock-related queries on the other side.
From Jamshedji Tata, who laid the foundation of India's industrial revolution, to Dr. Homi Bhabha, the father of India's nuclear program. The Parsi influence is like a secret ingredient that's added flavor to India's growth recipe. The Tata Group started as a humble textile business in the 19th century and has now grown into one of India's largest business giant, with its listed entities' combined market capitalization at rupees 30 lakh crores. Jahangir Tata took to the skies with Air India, and Ratan Tata kept soaring, expanding globally and championing philanthropy. In 2023, Ratan Tata's foundation pledged millions for healthcare and education, proving the Parsi spirit of giving. And let's not forget Adair Godrej, who unlocked a whole new world by founding the Godrej Group, introducing India's first locks and safes. Today, it's a global sensation known for its eco-friendly products and commitment to social responsibility, perfectly embodying Parsi values of philanthropy. Talk about building dreams. Palanji Mystery turned construction into an art form with Shapurji Palanji. From iconic skyscrapers to vibrant residential complexes, this powerhouse is shaping skylines worldwide. Cyrus Poonawalla, the mastermind behind the Serum Institute of India, is a health superhero. Producing over 1.5 billion vaccine doses a year, he took center stage during the COVID-19 pandemic by churning out the AstraZeneca vaccine. That's a Parsi powerhouse, making the world a healthier place. Also, did you know Freddie Mercury, the legendary frontman of Queen, attended boarding school in Panchgani, Maharashtra? With his incredible voice and flamboyant stage presence, he proudly celebrated his Parsi roots while giving us timeless hits. From innovation to philanthropy to music, Parsis have made their mark everywhere. Despite their shrinking numbers, now less than 60,000, they continue to shine bright and inspire.
Canada has provided credible, irrefutable evidence of ties between agents of the government of India and a murder of a Canadian citizen on Canadian soil. Now it is time for India to live up to what it said it would do and look into those allegations.
Welcome back. You're watching Your Stocks on CNBC-TV18, and we have our experts who are solving your queries today, Rajat Bose as well as Sharad Avasthi. Let's keep it going, and the next query that we have is on Nykaa. Karan is writing to us from Ahmedabad, who's holding 20 shares of Nykaa at 185 rupees per share, wants to know whether he should continue to hold or maybe look to sell at current levels and switch to something other than this, because they are making slight bit of a profit there, not much there. It's almost near the buy price, so it's quite flattish, but they've, at least managed to come back to their buy price. So, Rajat, I'm going to come to you. What's your word on Nykaa? Anything on the technicals that's looking exciting, and can we expect the stock to actually, do better and start seeing an uptick now?
It has been correcting since, I think, mid-August, when it was around 230. And now it has come down to 187. What I see is that around 180, the 200-day exponential moving average is located. And once that is tested, if it were to go below that, then it would be very weak. Currently, all the moving averages, other than 200-day, they are actually giving indications that further fall ahead. Further fall in the sense that 9 and 20 are showing a bearish crossover. Both are coming down, as well as the 50-day moving average, which is also coming down. So it is better that one gets out of it, because I really don't see that immediately there would be any kind of major recovery in this stock. On the other hand, it is likely to go further down. So my suggestion is, any rally you get out. Otherwise, if it goes below 180, then also exit.
Okay, all right. So that's on the technicals of Nykaa, which has run up around over 25% in the past 1 year. But what would your recommendation, Sharad, be on Nykaa in terms of the fundamentals? They've been sort of doing a lot of these partnerships, etc., in the past couple of months as well and quarters. But what's your sense in terms of what your recommendation would be fundamentally, considering that the competition is rising in the space?
I think competition is rising, but companies like Nykaa and Honasa have come in with a different kind of brand positioning that they are positioning themselves. And I think the products are much better than the normal run-of-the-mill FMCG products that are available from the renowned companies as well. So I think that place, both these companies score handsomely above most of the FMCGs. And I think if you look at the next line of management, or the people who are to follow up in the footsteps, the type of detailing that they have regarding the products and the profile of the company, I think they have a very clear understanding of what they are here to do. So I think trajectory wise, these companies should do very well over the next 10, 15 years. But valuation wise, it's a bit of a stretch. I think FY26 you are expected to report 1.5 rupee. Maybe it becomes too good, and what we were expecting 1.5 years back, maybe 3 rupees. Even then you are trading at 50-60 times. So I think the valuation is a bit of a stretch, but if you're a long-term investor who wants to stay in a concept, I think a concept product-wise, they are in an excellent space. The management is very good, and I think even the next level of management has very good clarity regarding what they want to do. So they tick most of the boxes. I think valuation is the only concern. So maybe if you get it, cheaper on any correction, I think that is the time you should lap it up big time. And what you have currently, if it doesn't really bother you much, you can continue to hold and maybe keep an eye on the lower levels where you can add more and stay put for a longer term. Short term, 1 or 2 years, I think, you may not be in a very sweet spot to make some money out of it. But long term, the type of tie-ups they are doing and everything else they are doing, I think that's a very good space they can manage. Regarding valuations, if it is traded as simply as a platform business, then maybe forward they are trading at 6 times EV to sales. Optimistically, they could trade at 8 times EV to sales. So even in the short term, if the markets are good and it's optimistic and the numbers continue to be good, there is a possibility you could see 20 to 30% upside. But generally, I think this is a good idea that you should continue to hold for the long term. You should have an 8 to 10 year horizon. I think these companies could deliver very stellar numbers and have a staggered approach to use the dips, big dips in the markets to accumulate these stocks.
Okay, all right, fair enough. Sharad as well as Rajat, on that note, we're going to wrap up on the show. Thanks very much as always to in answering all of the queries that we've got. Well, we leave the markets with a little bit of a negative bias at this point in time, just about consolidating. Nifty down around 45 odd points. Closing bell up next.
Baba Siddiqui actually had police protection. It was non-categorized police protection, but still he had 2+1 constables with him. That means that during the day, 2 constables were deployed for his protection, and in the night, 1 constable. This makes this matter even worse. Remember, Baba Siddiqui, who was a loyal Congress political leader, in February, he shifted sides and he joined NCP Ajit Pawar. This means that he was a political leader of a party which is in the government, is a part of ruling alliance. And despite police security, he was shot dead on Dussehra night, a night when police security, police deployment is anyway at its peak in Mumbai. The clarity on motive is yet to come, but what has been established by Mumbai police that this is a case of contract killing. These 3 accused, one Gurmail Singh, hailed from Haryana. He's a 23-year-old person who actually has a record, a criminal background. He has extortion and murder cases against him, and it is believed that when he was in the jail, at that time he established a contact with some members of the notorious Lawrence Vishnoi gang. There are 2 more other shooters, and both of them are from UP. One is Shiv Kumar Gautam and one is Dharmraj Kashyap. Now, Dharmraj Kashyap was arrested by the police along with Gurmail Singh, but Shiv Kumar Gautam managed to flee away. He's still absconding. It was yesterday, on Sunday, a Facebook post went viral. The Facebook post was uploaded by a person called Shubham Lonkar. In that person, now this person is allegedly a member of Lawrence Vishnoi gang, and in that social media post, he hinted that it was Lawrence Vishnoi gang which was responsible for this shootout, and Baba Siddiqui was attacked, was killed due to his proximity to Bollywood star Salman Khan. And it's known fact that Salman Khan is on Lawrence Vishnoi gang's radar for a very long time now. And the reason cited by the Vishnoi gang is the Black Bug case. Now, after that, Mumbai police said that they are looking into this post. They are trying to verify its authenticity and the whole context. Later in the night, that was yesterday night, a person called Praveen Lonkar was arrested by Mumbai police. Now, this person, Praveen Lonkar, is said to be Shubham Lonkar, the person who uploaded that Facebook post, his real brother. Now, Mumbai police said that both the Lonkar brothers, they were the ones who, orchestrated this whole conspiracy and the killing. Now there are 3 more accused who are wanted by Mumbai police. There is another angle which is panning out, that is a disputed SRA slum rehabilitation project. Now that was son Dhyaneshwar SRA project where Baba Siddiqui, recently his son Jishan Siddiqui staged a protest when the contracts were shifted from one set of
Taiwan index as of now is down 1.3%.
There have been divergent views on whether or not spectrum for satellite communications is to be allocated or is to be auctioned.
We need to take out the previous high, which is 25,234, before we talk about higher levels.
So will the street buy into that commentary? That's going to be very important because there were shots that got into the system.
My bet is on tower companies. There are a couple of them which are very efficient, which focus on BSNL.
25,020 on the Nifty. The Bank Nifty is down about 0.25%, 51,787.
Growth for the full year FY25 should be in the range of 18 to 20%.
This option rationalization and ticket size change is would not be an instrumental to change in platform.
We said, okay, we're going to double down here because we have the talent, we have the scale aspect.
It's another quiet session for markets. At least the morning has been.
Focusing on earnings, we're expecting strong earnings growth both sequentially and year-on-year.
In spite of a revenue growing 2.3% odds, our actually costs grew less than 1%.
Another down day for our own markets. This is in line with what was expected.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is a day so far, and I must say, as we say hello and welcome to you, market has turned into the green. For the first time since, I think, 10:30 in the morning, the Nifty is back in the green. We're up about, down 1.2 point, but we did hit green territory. This is Closing Bell, last hour coming up from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema, Surabhi here in the studios, and Nigel from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. The low today was 24,900. So that recovery that you're talking about is about 150 points from lows now.
Yeah, but I guess from the lows and the highs, the band is just 200 points. So the day so far is not leaving us any wiser in terms of who's winning the race, the bulls or the bears, right?
Well, that's right. But the big boy has woken up, right? Reliance Industries. Just take a look at that stock. You know, it's underperformed for the last 6 months or so. But intraday, big recovery from the low point of the day. And that seems to be the one that's fighting for the bulls as we speak.
That's basically means that the Nifty is up 150 points from the day's low, 24,900, and we're at 25,050. So clean 150 points is what that recovery translates to. The Reliance, of course, is adding 30 points to the Nifty on the positive side. But HDFC Bank is also adding about 30 index points. And the others are Bharti Airtel and HDFC Life. Life is minor, about 4 points or so. Bharti is adding about 11 index points at this point in time. So that's essentially what's going on. Just a quick look at the Nifty Bank as well. It's absolutely flat. It's not really gone anywhere, but direction has been slightly weakish. I mean, it's been sideways through the course of the day, course of the session. You look at the broader market breadth, it was clean negative at one point, but it's turned now. And you got about 1360 stocks higher and 1350 stocks which are lower. So this is as flat or advanced decline ratio as it gets. Nearly 1:1 to the last sort of stock out there. 10 stocks separating, at least on my screen, a number which are up and numbers which are down. Reema.
So taking stock of the day so far, so auto is the top Nifty loser for the second day in a row. So auto index is down 1%. And here it's M&M and Hero MotoCorp with cuts of nearly about 2%. The top Nifty loser is Trent, so 3.5% gone. In fact, this entire week, Trent has been under pressure and the sluggishness on Titan continues, so Titan down another 1%. IT2 on the back foot, so Infosys ahead of numbers tomorrow has lost nearly 1%. On the way up, HDFC Bank has been doing well since the start of trade. Reliance Industries, we've been talking about it, that's had a late move. HDFC Life, the top Nifty gainer on the back of the growth guidance being upgraded. And then you've got a couple of other names like Dr. Reddy's, Grasim, Bharti Airtel too. There is an HSBC upgrade. They've raised the target price. So Bharti Airtel too, higher in trade.
Let's not allow the mid-cap index level to fool us or even the advanced decline ratio to fool us, because you'd imagine that it's absolutely even, Steven, nothing is happening. But, the action in the broader market is actually, there's a lot beneath the surface. For starters, look at AMC stocks. Yesterday it was about insurance companies, big moves in those stocks happening. Today it's about AMCs. HDFC AMC 6.5%. Aditya Birla Sun Life AMC 13%. UTI AMC 6%. So one clear theme is that there's money moving to the asset managers. The other interesting stock is actually again from the Aditya Birla Group. I'm talking about AB Real Estate, the erstwhile Century Textiles, that they've gone through a brand makeover, image change, name change. But it's a business that really seems to be fired up with a lot of launches. Some of them very close to where we are, near our offices right here in Worli. That's a stock that's up about 7-odd%. Even other names, there's Thyrocare, there's Gopal Snacks, Rallis is up 15% on results. So yeah, let's not go by the index. There's a lot going on at the individual stock level. Nigel?
Well, that's right. And the top gainer on the Nifty today is HDFC Life. And that's the point we made earlier today. Was the street a little bit too, bearish on the stock by the end of yesterday's trading session? Management came out. They said that things are pretty much, on course. AP growth of 18 to 20%. The margins, they believe, was hit because of a couple of factors like a higher share of ULIP, as well as those price increases got a little bit delayed. And the street has bought into that. And that's why you had a couple of brokerages, namely CLSA as well. They were quite optimistic on the prospects of the company with a target price of 805 rupees per share. Well, let's find out how to trade the index from here. Mitesh hasn't been very, very positive on the index. Mitesh, tell us what's your call now on the Nifty and the Nifty Bank. For the time being, we're as flat as can be. But both yesterday as well as today, we recovered more than 100 points in the day's low.
Good afternoon, Nigel. So, I haven't been positive, but I've also maintained that we are going through a contraction kind of a phase. The next expansion will come once we move out of this range, and on the upside is about 25,300. The downside is about 24,800 and 24,750 zone. So give and take 50 points. I think that's the broad range which I think the markets will do. As of now, on the hourly and the 2-hourly charts, the contraction signals are still there. We are not turning away. So I believe that next few days could well be within this range. And there is some downside because the weekly indicator is turning down. So if you break 24,800, 750, we might have a slightly stronger correction. But for the timing on an immediate hourly, 2-hourly chart basis, I think it looks like we are, just going into sideways consolidation. So we have, last couple of days, we have avoided trading the index, and that's how we are approaching things. We are very, very stock specific. In fact, somebody was talking about the AMC companies into focus. I think it was Survey, and UTI AMC is one of our recommendations. I would recommend to buy here with the stock below 1280. Look at targets in excess of 1400 on the upside. And the second stock which I like is HPCL, which I would recommend buying with a stop at 425 for targets of 455.
Okay, HPCL is doing well as well. Yeah, absolutely. Mitesh, thank you for that. Aditya Birla AMC is the other one, which is up 13%. Now that's been an underperformer, relative underperformer. It's been a good year, but over long periods, it's not really done very much. Was at about 730 or so in 2021. It's now at about 790. So it's had a few years where it's not really done very much. But this year, up 70%. And a big move today as well. All right, well, let's talk about capital market plays and stick with that space. So we spoke with the CEO, MD and CEO at BSE and Mr. Ramamurthy. And we sort of touched upon basically 2 or 3 things. One, will overall market volumes fall? By how much? Second, will BSE gain market share? And 3, what are BSE's plans and aims and ambitions to increase its product offering? Listen in.
Yeah, I feel that number of days that have gone post the changes are very minimal to assess a trend. There has been quite a few. There have been quite a few changes that have come in. So it is too early, in my opinion, to say that this SEBI requirement has brought in these type of changes. The volumes in the last 3-4 days have been lower in derivatives market. It could be for very many reasons. So to give a trend based on this is happening, I think it is a bit too early. We may have to wait and watch. We track our success not based on market share. If you ask me, what were the number of market participants last year, what it is this year, what you are planning to have next year, I'll be able to give you a number. That's how we track our success. We started with 8, we went to 250, we went to 350, today we are talking about 450. The target is at least 600 brokers should be participating in BSE's derivatives segment. We started with no FPIs. Today we are at around 110 FPIs. We feel that at some point of time we should reach to a number of 500 FPIs. Today we started with no product. We had one product. Now we are talking about two products. At some point of time we should have at least a couple of products.
Okay, that was the BSE talking about the impact of the change in the F&O norms. Today, incidentally, we also caught up with Mr. Dinesh Thakkar, the chairman and managing director of Angel One, who says that Angel does not see too much of impact from the shift to the True to label fee structure. However, he does expect a 20 to 22% drop in F&O volumes at a market-wide level. And because of this, the impact for Angel in terms of revenue, because of the F&O regulations, that could be as high as 14%. Take a look.
Saying a label, because we have done few changes in cash delivery, and we have started charging on non-cash collateral which customer provide. We charge interest on that. I don't agree that volume would be so drastically lower, because based on kind of an analysis that we have done, total impact on our net income would be in the range of 13 to 14%. But when we come to drop in F&O volume, my estimate would be drop would not be more than around 20 to 22% maximum.
All right, so that was Dinesh Thakkar earlier. You know, we actually brought up this question on the shift in trading preferences. Now both exchanges will have only one product. The Nifty, the NSE will have the Nifty expiry. The Bombay Stock Exchange will have the Sensex expiry. Will this still mean a shift in more volumes towards the BSE? That's the question, that's the debate. We have Prakash Diwan joining in. Prakash, the stock BSE has rallied big time in that anticipation, right? You don't have 4 or 5 different products from the NSE. You have one Nifty now. So whether this will mean better business gains as people shift to the Sensex. What do you think? Mr. Thakkar was of the opinion that preferences don't change that quickly. Where do you stand on the debate?
Good afternoon, Surbhi. So, yeah, I mean, I do understand that NSE actually has lost out on the potential business opportunity because the number of contracts has come down. BSE marginally would have had some impact, but not necessarily very big. So from that perspective, BSE hasn't lost much because of the change in regulation, or could potentially not lose much. But, you know, there is this whole propensity to look for day trades and intraday trades and short-term trades. And that's where a lot of penny stocks get picked by retail investors. So people who find contracts out of reach, or, you know, the variability of contracts not sufficient enough for them to take a wager, you would have people wanting to get into penny stocks for sure at some point in time. And we've already started seeing the demand for penny stocks go up. Whether that translates into a behavioral change is yet to be seen. So as you rightly said, it's not something which will happen immediately. But the element of seeking to do short-term trading is very strong in the market even now. So if
no, Prakash,
something else will fill that gap.
No, so the question that we were trying to sort of wrap our heads around is, assume that I'm a trader, and for the sake of simplicity, I'm spending 100 rupees trading different products through the week, right? Till now, I could do a Nifty expiry, weekly expiry, then a Bank Nifty expiry, the Financial Services Index, that expiry. I was playing 4 or 5 different products, spreading my 100 rupees across 5 products or 4 products, right? Now I can do only one with the National Stock Exchange. So will the remaining money that I'm left with, will that go to the Sensex as the other expiry? Or will I simply double up my position on the Nifty? And, you know, the benefit remains with the National Stock Exchange in that case.
Okay. So, no, let me make a slight change in that hypothesis. If I had 100 rupees and if I were a trader, I actually chose to use that same 100 rupees every day to participate in some weekly expiry. So it wasn't spread out over 4, which means that it wasn't like 25 bucks each. It was that same 100 that was getting used. In between now, between let's say the Sensex and the Nifty expiry days, the traders will look for other things, and that's what I was trying to explain. Could probably be those penny stocks and smaller stocks. So it's more of a short-term trade, objective. How they do it, what they use is yet to be seen. But that's what I meant. So I don't think there's going to be a very major change. I mean, Mr. Thakkar already said 14%, 13, 14% is a impact on revenue, which is significant enough. If that gets digested, then life will go on as normal. So I think another month or so, and we'll probably not be discussing this anymore.
I really hope so. I'll just give you an anecdote, folks. I was with an elderly gentleman a couple of days back, a gentleman who's beyond 60. He's talking about a group of other retired gentlemen like him who were only into options trading. I mean, they say mutual funds is okay, that's separate. But, F&O is a new hot thing. So I don't know. I think the whole regulation is aimed at exactly this strata, right? Whether it's effective or not, I think we'll have to wait and watch. Whether it's the have money, will trade psyche, whether that changes or not with the new
Were they making money?
Sorry?
Were they making money, did you ask? Or
I think at that time they politely wanted to change the subject.
But, yeah. All right, let's move on and talk about other stocks. Now, RailTel is surging in trade on the back of a new order from MADA. Vinny is here with the significance of this order. Vinny.
So absolutely, what's interesting is that RailTel has been winning these orders, especially in the last 1 month. After it's received its Navratna status, it has received a lot more orders because it becomes an ease in terms of this post the status, because the company has been able to give an outstanding performance that is given by the government. So a thumbs up coming in from the government, at least when they receive the Navratna status. Now talking about the order specifically that they received yesterday, it's a 79 crore order, and this is from Mahara. They will be using this to set up, migrate and manage the data centers for MADA, and disaster recovery is also something they'll be focusing on. Last 1 month, they've received almost 6 orders, and all of them are ranging, somewhere between about that 50 crore mark to 100 crores is the range. So good orders wins. They've been consistently receiving orders, and execution of these orders is now going to be the key. But today, the stock is surely buzzing in trade, and higher levels in the last 2 years. When you look at it, the stock has already run up 300%. Last 1 year, 100% uptick, and order consistency is something that we're keeping an eye out on.
Thank you very much for that. That's RailTel. Prakash, I wanted to get your view in on Rallis India. Now, numbers are good, like a steady set of numbers, 11% higher. It's just after 6-7 quarters of muted numbers. This time, you are seeing some, positive numbers from Rallis, and the stock has moved up 17%. It's just that in those 7-8 quarters when the numbers were muted, it's not that the stock didn't perform. Year to date, the stock is up 50%. In the last 1 year, it's up 71%. What does one do with Rallis India now?
So, Rima, I think Rallis, the move in Rallis in terms of the business numbers is actually representative of this entire sector that's likely to undergo this change. And I'll tell you why I believe so. Brazil is coming into its crop cycle now. I mean, it is exactly reverse of what India goes through. And there is a huge element of, expectation or anticipation that a lot of new agrochemical molecules will be put to use, not the older ones, because the chase for yield is so severe. They have a lot more to catch up in terms of their food accumulation targets and all. So what's going to happen is the government is supporting that. There's wide acceptance of the usage of agrochemicals of a very high range. The number of SKUs which are getting sold is far more now. And I can tell you, I mentioned this about 2 weeks back, that if you look at a Sumitomo or a Rallis or a Bayer, these are the names that have a very, very strong, robust library which could benefit. And that's something which has already started happening in terms of restocking. I think this is a secular trend. If you had to buy Rallis, if you haven't participated in yet, at lower levels, even now the momentum is in your favor. So you will see this happen to a lot of marquee names. Rallis, of course, offers you that comfort in terms of valuation as well.
Okay, all right. Hi, Prakash. What about RailTel? I missed your view on that. Vinny detailed, all the good news that's coming in there with regard to that order win. But your view on the stock, it's up 8%.
Yes, so, what's happening, Nigel? RailTel has started getting recognized and accepted as a service provider on a lot of the telecom and data center solutions. It's no more only doing work around the railway. I mean, it has participated in everything that the railway needs in telecom spaces because of its fiber optic network, which has been there for a long time. It's just that now everybody is recognizing and putting that to use because it's become very high in terms of the value chain that they participate in. Earlier, they were just providing a network. Now they're going ahead and doing multiple things in terms of forward integration. So you can imagine this is not a metro from Bangalore that's given an order. This is MADA, which has got nothing to do with railways, but still it's the capabilities that have got functionalized. I can tell you one thing. This is while the orders are 79, 80 crores is small one-off in terms of what benefits it accrues, but over a period of time, once they have order book which is robust enough, there'll be a lot of recurring revenue that will start percolating down to the P&L. And that's actually going to change the dimension of what this business looks like. I think it has legs. It's run up quite a bit because of this catch-up in terms of its capabilities. But I think it could still continue growing at 20-22% CAGR for the next 3 years. Now, how soon the stock price reflects that, I really wouldn't know. But at least the business growth is very clearly evident from Railtel.
Okay, all right. Prakash, thank you very much for joining in. Good having you on and getting all of that perspective today. We do have to take a break, but when we come back, we'll have Vinay Jaisingh of JM Financial joining in with some more market thoughts. Back with that in just a moment.
The set of builders. So this dispute could also be one of the reasons why Baba Siddiqui's murder was ordered. But there are larger questions and Mumbai police are looking for the answers. Whether or not Lawrence Bishnoi gang is actually responsible for this, or is it just a distraction tactic to divert the attention from the real motive?
Welcome back. Now, HDFC AMC shares have surged about 6.5%, and it's a new record high for HDFC AMC. The trigger is Q2 earnings were strong and ahead of street expectations. In fact, it's pulled up the other AMC companies too. So UTI AMC is up 7%. Nippon is up close to about 3%. So Vamakshi joins in to tell us more about HDFC AMC's numbers, what brokerages are saying, and a quick valuation comparison of all the listed players now. Vamakshi.
Well, Rima, HDFC AMC is definitely having a stellar run in the trading session today after the company reported a strong set of numbers in the second quarter. Additionally, the management also shared positive commentary on the company's future outlook. Brokerages in response have raised their target price as well as their estimates for this counter. Jefferies has retained a buy and raised its target price to 5,450 per share. They are expecting 24% CAGR in AUM from FY24 to 27, driven by higher growth in equity AUM. They've also raised their EPS estimates by around 4 to 8%. CLSA, on the other hand, has also upgraded its rating on this counter to outperform. They've raised their target price to 4,920 rupees. They've raised their FY25 AUM growth expectations to 29%. They've lifted the EPS estimates by 5 to 9% over the next 2 years. However, on the other hand, Citi has a different call. They have a sell rating on this counter, and that is mainly being driven by the rich valuations. So I had a look at how all of these companies stack up as far as valuations are concerned. When you look at the returns that all of these companies have posted on a year-to-date basis, we've seen a significant re-rating in all of these counters. We are seeing gains anywhere between 50% to 70%. Resultantly, HDFC AMC, the price to earnings basis, the FY25 estimate stands at 43 times. Nippon Life AMC2 is trading at elevated valuations of 36 times. ABSL AMC, that is Aditya Birla Sun Life AMC, is slightly reasonable at 25 times, but UTI AMC is trading at the lowest valuation possible, that is at 21 times. And keep in mind that when we compare all of these valuations to the 5-year average, for most of these companies it is above their 5-year average, but UTI AMC is trading at the 5-year average mark.
All right, Vamakshi, thank you very much for that. Vinay Jaisingh is now joining us. He's Managing Director and Head of Portfolio Management Services at JM Financial Services. Vinay, good afternoon. Good to have you with us here. Thank you very much for joining us. AMCs, right? I mean, lesser, I think out of everything in the capital market space, maybe the least spoken about sector. We speak about exchanges all the time because I guess there's only one, and stocks done so well. Brokers occasionally, yes, but AMCs is kind of not a cool, is not seen as a cool space. Do you own any, and what are your thoughts here?
So we've been nibbling in, a couple of AMCs, but the thought is pretty simple. If India is witnessing a $35 billion equity inflow from DIIs from April 1st, which implies in 6 months you've added as much as you have ever added in a year as a whole. So the inflows to the equity market is fantastic from DIIs. You add to that, between 11 and 25%, the market, the larger cap have moved by 11 to 12%. The smaller caps have moved between 25 and 30%. So you add to that the mark-to-market amount to the AMCs. So they've had a fantastic 6 months. The entire basket would have grown far more than what you and I would have estimated 6 months ago. It was difficult to decipher either the inflows or the quality of movement in the market this year as well as less. So the base is a lot more higher. Where we are pondering on to the point for the AMCs, and especially the larger cap, is when global AMCs are available at half the valuation, how long is this liquidity growth rally going to last? And if the answer is long enough, then these stocks augur a very serious look.
Hi Vinay, good afternoon. Good to see you in. What about stock exchanges?
As far as stock exchanges are concerned, there's one and one unlisted one. So as far as stock exchanges are concerned, I think you've seen the good run for BSE happened. Now, the story of what's happening in the option market and how the volumes come off, are seeming to be correcting, which means basically if, let's say, earlier analyst Pooja had an EPS for FY26 for, let's say, a BSE at somewhere close to 102 to 104. That number has to correct down by 5 to 2%, and the stocks had a healthy run. So technically, we are not buying more of the exchanges currently and looking at opportunities to probably trim down some of them.
Vinay, afternoon. Rima here. There are two key concerns which are emerging for India according to you. One of them is slowdown in the credit growth rate, and two, earnings downgrades for the near term on account of lower consumption. So how are you positioning your portfolio for this eventuality, possible eventuality?
Sure, thank you. So first is we are underweight the financial sector because we are seeing a slowdown on the credit growth rate. Second, we are underweight in IT, again for the same reason. Having said that, what we are looking at is what do we buy where we can see growth? The first space where we are going overweight is the pharmaceutical space, where we've gone overweight substantially. The second is industrials and cap goods. So these two spaces are where we are putting our longer term bets on, and we're taking it out from the financial and the IT and maybe a little bit of the consumption space as well. So that's how we are weighing ourselves. By putting more weight on the pharmaceutical space, we are also playing the Make in India story, because lots of the pharmaceutical companies we like are CDMOs, not just for domestic but also looking at global markets. So we are taking the pie of what if the dollar were to appreciate into that basket as well.
Vinay, we have this IPO that's going to be opening up in the next few days from the Vare Group. And suddenly this renewable energy space is getting a lot of attention. And there are various ways to play it. Solar modules, solar cells as well. We had Premier Energy that listed, in fact, blockbuster listing over there. How are you all approaching this theme? You had an SME company that went up 100 times, I think, in the last 3-4 years. And they as well raised some money. So how do you all play this theme? Power as well as energy, renewable energy mix.
Exactly. So in the capital goods and industrial part, virtually half our weightage is in the power sector, because we think India is, net deficit power. You're going to see as much as the capacity power has today coming up in the next 5 years, and about 70 to 80% of that, maybe 350 odd gigawatts would be coming up in, or maybe 400 would be coming up in clean energy. So for us, there are companies like Tata Power, NTPC, which give you both the plays. If you look at simple companies like Tata Power, at one end, people think it's a generating company, it's a coal, hydel generating company. But if you see the incremental capacity which Tata Power is getting, it's largely in clean energy. Second, technically, Tata Power today has more capacity in solar modules and cells than even Premier Energy. If you were to put the valuation of a Premier Energy into Tata Power, you're getting a large cap at, I would say somewhere between 15 and 17 times 1 year forward earnings, much lower than its historic past. So, that's the way you're looking at it, Tata Power. Similarly for NTPC, the same story, but here you're getting a cub which will get listed sooner than later in NTPC Green as well. Having said that, we're also looking at the players who are going to provide equipment to the power companies, be it Inox Wind and Energy, or be it Sterling and Wilson, which had stellar results which came out. So we are nibbling on to these names, but power for us is a very big, weightage, 15 to 16% in our overall portfolio in ND.
Okay, by the way, look at the market. It's suddenly taken a bit of a knock. We are down 75 points. Remember, we started the show, there was some green on the screen. But there's a lot of volatility on the screen as well today. And the Nifty has again dipped below the 25,000 mark. That's the decline that I'm talking about. So 230 we were in green, and suddenly the dip is back on. Among the stocks, there are big losers. Trent stands out on the Nifty. Trent is actually the weakest stock on the Nifty this afternoon, almost a 4% cut. And then you have some auto names like M&M and Hero Moto as well. So that's the market right now. Vinay, hi, good afternoon. Great to have you on. So my question to you is really on consumer, and what are you doing? Because there are too many moving parts, right? There are the likes of Trent. They've gone on and created maximum wealth this year. Then you have this whole lab-grown diamonds issue, which has been an overhang of sorts on Titan. You have the snack makers. These are, of course, mid-cap names like Gopal and Pratap, and suddenly they're getting very active. Traditional FMCG companies like Dabur are sounding worried about quick commerce. So there's too much going on in consumer. Are you playing it at all? And if yes, in what way?
So, last year, if you'd asked us the question, the biggest, I think one of the biggest alphas we would have got apart from defense and railways would have come from Trent. We're still holding on to companies like Trent and even Varun. When they correct a bit, we start buying them, because the story of Trent is, India's biggest consumption player. And as you're aware, India is 60% all about consumption. Here, Trent is actually increasing its market size altogether, from being, a pure retailer to getting into lab-grown diamonds, as you put it, but, to also be getting into different skewed data as well, as far as people who are their consumers, be it the ultra-rich who could go to a Zara, or people going to a Zudio, or even people going to a Star Bazaar. So that's something why we think Trent, yes, it's corrected today, but if you see its run, it's been super healthy, YTD or in the last year or two. And that's something we will keep on holding on to and even nibbling, if the price corrects. Varun on the other side is, I would say Pepsi's second biggest bottler outside US. And the company is only increasing its footprint. The stock has had some kind of a correction, and they're looking at, some kind of fundraise for expansion. History shows us, whenever Varun has raised funds and done some kind of expansion, it's succeeded in improving its utilization rate. So these are the two names we like. Apart from that, we did like food names like Pikaji earlier, but incrementally at the current price, we're not buying them. We're using our incremental money, as I said, more in pharmaceutical, the power sector, or the even if it's in financials, it's in the housing or the insurance part of the space.
You have Bharti within your portfolio, right? You own Bharti. Yeah, no, and so I'll ask you about this, but all the conversation on social media and otherwise has been about Starlink and what they may or may not be able to do here in India. So we actually decided to investigate a little bit about what exactly does Starlink want to do. Are they really going to be a competition for, incumbents, right? And local telecommunication players like Bharti, Voda, Reliance Jio, etc. And Rima, the short answer is no, right?
The short and the long answer both is no, for two reasons. One, because pricing in India is very cheap, right? Satellite communications, satellite technology is unlikely to be cheap enough to disrupt. So that's reason number one.
The terrestrial networks, on which we're running our 5G.
Exactly.
Okay.
So it's unlikely to be cheaper than that, right? Anything, if it has to disrupt in India, it's got to be on pricing. And secondly, it's unlikely to be even as fast as, forget 5G, even 4G. Okay. That's what the feedback is. So yeah, it perhaps.
There is, so I was talking to somebody who's done this on the technical side of things. There's also a technical reason that you can't use satellite tech through mobiles. You've seen those old Hollywood movies, right? Somebody hiding up in a hill and they got a sat phone. And they got to go somewhere and find the connection, right? So you got to turn your phone right to wherever
the satellite.
So it's apparently so basically the basic difference I understood is that mobile phones only work at low frequency, whereas the satellite phones will work at very high frequency. That's the basic reason why. It's incompatible as far as technology is concerned.
So you can't use it to make your regular voice calls.
Yeah.
But you can use it, data will be available. So you will have your WhatsApp, and through WhatsApp you will be able to make your voice calls. But pure regular voice calls that we make, that is not possible with satellite communication. But the use case today, which is what Airtel has also been pitching, that this is complementary to your terrestrial network, which is why they have been asking for it to be administratively allocated. So if what is complementary, wherever terrestrial network cannot reach, which means on in the middle of the ocean, on air, or in very remote locations in the middle of the forest, so to help bridge India's digital divide, that's where you want to use satellite communication. So for instance, in the US, when the hurricane Milton hit Florida, all the terrestrial networks were down, and it's that time when Starlink can be used. It can also be used perhaps by larger corporations as a as a connectivity backup. So that's another, potential use case. But if you want, as Airtel clearly says, if you want to use it in for providing, mobile connectivity in urban areas, in metro, to retail consumers like you and me sitting in Mumbai, then you go out there and auction the spectrum. So it depends on the kind of use case.
Absolutely. And of course, the other one is fixed line, but fixed line is not a large user base in that sense. So, but as far as mobile is concerned, it's is basically inefficient. Let's put it that way. I don't know if you have any thoughts. By the way, Starlink is now, I was reading, it's got 7,000 satellites up in the air. That's about 75% of all active satellites. And they want to launch another, they want to send up another 10, 20,000 satellites more. Any thoughts, Virey? This is, of course...
You might want to try keeping one in your pocket or in your purse and see the weight of it. And you will start appreciating your mobiles all the more. So
you mean the sat phone?
The sat phone.
Absolutely. So, sometimes we forget the basics, right? The people who've, obviously Bharti and Jio have succeeded so substantially in India because one of the biggest reasons also is the cost of the handsets and the quality of the smartphones which you have. And that's something you should not undermine when you come up with an older technology, which was used, as you rightly said, in remote linkage areas where you cannot put up a wireline or a wireless radio network and where connectivity is a must. That's where even in India, you would use a SATCOM. But if you want to use it among the masses, you need a big technology change in the costs of the handset, and more importantly, giving you the same features as, let's say, I'm not even talking about an iPhone, or a high-end Android, but even a 3G handset would give you, I think that's leaps and bounds away. So I wouldn't be as concerned of it as far as Bharti is concerned.
Starlink's ARPU apparently is $100. That's what, $8,000, right? Yeah. Oh, I don't know what Bharti is at, or...
$120 is what I read for Starlink. So yeah, 100, 120 must be.
And locally, it would be what?
In India, it's about, Reliance Jio was at 195, 195 rupees. And Bharti is a little bit more at 220, 230.
So there you have it, right?
I mean, the aspiration of Sunil Bharti Mittal is that Airtel should hit 300 rupees, right?
And of course, there's that's just the what you pay to use, but there is also the cost of equipment on which Vinay was talking about. Vinay, thank you for joining us. Good speaking with you. And thank you for being here with us today. Well, let's take a quick commercial break here. We're going to come back, tell you what's happening in dealing rooms, Nimish is, and what Nimish is picking up in terms of stocks where there is action. Stay with us.
So the Maharashtra government is rapidly clearing projects and announcing welfare schemes just ahead of the elections, despite the state's ongoing cash crunch. Just today, in what is possibly the last cabinet meeting before elections, the state government cleared a toll waiver in Mumbai, second leg of the Pune Metro project and the Daman-Ganga river linking projects. All this is likely to cost the state exchequer 18,000 crore rupees. The ruling coalition, including Eknath Shinde's Shiv Sena, BJP and Ajit Pawar's NCP, are continually introducing schemes designed to secure political gains or provide subsidies despite objections from the state's finance department. First, let's take a look at the key schemes. One of the most prominent is the Ladki Bahin scheme, which will cost the state exchequer 46,000 crore rupees annually. Under the Ladka Bhau Yojana, a program offering internships and stipends to unemployed men, the government will spend 5,600 crore rupees. The provision of free electricity to agricultural pumps will add 14,000 crore rupees to the state's expenditure. These and similar schemes will cost a total of 96,000 crore rupees. The government is also clearing several major infrastructural projects. The Orange Gate Marine Drive Tunnel will cost 9,158 crore rupees. The Thane-Borivali Tunnel 18,800 crore rupees and the Thane Circular Metro Rail Project 12,200 crore rupees. Additionally, the cabinet approved a 20,000 crore rupees cost escalation for the Pune Ring Road project.
The state also announced a subsidy of 50 rupees per day for desi cows registered in Gaushalas, costing the government 230 crore rupees. Now, why is this situation worrisome even for a state like Maharashtra? The financial burden of these schemes could destabilize the state's budget and affect its ability to secure new loans. The Finance Department has repeatedly warned that Maharashtra has already surpassed the fiscal deficit limit of 3% of its gross state domestic product, which stands at 42.7 lakh crore rupees. The fiscal deficit has already reached 2 lakh crore rupees for 2024-25, compared to 1.10 lakh crore rupees in June when the state's budget was presented. This figure has nearly doubled in less than 4 months. According to the Fiscal Policy and Budget Management Act, the state cannot raise more than 3%.
Welcome back. Some nervousness in the markets. We're down 80 points odd, but par for the course, one would say, because of the breadth of the market is still in favor of the number of stocks that are advancing. Good time to get in Nimesh, though. Nimesh, tell us, what are you picking up in terms of D-Street action?
Well, Nigel, for second day running, it looks like it's what happened yesterday as well. There is pressure in the large cap names, the Nifty names, so to speak, and at the same time, the broader markets are well bid by institutions. So the flow seems to be moving back to the broader market and mid cap and small cap stocks. At least that's the feedback that I'm picking up for the last couple of days, and that's the case today as well. Again, there's going to be there is small buying again, which has come back into the PSU names as well. So within the large cap names is the PSUs. It seems to be a bit well bid. I think from a sector point of view, autos are a bit under pressure. Looks like a bit of profit booking, and so is the case with IT as well on the back of what we saw on Nasdaq last night. But again, broadly the feedback is the volumes are on the lower side. The retail participation has slowed down a lot in the last many days is what is my sense is. And from an FI perspective, it's sell large caps and buy into the mid and small caps.
Oh, all right. Interesting. What about individual stocks, Nimesh?
Well, so in terms of individual names, the first stock is Ajmera Realty. A big move in the last couple of days. In fact, this week the stock is up more than 25% and large volumes as well. I understand the company is likely to raise funds from some influential investors where preferential issue. The board meeting is scheduled for 18. So that's something to track in Ajmera Realty. The second name is HPCL. The OMC pack did well in the morning, but within that, HPCL stands out on back of very strong buy flow. So within the three OMCs, it's the HPCL which is well bid for the last couple of days, and that stands today as well. The third is a couple of crude plays, both Interglobe Aviation and Asian Paints. Both have seen delivery-based buying in today's market, and they're slightly buzzing as well. So again, looks like more of a proxy play to the falling crude prices. And the last is Persistent. The stock is under pressure. The entire IT is under pressure today, but Persistent stands out in terms of buying flows. So looks like at lower levels there is buying, and especially some long-only funds seem to be quite active buyers in Persistent at these levels.
Okay, thank you very much for that. Those are some stock buzz that Nimesh has picked up. Mitesh is now back with us for a few BTST calls. Mitesh.
I think, looking at the market, we'll go with a mix of buys and sells. On the selling side, I'll take a STBT on Infi. I think it's come off after hitting the earlier highs. Might see some more consolidation, and in that, it could head towards the lower end of the range. We'll keep a stop at about 1927. Look for a target of around 1905 to over 1900 on the downside over here. And the other stock which I like on the upside is Loris Labs, which is a BTST with a stop at 476 for targets of 488.
Okay, all right. Mitesh, thank you very much for that. We'll take a quick commercial break here. There's 13 minutes to go to market close. Stay with us.
USDP in debt, which equates to 1.28 lakh crore rupees. The mounting burden from these schemes and projects will make it challenging for the state to manage its fiscal deficit.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting.
Welcome back. Well, the markets are seeing some bit of selling towards the end of trade today. The Nifty Bank is still doing a relative outperformance, but the Nifty is down close to under 100 points. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, who joins us on the show. Hi, Mayuresh. Good afternoon. Well, one stock that's moving against the trend is Welspun Corp. The stock actually had seen a sharp correction from the recent peak, and now it's pulled back, and on the technical charts as well as trading above its 20 DMA. I had a chat with the management. They were talking about their ductile pipes business doing well, oil and gas pipes finding demand, and Syntex could be the cherry on the cake, which has come into their fold. Your view on the stock at $720?
Afternoon, Nigel. No, I think we remain positive and optimistic. I think specifically in terms of the DI business, the expectation hereby is that over the next few years, the 16,000 kilometer network that we probably got should get expanded to around 28,000 kilometers. So you've got a huge pipeline per se of 12,000 kilometers that probably is expected to get added. And that gives a huge incremental advantage in terms of the order flows. That can come Welspun Corp's way, Jindal Saw's way. I think both the managements have sounded very, very optimistic in terms of the order visibility in this segment itself. The second element also is the kind of expectations on the overseas business. Aramco is doing a huge amount of capex. You've seen a lot of the exploration companies in the US do expenses as far as their pipeline network is concerned. And obviously, as you mentioned, Syntex, where the expectations of market share gains over the next few quarters can be a reality. I think the market size is relatively small, but I think they can make some good gains here. So yeah, have a positive view on Welspun.
Mayuresh, hi, afternoon. So at William O'Neill, say in the last 1 month or so, what are the big changes that you've made in your recommendations, either upgrades or downgrades? You want to take us through that?
Afternoon, Rima. Yes, I think one of the sectors is IT, where we've upgraded the sector as a whole, where our belief is that IT stocks should deliver, specifically on the mid-cap IT part, in terms of constant currency, in terms of margin profile. And therefore, I think anybody who's holding mid-cap IT stocks should continue holding. The second element that we are a little bit more selective about in terms of sectoral churn can be a few of these auto ang companies. Our own sense is that auto ancillaries will still continue doing a little bit better compared to the frontline auto stocks at this juncture. They obviously get the embedded advantage in terms of the replacement market, in terms of volumes, as well as pricing, which probably offsets some element of pain from the OEM players itself. So I think some burden that you're reflecting is something to continue liking. And very, very selective in terms of real estate and real estate ancillaries. Our take is that this sector will continue having a reasonable show as far as earnings is concerned. And therefore, urban smart spaces from the realty players, their recent project Aqua in Ahmedabad has received a humongous response. They just released on the BSE exchange that 500 crores has been received in terms of bookings, expected cash flows in excess of 2,000 odd crores, no debt on the balance sheet. So our own sense is that a bit of a mix of these domestic cyclicals might continue.
Okay. By the way, the cut on the market is now 96 points. So this will turn out to be a bit of a disappointing afternoon for the bulls. The 200-point band that we've traded in today, now the index, 6-7 minutes to go, is getting to the lower end, the lower edge of that band. Mayuresh, hi, afternoon. You know, we were just discussing the huge move in asset managers today. We don't see this often, but they're all moving in tandem, right? UTI, HDFC, AMC, Aditya Birla Sun Life, AMC. What's your sense? What's your take? How do valuations look? We all know the whole financialization story and, you know, the love for mutual funds. But in terms of just business and the stock valuations now.
Afternoon, Survi. No, so again, I think reasonably placed. But if you probably peg out how the next 2 to 3 years are expected to play out, and if one probably expects the inflows as far as SIPs are concerned to continue, which seems to be the case as a base case scenario, I think you're expected to see reasonable amount of growth come through. You've obviously seen a lot of launches happening, Survi, for a lot of these players, both in terms of thematic or key launches that are happening as far as individual AMC stocks are concerned. And therefore, with the kind of liquidity that is sloshing around in the system, as these NFOs get a good response, the mix that gets tweaked in terms of their equity and debt holdings as a percentage of the overall AUM, and the expectations in terms of stability, in terms of the overall operating costs, to probably manage that. The operating costs will just go a tad bit higher. But if the volume growth is significantly higher, the expectation in terms of EBITDA and earnings expansion might be far stronger over the next few quarters. Valuations is a totally different ballgame altogether. I think valuations are a tad bit on the higher side, as I said. But again, I think if growth is expected to come through, maybe the market gives that amount of, that little bit of element of those premium valuations. So yeah, HDFC, AMC, UT AMC is something that we continue holding on to our global portfolios.
All right, well, you know, we're at the low point of the day, but quite a few stocks are at the day's high. Godfrey Phillips was trading in the red just 5-10 minutes back. That's moved into the green. I'm looking at Karnataka Bank. That one as well has done a U-turn. So a few of these names should come up for you on the screen. Big U-turn is what we are seeing on these. And on the flip side, Oil India has come in for a pounding. That stock is now down close to around 7% as we speak. Big slide is what we're seeing in the last few minutes. Mayuresh, you want to come in on this one? Oil India, you know, we know that pricing is weakish, crude oil prices. It danced away to 81, came back to around $74 per barrel. Your view on Oil India at around 520 rupees, if at all?
So Nigel, again, upstream company is very, very sensitive in terms of how crude pricing will behave, and therefore their sensitivity to earnings will depend on the expectations of how crude as a basket is expected to perform, not just for the next couple of quarters, but for the next few quarters as well. And it's very difficult to take a call in terms of how crude oil pricing can be. One can make a base case scenario of around 65-70 as a bottom for crude pricing and 75, 80, 85 as terms of a top. But as they gyrate within this range, the expectations in terms of core realizations obviously vary for these companies. The second aspect also is that if there is significant movement, either on the upside or downside, you've got a high proportion in terms of either inventory gains or losses that come through on their balance sheet. And the third aspect, if crude remains low at a lower level, the accelerated costs of the capex that probably needs to come through probably just slows down a tad bit. And that probably impacts or might impact future earnings in terms of expectations of volume growth as well. Dividend yield extremely strong, but Nigel, the stock had also run up quite significantly over the past 1 year. So my own sense is that wait out for any decline on the upstream companies. You can take them as trading bets, as we always believe it.
Any thoughts, Mayuresh, on SW Solar? Stock is fell from 800, 820 to 550 levels, coming up, some repair there.
Afternoon, Prashant. No, so I think the entire pricing environment, when it probably comes to the end product pricing in terms of how solar tariffs are expected to behave, the panel costs and the expectation of how they are expected to fare as well, there is significant work that still needs to be done. I think China is still a big player when it probably comes to both panels, as well as expectations in terms of the input costs that are required to make the same. So I think it's a variable in terms of both these factors put together. Yes, it is corrected. There can be a dead cat bounce or a technical bounce that will come through. But in our opinion, I think power ancillary as a space, I think a few of the developers and a few of the EPC players probably look a tad bit more attractive. So Tata Power is something that we are keeping on our watch list. Within the EPC players, we've obviously got something like a Power Bank as an example that can probably do well over a long period.
Okay, all right, Mayuresh, we'll leave it on that note for this afternoon. Thank you very much for joining in. We have to start wrapping up a day that is ending on the lower side. Like I said, 200-point trading range, but we are closer to the low of the range than the high of the range. So with the Nifty ending, in all probability, below the 25,000 mark. So let's see where the weakness was. Trend has lost about 4% today, profit taking finally setting in. There are some of the auto names that have seen red as well. M&M down almost 3%, Hero Motor down 2%, Tata Motors has lost a little over 1%, iShares is down 1%. So the auto space definitely quite weak. Infosys saw a cut of about 2% as well. The other big names included the likes of Kotak Mahindra Bank on the way down. There was IndusInd Bank, ITC. These are some of the prominent losers in terms of today's action. Titan also losing a little over 1%. Nestle was down, so a couple of consumer names coming into the mix on the lower side of the screen. Talk about the stocks that managed to buck the trend. Some of the HDFC Group names have done really well. It's actually been a good day for the HDFC Group. HDFC Life is a nifty winner with a gain of nearly 2%. HDFC AMC, we've been telling you, has had a rocking day today. The tally on HDFC AMC as we are wrapping up is, I think, almost 6 to 7%. And then look at HDFC Bank itself, the big parent, 1% higher on HDFC Bank. Bajaj Auto, Bharti Airtel and Reliance, let's not forget. Reliance prevented a much bigger slide because it managed to hold on to a gain of just under 1%. But even then, the Nifty is ending with a cut of almost 100 points, Prashant.
No, absolutely. So that, bounds that we saw proved to be pretty fleeting and very temporary, and the market ending down quite, not very sharply, percentage point wise, it's about 1/3% or so. But that's what we had. So I'll just look at a few losers because they're easier to count. Although it was almost 1:1, if you had to look at the volume angle as well, I mean, I think it was still in the broader market with the winners. Big list of volume-led gainers is what we had. So maybe, I'll just look at, so the AMC names were all higher, HDFC, UTI, Aditya Birla. Names like Railtel, there was Rallis India, Amber. These are some of the outsized gainers that we saw today. IFB Industries was up 15%. Voltas was up, I think, about 3%. Orient Cements went up 10% today. Nuvama was a sharp mover. Again, capital market play. Action Construction. Newland was up 10% yesterday, another 5-6% today. That's Newland Laboratories. You look at something like a South Indian Bank, which was a big mover. Time Technoplast. Was up another 5%. And you had Stylum Industries, which went up. Stylum was up 15% actually on decent sized volumes. The entire artificial diamond story, Goldium is a play on that. Goldium went up sharply today in terms of trade. So that's essentially where a lot of the volume was. But I'm only, I think, counting 50% of the stocks there. As I said, volumes were, even though overall advanced decline was 1:1, volumes were on the side of what went up. Surbhi.
Yeah, absolutely. And by the way, I should just note the final close on Aditya Birla not Aditya Birla Sun Life AMC. That's a 12% move. But on Aditya Birla Real Estate, AB Real Estate, the stock earlier known as Century Textiles, this is its new avatar. That's the asset management company. Now let's talk about the real estate company, which is AB Real Estate, 8% up in its new avatar, no longer called Century Textiles. Yeah, this is the stock I'm referring to. So good day for this one as well. Okay, as we wrap out of this edition of Closing Bell, let's get you a voice that one usually doesn't see on television. We're talking about Mr. Venu Srinivasan, who was speaking earlier. In light of the recent quality issues and regulatory scrutiny faced by EV OEMs, our colleague Parikshit caught up with Mr. Srinivasan, Chairman Emeritus of TVS Motors and Chairman of the Indian Foundation for Quality Management, to ask him what his views are on some of these incidents that have come to light.
You have to plan for quality first and meeting customer requirement first. Innovation without those guardrails of quality and customer will have problems. But innovation also is what forces others to compete. Whether it's Bajaj or TVS, we all now got our products, but we've brought with us the expertise of quality and consistency. But others, the startups will also learn. It's not that they have problems. Every innovation has a problem. Tesla had a lot of quality problems, but they are also improving and getting on. So innovators will face problems. That is the first mover advantage they will have of creating the market, but they will then have to catch up with quality and customers. So that's part of the process of innovation.
All right, that's one of the biggest titans of Indian industry, talking among other things on issues surrounding quality and all the customer complaint updates that have been coming through for Ola. You can catch, of course, a lot more in that conversation with Pariksha. That will be coming up a little later this evening. Right now, it's a wrap on this edition of Closing Bell. Markets forward will pick up the action on the other side.
And formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18, weeknights at 7 p.m.
I have a solemn duty to perform. 4 days ago, we lost a great son of India. The passing of Mr. Ratan Tata filled us all with immense grief. He was a dear friend of my father-in-law, of Mukesh, and of our family. He was also a mentor to Akash. He was a visionary industrialist and a philanthropist who always strove for society's greater good. As a mark of respect, may I request all of you to stand and observe a minute of silence.
A volatile session sees the Wall Street end in the red. The Nifty and the Sensex see cuts of nearly 0.5%. Nifty fails to hold on to 25,000. Broader markets do slightly better.
Telecom Minister Jyotiraditya Scindia stirs things up with his comment that Satcom spectrum will be allocated, not auctioned, as the industry desires, on terms that are set by TRAI. He added that tariff hikes are needed to sustain further investments.
BSE falls almost 4% after Jefferies downgrades the stock. MD and CEO of the company, of the stock exchange rather, says that the overall F&O volumes will come down due to SEBI F&O curbs. Angel One's top boss, meanwhile, says that SEBI's revised F&O rules can impact the turnover in the F&O segment by almost 20 to 24%.
Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as you gear up for the next trading session. Today was slightly disappointing, especially because there was that flicker of hope around 2:30 when the market bounced, only to be faded. I'm Prashant. With me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. Well, yes, a volatile day, a narrow band, plenty going on, and finally we ended slightly lower, in fact, lower edge of that band rather than higher. We have lots of ground to cover over the next 20 odd minutes. We'll get you all the key developments and lots of interesting corporate voices that we caught up with as well. But first up, let's dive a little deeper into the trends today, Prashant.
I mean, a little bit of a sideways action, right? And individual stocks, I think, actually pretty similar to what we had yesterday. So not very much to really learn from the way the index moved, because it was down to sideways. There was a bounce and was sold, and we finally ended about 1/3% lower. So that's essentially large caps for you. Autos as a pack was lower, and IT was another pack, which of course has been doing well. So auto and IT, two pockets of losses. Maybe throw in the government pack, CPSE index as well. So these are the three sectoral losers that you really had. Mid caps and small cap indices also sideways, no real sort of direction in that sense. Advanced decline overall was about 1:1. But I have to say that you just sort this list by number of shares traded and throw in the volume element as well. And I think there, sort of bulls clearly had an advantage, because it was a very long list once again of volume-led gainers, as opposed to a long list of stocks which were down, but only about top 15 odd names had any volumes on them, as opposed to what was up, and it was at least 40-50 names with large and strong volume. So that kind of a day in terms of trade. News flow wise as well, or big earnings wise as well, at least during the course of the session, there wasn't very much really to take away. Surabhi.
Oh, absolutely. And now we had a weak handover from Wall Street. A lot of the Asian markets today were also down and out. So basically, short point is that we weren't alone in this kind of a performance. Most of the Asian markets were very sluggish. The Japanese market was actually down 2%. Hong Kong closed lower. And while we were trading, most of the European markets were also lower. So a bit of a global pause in that sense. If we talk about the weakest sectors, and as Prashant mentioned, autos was really a weak spot, and it was across two-wheelers, four-wheelers, pretty much across the board. IT was weak. A lot of the PSU stocks were losing ground as well today. So that was another sector which came in for some selling. In fact, there were hardly any outliers. You had insurance stocks do slightly better, and mutual fund stocks, actually, they soared. They were really the toast of town, and we'll talk more about that stock action as we go forward. I just want to highlight Reliance's role today, really important, because if it wasn't for Reliance, then what was a 100-point fall on the Nifty could have been even deeper. So need to keep that in mind. That was the one stock that was really fighting for the bulls today. We'll discuss the blow-by-blow account in terms of individual movers and shakers in just a bit. Here's the lineup. That sort of detailed stock-specific account will first come up. We will, of course, get to wait for all the action. Then a couple of stocks in focus today include Rallis India, Railtel, South Indian Bank, all of them zooming ahead in green territory. We'll tell you why in a moment. Some of the other names include the likes of HDFC, AMC. Like I said, it was a very good day for asset managers. That stock was up and about. KEI Industries reacting negatively. It's looking to raise some money from the market as well. And Zydus Life also on our radar. After this, we'll get to our popular segment, D Street Chatter. Nimesh is going to be putting the spotlight on Ajmera Realty and HPCL, both buzzing in today's trading action. And then, of course, we'll get to all the key events to watch out for, which will also include several important earnings. But first up, the movers and shakers with Vivek.
Well, good afternoon. Quite a few, while the headline indices actually ended up quite flat, in the broader end of the markets, quite a few movers and shakers, and that's where we'll be putting the spotlight on. First on the list has to be rallies. After multiple quarters, you actually saw a very strong quarter from rallies this time around. Even the commentary coming was quite weak, ended higher by almost 14%. The next stock, of course, was HDFC AMC. Now, HDFC AMC, even within the AMC pack, among the higher valued, and on the back of that, it saw a significant rally across the entire AMC space. All of the listed companies today moving higher quite significantly. RailTel was the other stock, order coming in on the back of that, almost 7.5% higher as far as RailTel was concerned. South Indian Bank, remember, declared its earnings today. Quite a strong set of numbers. Stock ended higher quite significantly. And Amber Enterprises, especially when you're talking in the broader end of the market, the NSE 500, this particular stock ended higher by almost 6%. It is a large cap, quite a large move for a name like Amber today. On the other hand, quite a few laggards as well. Zydus Life Sciences did see some negative news flow coming, a setback to a key client in terms of a cancer drug approval as far as generic is concerned, almost 4% lower today. KEI Industries, while top line growth was in line, the margin miss is something that the street didn't like, almost 6.5% lower. BSE today, Jefferies went ahead and downgraded the stock. They feel that the current rally that the stock saw was overdone, and on the back of that, almost 5% lower. And Cochin Shipyard, government is looking to pay stake. It's an OFS, and on the back of that today, the stock ended low by almost 5%. So list of losers, a list of winners, but very volatile moves as far as the broader end of the market is concerned.
Okay, all right, Vivek, thank you very much for that. Well, let's straight away go to our guests now. We have Mayuresh Joshi of William O'Neill, as well as Soni Patnaik of JM Financial joining in for some thoughts. Soni, let me open with you first. Very range-bound day of trade, but some weakness. What do you make of the indices, how they're poised, and which way would you be trading, whether it's the Nifty or the Bank Nifty?
Hi, good afternoon, Surbhi and Prashant. Thank you for having me on your show. So I think Nifty was quite sideways. It held on to a very strong support of 24,900 odd levels. However, it is yet to remain in this range, somewhere between 24,900 to 25,200. So that range is quite intact, and either side break of this range can only determine a further trend. A true short covering in Nifty can only be seen only if it crosses 25,300 level, where a lot of call writers have positioned themselves. And also you can see a 20 EMA hurdle over there. So I think that's the level to watch out for. Until and unless that level does not cross, a buy in Nifty is not going to be sustainable. I think the important over here is to look for Bank Nifty, which is actually showing better strength in comparison to Nifty. So I think Bank Nifty holding on to a very strong support of 51,500, 51,700. That range has got multiple put writers, very strong support. Any move above 52,015 Bank Nifty can see a sharp short covering, which can lead it towards 52,500 plus level. So the clear trade over here would be to go for Bank Nifty longs with a stop loss of 51,500 and look for higher targets of 52,500 plus levels.
Okay, got that. Fair enough. We'll come back to you for more as we go along. Let's address, the first stock that we want to talk about. Zydus Life fell over 4% after U.S. federal court ruled in favor of Exelixis in a patent dispute over a cancer drug. Ekta is here with details of what this means for Zydus Life. Ekta, over to you.
Well, yes, Zydus is in focus on the back of a particular cancer drug, which is Cabometyx generic in the US. Now, the US court has ruled in favor of the innovator of this particular drug, Cabometyx generic, in the US markets. The US court has ruled against the generic defendant, which is pharma company MSN, in this particular litigation. Now, remember that MSN has partnered with Zydus exclusively on Cabometyx generic in May of 2024. So what this means is that Zydus will be marketing the drug, MSN will be supplying the drug to Zydus, and MSN is first to file on this particular drug. So the opportunity is expected to be big and expected to be around $1.6 billion in terms of sales. Hence, when petered down, and when MSN could have potentially launched, it would have been a sizable opportunity. Now the street is anticipating that based on this litigation, the launch date, which was first anticipated to be FY27, could now be pushed to 2030, and hence there could be a possible earnings void for Zydus, considering that many of their drugs such as Asacol HD generic, Revlimid generic, as well as Mybetriq generic could face further generic competition FY26, FY27 onwards, and hence it is a negative for Zydus because the possible timeline of the launch of this drug is now possibly pushed to 2030 because of this litigation.
Okay, all right, got that, Ekta. Thanks very much for that. Well, let's move on. Another stock that was buzzing around in trade today was KEI Industries. The stock was down. The company reported a mixed quarter, but the results are not the only sort of detail over there. The company is also launching a QIP to raise some equity capital. Upasna has all the details. Upasna?
KEI Industries remained in focus today as company reported mixed set of numbers in Q2 FY25. Revenue met the street expectations, but PAT and EBITDA were below expectations. Revenue saw an uptick of 17% on a YoY basis, while margins saw a downtick of 70 basis points and stood at 9.7%. Well, management joined us today this morning to discuss about its Q2 results and business outlook going forward. Management says that it is sticking to a revenue guidance of 15 to 17% and EBITDA margin guidance of 10.5 to 11% for FY25. It says margins were impacted in Q2 due to fluctuations in copper prices, and going forward, management is not seeing any impact of elections on revenues in Q3 FY25. Board has also approved QIP of 2,000 crores, and these funds will be fully utilized for Sanand plant capex is what the management has highlighted. Till now, company has incurred a capex of 1,000 crores for FY25, which is planned at Sanand plant for greenfield expansion is what the management has highlighted. Listen in.
Okay, all right. Thanks very much for that. Mayuresh, sharp fall on KEI. Were you surprised, and do you track this one?
Afternoon, Prashant. I think the run-up has also been very stellar, Prashant, for most of these players, KEI included. And therefore, I think with the expectations of a QIP coming through, the marginal miss that we probably saw in EBITDA margins, which the management has clarified, was because of higher copper prices. And that might be a little bit of a niggle as far as Q3 is concerned, if they're still carrying on that high-cost inventory. However, as input costs are stabilizing, the management still is of the belief that margins can still be between 10.5% which means that second half, the recovery can be in real earnest as far as top line growth is concerned, as they are maintaining the revenue growth and margin expansion targets. So our take is that if it corrects further, then it makes a lower base at lower levels. I think that will be a good point to enter the stock.
You know, the other story that we were tracking today, of course, was the capital market story, especially with regards to SEBI's F&O rules which have come through. So we had one broker, one of the largest, Angel One, and of course we had the BSE management with us as well. So Angel One CEO Dinesh Thakur told CNBC-TV18 that SEBI's revised F&O rules could impact turnover in the overall F&O segment by between 20 and 22%. He added that brokerage income, discount brokers could see their revenues fall between 13 and 14% because of the rules which are getting implemented and will continue to get implemented in a phased manner. He said, well, they've got some levers in terms of pricing, etc., but they will wait for about a quarter or so before they decide to do any of that. Listen in.
Saying a label, because we have done few changes in cash delivery, and we have started charging on non-cash collateral which customer provide. We charge interest on that. I don't agree that volume would be so drastically lower, because based on kind of an analysis that we have done, total impact on our net income would be in the range of 13 to 14%. But when we come to drop in F&O volume, my estimate would be drop would not be more than around 20 to 22% maximum.
Okay, meanwhile, in a separate conversation with CNBC-TV18, Sundaraman Ramamurthy, MD and CEO for the Bombay Stock Exchange, said that overall F&O volumes will come down due to SEBI's F&O curbs. He added that they are working towards increasing volumes in derivatives. Listen in.
I feel that number of days that have gone post the changes are very minimal to assess a trend. There has been quite a few. Changes that have come in. So it is too early, in my opinion, to say that the SEBI requirement has brought in these type of changes. The volumes in the last 3-4 days have been lower in derivatives market. It could be for very many reasons. So to give a trend based on this is happening, I think it is a bit too early. We may have to wait and watch. We track our success not based on market share. If you ask me, what was the number of market participants last year, what it is this year, what you are planning to have next year, I will be able to give you a number. That's how we track our success. We started with 8, we went to 250, we went to 350, today we are talking about 450. The target is at least 600 brokers should be participating in BSE's derivatives segment. We started with no FPIs, today we are at around 110 FPIs. We feel that at some point of time we should reach to a number of 500 FPIs. Today we started with no product, we had one product, now we are talking about 2 products. At some point of time we should have at least a couple of products.
All right, that is the BSE talking about how the new F&O norms could be impacting the business. Mayuresh is of course with us. Mayuresh, so what do you think? I mean, we spoke to one of the biggest brokers, we spoke to the exchange as well. What's your sense in terms from a investor perspective, which is the better stock to own right now? A broking stock which have gone through the roof, or should you stick to names like BSE, or both?
So in my opinion, I think asset management stocks should be the best play in this, right? Because they are getting their SIPs in humongous quantities. Also, I think the expectation in terms of their equity and debt mix is improving every passing quarter. And if it stays the way it is, which probably looks like the case, the expectations in terms of stability, in terms of operating performance, because a lot of their fixed cost absorption is already done on their balance sheets, would reflect on margins and bottom line growth. So yeah, I think the broking story is good, along with the capital market expansion, but I think AMC saw sweetly this.
No, absolutely. By the way, Soni, any of these AMC stocks caught your attention? Aditya Birla was up 12-13%, UTI AMC, HDFC AMC.
Right. So I think HDFC AMC is a clear-cut buy. It has given a very strong breakout on charts and on derivative parameters, backed with volumes and very aggressive fresh longs even on today's day. So I think that stock is heading for a positional target of 4,950 to 5,000 odd levels that can be seen in the coming days. And it has formed a very strong base of 4,650. So one can continue to buy even on small declines up to 4,800. That would be a good buy. Keep a stop loss of 4,650. Look for higher targets of 4,950, 5,000 can be.
I remember 1,500, 1,800 rupees a year and a half ago. There were no buyers when those entire mutual fund total expense ratio norms were being discussed, etc. Of course, it's done very well since. Let's actually talk about HDFC AMC because it also reported numbers, and we have Vamakshi standing by with the earnings, but also what the street made of it. Vamakshi, over to you.
Well, HDFC AMC was surely surging in trade today after the company reported a strong set of numbers in the second quarter. The management commentary as well was quite positive. In fact, in reaction to that, brokerages also raised their target price as well as their estimates. Jefferies has retained a buy, raised its target price to 5,450 per share. They are expecting 24% CAGR in AUM from FY24 to 27. They've also raised their EPS estimates by around 4 to 8%. CLSA2 has upgraded its rating on this counter to an outperform, raising its target price to 4,920 per share. They've raised their FY25 AUM growth guidance to 29% year on year, and they've lifted their EPS estimates by around 5 to 9% for the next 2 years. But on the other hand, we have a note coming in from Citi. They've retained their sell rating on this counter. They say that the sell rating is coming mainly on account of their valuations. Now, I also looked at how the valuations are stacked against some of its other peers. All of these stocks have re-rated, not just on a YTD basis, but also on a year on a 1 year basis. HDFC AMC and UTI AMC, all of these counters were up anywhere between 50 to 70%, and resultantly their valuations have also seen a big jump. FY25 PE for HDFC AMC is at 43 times, followed by Nippon Life at 36, UTI at 21, and important to know that when we compare this price to earnings to the 5-year average, it is slightly higher on the higher side, but for UTI AMC it is roughly around the same level, that is 21 times.
Okay, got it, Vamakshi. Thanks very much. That's a helpful perspective with respect to valuations as well. We do have to take a break. We'll thank both Mayuresh and Soni on that note. Take that break. We'll come back with the D Street chatter along with all the key events to watch tomorrow.
In the honor of Sir Ratan Tata. Om Shanti Shanti Shanti.
Okay, welcome back. You're with us here on Markets Forward. We played out those sound bites from BSE, Angel One, and a few others. I want to sort of read out one more management commentary, and this is from HDFC Life. The management joined us after, of course, reporting numbers yesterday in the last hour. The management told us that value of new business margins, although they've missed street expectations, the firm had revised its APE growth guidance to between 18 and 20% from 15% earlier. Mrs. Padalkar told us that HDFC Life would target to grow the VNB in the range of between 17 and 18%. She also said that margins would not be in a free fall and that there would be a floor that they are looking at.
All right, that's HDFC Life. The stock did recover today. Let's now move on to our segment D Street Chatter. Nimesh is joining in with all the buzz from dealing rooms. Nimesh, what's been hottest on your radar today?
Well, Sirbi, from a markets point of view, another day of consolidation. The Nifty was very range bound. But again, the broader market seems to outperform on the back of institutional buying. In terms of individual names, the first stock is Ajmera Realty. That's been buzzing off late. In fact, this week the stock is up 25%. Volumes are on the higher side. I understand the company is likely to raise funds from some influential investors in the board meet on 18th via preferential issue. So that's the buzz on Ajmera Realty. Second name is HPCL. Within the OMCs, HPCL stands out on back of very strong buy flows. Expect high delivery volumes, and there is buying interest back in HPCL from large institutions. The third is both Interglobe and Asian Paints, both crude proxy plays, and both saw delivery-based buying in today's market. And the last is Persistent. While the stock was under pressure on the back of overall IT index down, but Persistent is seeing some bit of buying interest from large institutions. So delivery-based buying is happening in Persistent, and I understand the long-only fund has been an active buyer of late.
All right, Nimesh, thank you very much for that. So keep an eye out on these names as we always do. That's D Street Chatter. But let's quickly run you through some of the events to watch out for tomorrow when we come back. Upasana has that list. Upasana, over to you.
It looks like quite an eventful day tomorrow. Japan will be reporting its trade balance data for the month of September. Europe will be coming out with its CPI data for the month of September. And ECB press conference is also scheduled for tomorrow. US will be reporting its initial jobless claims and crude oil inventories data tomorrow. Now let us look at what are the key stocks in focus on back of important results and corporate action. Wipro will be considering bonus issue along with its Q2 FY25 numbers. Companies like Infosys, LTI, Mindtree, Nestle, Axis Bank, Havells, Polycab will also report its Q2 FY25 numbers. Now, TCS and Anand Rathi will also be in focus as these two stocks go ex-dividend tomorrow, and Aclia Solutions India will be holding its AGM tomorrow. Now, let us look at what are the key other events that we'll be closely watching out for. Hyundai Motors IPO closes on 17th of October. Finance Minister Nirmala Sitharaman to visit Mexico and US from 17th to 26th of October to attend meetings with IMF and World Bank.
All right, Upasana, thank you very much. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.
Now I come to the schedule for Maharashtra. This will be in single phase. The notifications, date of notifications are in front of you. 22nd October would be date of notification. Last date of making nomination would be 29th October. Scrutiny on 30th October. And last date for withdrawal 4th, and date of poll in Maharashtra would be 20th.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty end in the red after a volatile session. The Nifty drops below 25,000. Auto and IT stocks lead the decline. Missile strikes southern Beirut hours after the US says it opposes the scope of Israel's bombing campaign in the Lebanese capital. Israel claims it hit a Hezbollah underground weapons facility. The Biden administration warns it could potentially halt weapons transfer to Israel if humanitarian aid to Gaza is hindered. The Union Cabinet approves the hiking of minimum support prices for 6 Rabi crops by up to 9%. MSP for wheat is hiked by 150 rupees per quintal. The Cabinet also clears a 3% hike in dearness allowance for central government employees ahead of Diwali.
We see the whole world being tokenized, following India's example. That's a tremendous growth opportunity for us.
MasterCard is doubling down on its India bet, says global CEO Michael Maybach, after opening the company's largest global tech hub in Pune. Wants the world to follow India's example on tokenization. Adds global consumer spending remains resilient, driven by the services economy. That's a CNBC-TV18 exclusive. A slow start to the 28,000 crore rupee Hyundai India IPO. The issues subscribed around 30% on day 2. Retail subscription closer to 40%. Brokerages feel the pinch as SEBI tightens F&O rules. Angel One expects a 14% hit to revenue. BSE CEO also admits turnover will be impacted but expects business growth to offset impact. The panel set up by the GST Council to restructure the compensation cess meets for the first time. Sources say all states are in favour of subsuming the cess with GST rates. At least 14 hoax bomb threats have disrupted international and domestic flights in the last 3 days. Singapore scrambles fighter jets to escort an Air India Express flight bound for the Changi airport. No items of threat were found after security checks.
External Affairs Minister S. Jaishankar takes a whale jab at Pakistan and China at the SCO summit in Islamabad, says terrorism and unilateral agendas from across the border do not encourage trade. This is the first visit by an Indian foreign minister to Pakistan in nearly a decade. Omar Abdullah takes oath as the Chief Minister of Jammu and Kashmir for the second time. Surinder Chaudhary, who switched from the BJP to the National Conference last year, is the Deputy Chief Minister. The Congress decides to sit out of the new government for now. Well, let's start with the market action. The Sensex and the Nifty ended in the red after a volatile session. A sell-off in the last hour took the Nifty below 25,000. The Sensex lost 300 points today. IT and auto stocks led the decline. So that was the story as far as our markets were concerned. But the big global story that we continue to track, a roundup of the escalating tensions in West Asia. That is moving markets globally. Israeli missiles struck southern Beirut today. This is the first time Lebanon's capital has been pounded in nearly a week. Israel claims to have hit an underground warehouse used by Hezbollah to store weapons. The mayor of a Lebanese town was among those killed in this strike. Further, South Israel's offensive continues in Gaza. At least 17 Palestinians were killed in Israel fire near Jabalah that houses the largest number of displaced people. These attacks come following a warning issued by the U.S. to Israel on failing humanitarian practices. The U.S. has issued a 30-day deadline to Israel to improve the humanitarian aid into Gaza. U.S. has threatened to withdraw arms transfer if it fails to do so. The first aid convoy in 2 weeks has reached northern Gaza today with fuel and cooking gas. Well, moving now to crude oil prices remain largely steady after a sharp fall in the last few days. Oil prices tumbled over 4% to a 2-week low yesterday after top oil-producing nations lowered the demand outlook. Tensions in the Middle East also adding to the uncertainty in the market. Meanwhile, gold prices have hit an all-time high on the MCX, raising in tandem with global prices. The fall in U.S. Treasury yields provided a boost to the yellow metal. Festive buying ahead of Diwali and Dhanteras also pushing prices of both gold and silver higher in trade today. Now, the Union Cabinet has approved the minimum support price for 6 Rabi crops. The MSP for wheat has been hiked by 150 rupees per quintal. Manisha standing by with more. Manisha, take us through the impact.
Well, yes, the announcement of the minimum support price is a big event in agriculture, especially ahead of the Rabi crop, which is 6 key major crops. And we have had the cabinet today approve MSP for all of these. Well, importantly, last year was the highest MSP hike that we saw since 2013-14. And this year has seen a build-up on that. The CACP had recommended 2 to 9% of an increase in MSP for the crops. And that's exactly within that range is what we've seen the numbers come in as well. Well, remember, the Rabi crops are sown between November to December and the harvest starts from March onwards. So ahead of that, this is very timely when the MSP has been announced. So the 6 major crops really are wheat, which did see near record production in the previous year. And we have seen 150 rupees per quintal of an MSP hike into this one. The other one is mustard, which also, by the way, is 40% of the overall edible oil production within India. So an important crop in that sense. And we've seen 300 rupees per quintal of a jump up on this one as well. The other one is chana, again, 50 to 60% of overall pulses production in India. Chana is a large part of this, and we've seen a good significant 210 rupees per quintal of a hike into this one as well. Lentils have seen 275 rupees per quintal of a hike. Barley, a smaller 130, and then there is also safflower, which it's not produced very highly or very in huge quantities in India, but we've seen an MSP hike of 140 into this one as well. So when you look at all of those numbers, the max or the best of hikes clearly have come in for mustard, chana, and in some sense lentils as well. This is where the government has come out with various measures as well in sense of self-sufficiency. Imports into these categories and sectors are on the higher side. So the government's push in sense of MSP hike clearly can be seen into this one as well. The industry going forward also says that while the production may increase because of this, but productivity rise is something that the street really awaits when it comes to many of these agricultural crops.
Manisha, many thanks. Now, the Union Cabinet has also approved a 3% hike in DNS allowance for central government employees just ahead of Diwali. The proposed increase will raise the DA to 53% and will be effective from July. Now, this means that employees will receive arrears for July, August and September. The change is expected to benefit 1 crore central government employees and pensioners. A panel of state ministers tasked with evaluating the future of the GST compensation cess held its first meeting today. Now, the levy, which was introduced when the GST regime came into force in order to compensate states for the revenue shortfall, comes to an end. And what could the way forward be? Well, that meeting took place today to discuss and deliberate on that. Take a look.
देखिए जीएसटी कंपनसेशन का जो डेट फिक्स था
हाँ जी
वो समाप्त होने वाला है।
हाँ जी
उसकी विचार करना था कि उसके आगे फिर क्या करना है।
हाँ
सभी स्टेट के लोगों ने अपने अपने विचार को रखे हैं।
हाँ
अब उसके आगे पहली मीटिंग थी
हाँ
और इसके बाद
क्या विचार
लीगल
है?
पहलू। अब विचार मीटिंग की बात
नहीं सर, फिर भी स्टेट्स का क्या
अलग अलग विचार है, अपने अपने विचार है।
Well, that was the Union Minister of State Pankaj Chaudhary post the GST meeting on compensation cess. Sources tell CNBC-TV18 all states in favour of subsuming the cess with GST rates. Timsy standing by now to take us through the details. Timsy, options on the table. Take us through what is being discussed. Nobody wants to give up revenue, so what could the way forward be?
Well, the GST Council nominated group of ministers on compensation cess concluded their first meeting today under the chairmanship of Union Minister for State for Finance, Pankaj Chaudhary. This is a 10-member panel which was discussing how this levy of cess under the GST regime needs to be merged or subsumed or discontinued once it expires in March 2026. Sources told us that all the states demanded that the cess should be merged in the GST rates post March 2026. It will now be deliberated further in the next meeting and the upcoming meetings that how this needs to be done. In the transition, states have cautioned the group of ministers that during the 7th GST Council meeting, then Chairman of the Council, Arun Jaitley, had committed to the states that once the cess expires, it will be subsumed under the GST rates, and UP specifically reminded the group of ministers of this commitment and wanted the group of ministers and the Council to honor it. Also, states suggested that no new goods should be added under the cess category or the category of sin goods and demerit goods on which cess is currently being levied. States also suggested that cess should be subsumed in the GST rates so that the collections are equally divided in the future also between the states and the centre, which is going to help states recover their revenue position. Apart from that, something to be noted that the 40,000 balance after the payment of the back-to-back loans, which is likely to end in January 2026, that needs to be equally shared. That was another demand by the states, something that we'll have to wait and watch for as to what happens once the group of ministers submits its final report. The deadline is December this year. Back to you.
All right, Timsy, many thanks. On to a CNBC-TV18 exclusive. MasterCard is doubling down on India, according to the company's CEO, Michael Maybach. Speaking to me earlier today, Maybach said he sees the world following India's example on tokenization for online transactions. He also highlighted the strong consumer spending globally, driven by the services economy. Take a look.
We said, okay, we're going to double down here because we have the talent, we have the scale aspect, and we have this aspect of, coming back to the culture point that I made earlier, the ingenuity is just really strong here. So puts us in a position to do that, and we feel very welcome because for 40 years now, there's a strong partnership with the government here, with the fintech sector. So for all of those reasons, I can go on. But we made a decision, and it's a commitment to India, but it's also a commitment to innovation. The tokenization engine that basically takes your biometric details and puts it into a one-time token that's passed through the system, and if it's ever hacked, nobody else can do anything. It's only for one-time use. A lot of detail, but this is the vision of the RBI. This is what the RBI put out and said this has to be a safe payment ecosystem. India is the first pretty much completely tokenized market in the world. We have 240 million tokens here in India. Now, we see the whole world being tokenized, following India's example. That's a tremendous growth opportunity for us. I think to date we have like 4 billion tokens that have already passed through the system. And if this expands for the whole world, that's an opportunity for MasterCard and also a responsibility for MasterCard to make the whole ecosystem safer. Travel, very strong this summer. Europe in particular, very strong. Singapore, very strong. So you look across that, people want to go and do exciting things, do that trip, go and see a show and all of that, and it's showing in our categories of spend. 2 years ago it was all about goods. Now it's all about services. The service economy is booming. That is a fundamentally global trend. And if we look specifically at India, the same, we see the same strength in consumer spending here.
Well, you can catch that entire conversation with the global CEO of MasterCard at 7:30 p.m. right here on CNBC-TV18. Now, the Supreme Court bench led by Chief Justice of India, D.Y. Chandrachud, reserved its order on the appeal by banks seeking liquidation of Jet Airways. The bench was hearing the matter for the second day today. During the argument, the Lenders' Counsel said that Jalan Kalrock Consortium's resolution plan had failed miserably. He countered the narrative that banks are acting as roadblocks in the airline's revival. Further, blaming JKC for choking the resolution plan, banks told the court that inordinate delay and utter non-cooperation shows that JKC had no inclination to implement the plan and they wasted 2.5 years of time. The Apex Court is expected to pronounce its verdict on the matter in the coming days. We don't have a date yet. At least 14 hoax bomb threats have disrupted international and domestic flights in the last 3 days. Last night, Air India Express Madurai to Singapore flight waited in the air before it was escorted by fighter jets to land at the Changi airport in Singapore. Today, Akasa Air's flight from Delhi to Bengaluru was diverted to Delhi following a bomb threat. Then Indigo's Mumbai to Delhi flight was redirected to Ahmedabad due to similar security alerts. Two of SpiceJet's flights, Darbhanga to Mumbai and Leh to Delhi, also received bomb threats. All these planes were taken to isolated areas before deplaning the passengers. External Affairs Minister S. Jaishankar today took a veiled jab at Pakistan and China at the Shanghai Cooperation Organization Summit in Islamabad. Jaishankar said the cooperation must be based on mutual respect, sovereignty, equality and genuine partnership, adding that terrorism and bilateral agenda from across the borders do not encourage trade. Jaishankar's visit is the first by an Indian foreign minister to Pakistan in nearly a decade. Now, the diplomatic tussle between India and Canada over the murder of a Khalistan separatist continues to escalate. Days after Canada alleged that Indian diplomats were linked to the murder, the US has again urged India to cooperate with Canada's investigation. The State Department spokesman said that the US has made it clear that the allegations are extremely serious. Meanwhile, the UK, another ally of Canada, has said it has full confidence in Canada's judicial system. UK's Foreign Office said it's India's cooperation in the legal process is the right next step. Remember, India has rejected allegations, calling them preposterous. Both countries have expelled each other's top ambassadors. Now, Indian households continue to feel the pinch of rising prices of essential vegetables like onions, tomatoes and potatoes. In September, inflation hit a 9-month high, driven by costly vegetables, as per Local Circle survey. Now, nearly 30% of Indian households cut consumption of essential and green vegetables in order to stay within their budget. However, 40% continue to buy the same quantity of vegetables by burning a bigger hole in their pockets. Local Circles, which periodically tracks the impact of higher prices of essentials, covered over 40,000 respondents from 351 districts of India in this survey. Joining us now to discuss this further is Sachin Taparia, Chairman and CEO of Local Circle. Sachin, many thanks for joining us. Let's go over some of those findings, Sachin. It seems like inflation is hurting the average consumer at this point in time. Now, this is a large survey of 40,000 people. Take us through the questions that were asked and the key responses that came in.
So absolutely, Shireen, there is a squeeze that is taking place, especially if you look at the lower class and the lower middle class and even the middle class. And that is being reported on Local Circles on a regular basis. So in this survey, we basically asked two very pointed questions. The first one was around what is it that people are actually paying as a household for tomatoes, onion, and potatoes. And 56% of households that were in the survey, which went over 350 districts nearly, basically said that they're paying over 75 rupees a kg for tomato, over 50 rupees a kg for onion, and over 40 rupees a kg for potatoes. And the next cohort, which was about 29%, basically are paying somewhere between 50 and 75 for tomatoes. So it's only about 6% households that said that they were paying less than 50 rupees a kg for tomato, which is likely in those areas where this particular commodity is grown. So they're very clearly a squeeze, people paying high prices. And when we asked, them in the second question as to how were they dealing with this squeeze, how has it affected budgets, 29% of households essentially are cutting back. So they are, to stay within the budget, they are consuming less of these green vegetables as well as the essential vegetables that we talked about. Another 42% are paying, and taking the hit. And then the remaining 29% are actually buying better. So if they were, let's say buying on a quick commerce platform, they are probably buying at a store or at an e-commerce platform. If they were buying on an e-commerce platform, they were likely now going into the market and buying these supplies. So very clearly, a squeeze and something that needs to be attended to. And this has been happening, literally every year come September, October. And I think we need some long-term solutions here that actually manage these better from a government standpoint. And then from a short-term standpoint, if some relief can be provided, whether through petrol or diesel prices or making a cut there like it was done last Diwali, I think it'll definitely help the households.
Well, I don't know whether any of that is in the offing at this point in time or not, Sachin, but we're also now in the midst of the festive season, and I'm not sure whether you have a survey out on what festive spending is likely to result in, but what's the mood that you're picking up on so far?
We have. In fact, we have released a massive survey on that subject, Shireen. And the key finding that we have from that survey, the numbers are huge. 1.85 lakh crores of festive spending expected across the country. But here is the thing, the 2019 number was bigger than this year's number, and the 22 number was also bigger than this year's number. And this time we are seeing a very clear divide, Shireen, where almost it's 50-50. 50% of the households are going to be out and about spending. And, the another 50 essentially that's where the squeeze is, what we see in the 29% number of households cutting back. So that divide is becoming clearer and clearer. And I think that's something that the government has to, figure out ways of attending to.
All right, Sachin, we will leave it there. Appreciate you joining us here on CNBC-TV18. That's Sachin Taparia of Local Circles. Now, innovation without guardrails of quality and customer requirements will have problems. That's the word in from the Chairman Emeritus of TVS Motor, Venu Srinivasan, responding to questions about complaints against EV startups, including Ola Electric. Srinivasan told CNBC-TV18, all innovators and startups will have problems, but they must catch up with high-quality products and customer service.
You have to plan for quality first and meeting customer requirement first. Innovation without those guardrails of quality and customer will have problems. But innovation also is what forces others to compete. Whether it's Bajaj or TVS, we all now got our products, but we brought with us the expertise of quality and consistency. But others, the startups will also learn. It's not that they have problems. Every innovation has a problem. Tesla had a lot of quality problems, but they are also improving and getting on. So innovators will face problems. That is the first mover advantage they will have of creating the market, but they will then have to catch up with quality and customers. So that's part of the process of innovation.
Well, that's Venu Srinivasan. You can catch that entire interview with him at 5 p.m. right here on CNBC-TV18. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
The only reason we would want to IPO is because we are at the forefront of this, right? As in, we are a stockbroker.
I would say 50-50, more leaning towards no IPO today.
More leaning towards no IPO, Kailash?
I would lean heavily towards no IPO.
We really want to be a bank, but however we have tried over the last many years, we have not been allowed to.
Now I come to the schedule for Maharashtra. This will be in single phase. The notifications, date of notifications are in front of you. 22nd October would be date of notification. Last date of making nomination would be 29th October. Scrutiny on 30th October. And last date for withdrawal 4th. And date of poll in Maharashtra would be 20th 11. Counting would be on 23rd 11 24. And you will notice that date of poll is Wednesday. This is deliberately, which lot of scheduling, whatever goes into scheduling, we have tried that it is midday so that issue of urban apathy is handled. झारखंड एक बहुत ही समृद्ध स्टेट है, बहुत ही उसकी विरासत है और वहां पर हम फिर से अपील करेंगे कि सब वोटर्स अधिक से अधिक मात्रा में वोट दें. Schedule would be like this. Jharkhand would be in 2 phases. The date of poll, first phase would be on, date of poll would be on 13th November. And the second phase would be along with Maharashtra on 20th November. So the date of issue of notification for Jharkhand phase 1 would be 18th and for phase 2 would be 22nd along with Maharashtra. Nominations for phase 1 would be till 25th of October. And for phase 2, 29th. This slide we will share with everyone. And date of poll would be 13th November and 20th November, both Wednesdays. And date of counting would be 23rd 11, that is Saturday. With this, we end our presentation with the request that through you, that all the voters of Jharkhand and Maharashtra कृपया बाहर आइए, कृपया वोट करिए. लोकतंत्र के उत्सव में आपकी भागीदारी कि हम बहुत ही रिक्वेस्ट करते हैं, अपील करते हैं आपसे. थैंक यू वेरी मच.
We're now in the bunker that we found underneath a Lebanese house in a Shia village only a couple of kilometers from our border. This bunker was ready for Radwan forces, for a battalion of Radwan forces to enter into this bunker and do a raid into Israel and do a larger scale of massacre than the 7th of October. They were planned with the motorcycles here to go to Kiryat Shmona, to Iftach, to villages and positions inside Israel and conduct a massacre. And all our enemies should know, whether they are close or far away in Iran, they should know that we are determined. We are determined to supply security and safety to our citizens. We need to impose a 1701, a fully imposed 1701, this area, so Hezbollah can never be next to our border with such infrastructures that can do a Conquer Galilee plan like he planned. Hassan Nasrallah, this ruthless terrorist that we eliminated, that is responsible for the deaths of many people, not just Israelis, Germans, Americans, French and others. The world is a better place without Hezbollah. The world is a better place without Nasrallah.
Let's Talk Money.
Hello and welcome to Let's Talk Money, your weekly personal finance session with me, Surabhi Upadhyay. Now, the festive season is in full bloom. It's a time when we like to splurge and reward ourselves, and while we get active with our credit card swipes or those QR codes on our phones, the digital scamsters out there are also getting quite active, trying to come up with novel ways, newer ways to defraud unsuspecting customers with respect to online transactions, payments, and so much more. Today, we have two experts, two bankers joining us on the show who will help us sort this out, who will give us some advice, some tips on how we can keep our hard-earned money protected and what to do in case, in the event, unfortunate event, that the fraud actually happens. Manish Agarwal, Head of Credit Intelligence at HDFC Bank, is joining in. And we have Mr. Durgadas Rege, Chief of Internal Vigilance at RBL Bank, to help us wrap our heads around this whole concept of preventing bank frauds and also what to do, as I said, in case that unfortunate event actually happens. And a little later on the show, we will give you some smart festive spending advice as well. When you're looking to reward yourself, how do you do it without really bursting the bank or bursting your wallet, so to speak? But let's get started on this very serious issue of cybercrime, financial frauds, and transactions that could be very, very susceptible to scamsters who are out there. Thank you so much, Manish, for joining me in the studios. We have Mr. Rege joining us on the digital means as well, because we are talking about digital frauds, right? Gentlemen, your first thoughts, and I was looking at some data that the Reserve Bank of India actually puts out as well, where if we look at it, I think overall the trend of the number of frauds, the amounts involved, it's coming down, but it's still pretty large, isn't it? Manish, floor is yours, so kick it off.
So thanks, Urbi, first of all, having us here. And I think the topic is apt. And I would only say that when you talk about the money, here the money secured and saved is the money earned. Yeah. So as far as the fraud numbers that you're talking about, if you see in earlier days, it was not about the frauds which were happening from the customers. Most of the frauds which were getting reported earlier were pertaining to a fraud which have happened on the bank. While these numbers have grown, you also have to see that from the numbers of transactions perspective and how the digital boom has taken place. Okay, those have also gone substantially. But having said that, that's not the point. The point here is even a singular customer, if it is getting defrauded, okay, that's a crime. And it cannot be condoned or taken in the percentage of a such percentage or a such bips as a number. So the issue is very, very grave. Now, if you have to see, when you talk about these frauds, and all along we look at the newspaper, articles, many of the people you will be knowing, they have fallen prey to the frauds.
Yeah.
But what is the anatomy of the fraud? If you see, most of these frauds are the digital frauds which have happened. It's not because there is a vulnerability in the system. And when I'm talking system, I'm talking about an ecosystem. Okay. All these frauds have happened because the fraudsters have exploited the emotions of the customer.
Yeah.
And here the customer is the most vulnerable.
Right.
Okay. So, and as I keep talking about, they use all social engineering techniques and the emotions that they exploit to defraud the customer. It's very simple.
So this is an important point that you're making, that frauds now are not happening because the banking system is failing. It's happening because the scamsters are able to play with our minds. Before we actually get down to the specifics and how banks look at this, I just want to put out the data. If we talk about the types of frauds that we saw in FY24, let's pull up the RBI numbers. So the number in question for the purpose of this conversation is basically, internet fraud, so to speak, digital or internet frauds, because fraud in loan advances could be because of other issues. Scamsters in terms of the way the loans were given out, or that's a separate matter. But if you look at it, card frauds or internet frauds, that number in FY24 was just under 1,500 crore rupees. That's still a large number, 1,500 crores. That would be impacting lots of customers out there. So yes, that is something that needs to be definitely discussed. You're seeing the other numbers there, off-balance sheet deposits, etc. But what we are cash frauds could also be there, check bouncing, etc. Those are different kinds of frauds. But in this show today, we are trying to address the internet and credit card-based frauds that most of us can be susceptible to if you're not alert. Mr. Rege, let me come to you, sir. What Manish is saying, that this is more about the scamster getting to play on our mind, and that's what causes the fraud. Your thoughts?
Yes. Yeah. So I'll just give one example how these frauds happen. One day you get up in the morning and you see that you have been added in a WhatsApp group, and you feel, I've been added in a WhatsApp group. But this WhatsApp group where you have been added is to defraud you. But they lure you saying that your money will be multiplied and you will get a good returns if you invest in this. So these investment scams. So here I want to specify that genuine person also should be cautious when they are being dragged into such type of WhatsApp groups or such type of frauds. Now, as a layman, I would be, or rather anybody would be happy that today my 2 lakhs will be becoming 20 lakhs in a few days. But that is not so. The same way as Manish rightly said, this is the emotional part, and that is what is greed that takes over our actual requirement or actual, how you manage your finance. That is one part. Secondly, I would also like to emphasize on, apart from greed, there is one more aspect which we need to dwell upon as far as emotional and psychological views of a genuine person is concerned, and that is called threat.
Yeah.
And as a threat, I would suggest that there is something what is called as digital arrest. So, people in this type of frauds, the fraudsters lure you by saying that I am from a government agency and your card means Aadhaar card or your PAN card has been compromised, and through which there have been transactions which have happened, or a parcel has come. So these type of frauds also are very important, and which we need to tackle with.
No, absolutely.
And,
absolutely.
There have been several other examples on this.
Yes, absolutely, sir. So let's actually take this forward. You have identified two, key emotions that scamsters play on. One is greed. The other is fear. They resort to threat to get us to do, the kind of transactions that we should not be doing. Manish, come in on this, because in banker language, I think you folks distinguish it in two types of fraud, something known as account takeover and something that is an actual scam. Can you elaborate on the types of frauds that are there?
Surabhi, you got it right. So actually, when the entire transaction flow is done by the customer himself, because he is under the influence of the fraudsters who has exploited his emotion, and he is not sharing the OTP, he himself is authorizing all the transaction. That is a perfect scam. Because if I tell you and I lure you to do some transfer to this particular account, everything is done by you.
Which is the kind of WhatsApp groups that Mr. Rege just described. Yes. I wake up one morning, I'm part of a WhatsApp group and I'm supposed to make X amount of return in 3 days, right?
Absolutely. And if you see, in fact, we have observed the cases where the customer have been doing those investment party to that investment scheme for 15 days, 20 days, 30 days. And when they see that the return, it has got a substantial return, and they get to know when they want to withdraw the money, and the fraudster asks more money, and fraudsters ask more money. Then when they're not able to withdraw. So that's where this scam piece comes in. And the second one, which is called an account takeover in a technical language, but for a simple layman, if you have or one has shared his OTP, credential, password, ID, that's where these cases, the transaction is being performed by the fraudster. So that's where we differentiate. While the account takeover, and I will take a bit of a time here from the construct and the design perspective. On an account takeover, a lot of new variable comes in, where the prevention is bit more easy. But when it's a case of a scam, it is very, very difficult, because let's say even if the customers have been called and asked about the genuineness of the transaction, he will say, yes, I'm doing, because he is not realizing at that moment
that it's a scam.
Yeah.
So it's really important. So we now know the two different type of mischievous activities are at play. One where we ourselves willingly become party and we ourselves do the transaction, which are real scams, investment scams. The other is obviously where we unknowingly share our details like OTP or password or PIN. Now, we all understand that in the best case scenario, we shouldn't be doing that. But what is the recourse? So tell us this, Mr. Rege. Also, what are the latest scams? I mean, I got a call the other day saying some parcel has come. And I almost thought that, have I ordered something online? I realized I've not ordered anything from any of the e-commerce players. So what are the latest scams that are in the market that we should be aware of? Let's address that first.
Yeah, so as I said just now, these are the two important scams or the frauds that have been going around in the market. One is this investment scams, and secondly, where parcel scams. But predominantly, if you see, earlier also there were some scams pertaining to deep fake scams, where the fraudster used to fake the identity of your friend or your relatives and used to lure you for transferring money. Primarily, investment scams have taken a lot of toll from genuine people. If I have to give another example, if you see during this pandemic, when everybody was panicky to take the vaccinations and all, the fraudsters were very shrewd enough to design a website or a link so that they can perpetrate a fraud and defraud a person under the pretext of giving vaccination or facilitating vaccination.
Yeah.
So these frauds, this type of frauds are becoming, very prevalent now in the banking industry and the financial world.
No, absolutely, and frauds end up changing their shape and form with the seasons, right? Whatever is the in thing, the scamsters kind of go with that. Which also brings me to the fact that right now we're in the midst of festive season. So Manish, now let's come to the tips that people should keep in mind. Of course, we all know that we're not supposed to share our ID and password. The thing is, it happens. What is the recourse? What do you do in the event this happens? And how do you dispute it? Sometimes there can be disputes with the bank as well on this as well. So what happens once I realize, oops, there was a mistake and the money is gone from my account?
So very simple thing, Surbhi. First of all, you have to take a pause. You means as a customer, we have to take a pause. Please understand there is no urgency. There is nobody who's sitting on your head and saying that if you will not do this transaction in 5 minutes, 2 minutes, 1 minute, 30 seconds, something is going to happen. There is no law enforcement agency who's after your life on the digital way and going to help you or going to arrest you. There are no such offer which are so unbelievable that a worth of a 1 lakh goods you are getting in 10,000 rupees. Please don't fall prey to this. Okay?
Yeah.
Because these fraudsters have taken this as a profession.
Yeah.
Okay? So, what we need to do is don't believe on unbelievable offer.
Sure.
I'm asking you to not to believe on unbelievable.
Sure.
Second particular thing, please take a pause. The pause which comes after you feel or after you realize that you have been cheated, please advance it.
Correct.
If you're going to do any transaction, it's okay. It may take 2 more minutes. Nothing is going to happen.
But think about it
Just
first.
take a pause.
Yeah.
Don't transfer the money to the unknown people.
Absolutely.
Okay? In at any cost. Please verify the genuineness. And if you do these two things, the most of the things, because that's the awareness which has to take precedence over everything, and prevention is better than cure.
Sure.
The last one, once you have been defrauded, I think the two simple things which I would strongly advise our customers and every citizen of the country to do is first call up your bank, ensure that your account card is blocked.
Right.
Immediately.
Right.
And then call up 1930. It's a cybersecurity helpline. Okay. A lot of work has been done by RBI and the government. Ministry of Home Affairs has put in a lot of efforts on this.
Right.
They have created a portal, log in a complaint, use that golden hour, golden 30 minutes, first 30 minutes, because that's where probably your money can be saved if it has already been departed from your account.
If you could just elaborate on the number and how this mechanism works, why it's so important to call in that 30-minute window on this number.
Ministry of Home Affairs has instituted this Cybersecurity Coordination Center, which is called I4C. They have launched this particular helpline. This helpline 1930 is equipped by 24/7. If you call up those numbers, your communication or a complaint is immediately recorded. They will ask certain information regarding what account, where the frauds have happened, what is the information that the customer had, where the money had gone. Then they relate on a real-time basis to the respective banks where the money would have gone. And the respective banks take an immediate action. That is where this channelization, because once the fraud is done and money is out from the customer's account, what can be done is only to stop the flow of money.
Okay.
And that's where this system has been working fantastically well, and the government is doing a lot of efforts and putting a lot of efforts on this.
Okay. All right, gentlemen, I think this was a very, very helpful conversation. Thank you for joining in and enlightening our viewers on how they can prevent fraudsters getting the better of them. And of course, in case this actually happens in that an unfortunate event, what's your immediate recourse and what you should keep in mind. Thank you for joining in. We do have to take a very quick break on the show right now. But now that we've understood how to keep ourselves safe while transacting online, The other part is how to spend responsibly. So you enjoy the festive season, but don't burst your wallet. Back with that in just a minute.
Thank you.
Let's talk money.
The Parsi legacy is a testament to how a small community has made a massive impact on India's industrial, scientific and cultural development, despite representing just a tiny fraction.
Let's talk money.
Welcome back. Here with us on Let's Talk Money. And this week we are talking about how to be safe and how we can spend responsibly this festive season. Safe, you just heard the bankers tell us about the tips that we need to keep in mind to prevent ourselves from falling prey to any kind of online transaction fraud. Now we have with us Mr. Raj Khosla, who's the founder and MD at My Money Mantra, to discuss the latter. How do we be prudent with our festive shopping? How do we not break our bank or basically burst our budget? Mr. Khosla, thank you so much for joining in. And that really is the key questions. Once we've answered the questions on safety, I don't know if people even think of Diwali budgeting or festive budgeting, but what's the way forward? What's the right approach, you think?
Well, in terms of budgeting, the right approach is how you think, right? So first and foremost, you do need to create a budget and then thereafter stick to your budget. Essentially, you have to avoid impulse buying. You need to make a shopping list and avoid peer pressure and people talking to each other and saying this is good, this is bad, need more of this. Be careful of the terms and conditions when opting for no-cost EMIs, with respect to hidden conditions to avoid any future surprises. And also, check the return and refund policies before making any purchase. And like you already, you shared with your viewers, how to be mindful of digital security while doing digital transactions, especially when discounts are like what you earlier said. In fact, what Manish said was that when discounts or any deal which is too good to be true. So, you need to be careful about all of these items when you get into the festive season, I would say, and get a hold on your impulses, on your budget, on your plans, be realistic, and essentially go out and enjoy yourself. Don't don't create a problem for yourself going forward, as it were.
So as long as it's mindful spending, I guess that would be the right term that sums it up, right? So, Mr. Khosla, I think what people often grapple with this season is how do I fund the purchase? Now, whether it's a mobile phone, whether it is something for the house, whether it's a gift you're buying, a slightly higher value gift, whether you should use downright cash, whether you should do that purchase on a credit card, or whether you should take on the zero interest offer, or whether you should take the personal loan. And that's what we really want to understand, how to arrive at the funding decision and use each one of these instruments.
Well, the best way to get started is take one good hard look in the mirror and see what your own needs are, what your purpose is, why you're making this purchase, and therefore you'll get a much better idea of how, what source of funding or what route you should be taking in terms of whether it should be a personal loan or a credit card or a downright, just a down payment on cash purchase. Essentially, if it's a small item, a really small item, then I would recommend, go for just, pay the cash and purchase the item. If it's something a little bit larger, you could evaluate perhaps a credit card option, because that is more flexible. You can, you're not stuck like, for say 3 years or 2 years like you might be with a personal loan. You have the flexibility of paying all of it back maybe in a month or two. And if you get stuck really on your cash flow, to postpone it a little bit and maybe a somewhat prohibitive rate of interest, but you have the option of postponing the repayments. With a personal loan, I would say, go for a slightly bigger ticket item. It could well be, maybe part payment of a car or maybe a home improvement loan. And that is an item which is large enough, it warrants a personal loan and has a fixed EMI and a fixed term. And that would be cheaper than trying to fund it through a credit card. But, as far as affordability and repayment is concerned, it's really so personal that, you have to align it to your own budget and to your own debt to income ratio. You can't take on debt which is essentially more than 30 to 40% of your net disposable income. The minute you start hitting 60, 70%, that's a debt trap and it's a downward spiral. And you don't know.
Absolutely. Absolutely. So I think that's a good working number to keep in mind, that don't let your loans, all your loans put together, personal, housing, etc., don't let them cross 40% in terms of the total income that you have, the inflows that are coming in. Got that, Mr. Khosla. I think another question that a lot of customers grapple with is whether, let's say you're buying a mobile phone, right? I mean, and that the cost could be anything between 30,000 to 75,000, maybe even a lakh in cases. And the question is whether I should just swipe my debit card, do a straight cash purchase, not bother with the whole, paying the monthly cycle, etc., or whether I should look for a zero cost EMI or a zero interest EMI where my debit card or one of my bank cards will get involved. And this tends to get a little confusing. So if I have the money, should I just pay it off in cash? Or should I look at these zero cost EMIs? What's the benefit? And are they really zero cost?
Well, a good question to start with, because, the impulse is always, for people who have the money on hand is to say what you just did, Surabhi, in terms of, can I just pay it off and get on with my life? Can I just use a debit card? I would say take a pause, especially in this, in the festive period. At that point in time, you've got platforms, I won't take any names, but we all know who they are. They run huge sales, discounts, and offers. Also, the bank themselves on a particular credit card of a particular bank, there may be a good offer of a particular item. So also the manufacturer himself, can come up with saying that if it's an EMI related scheme, it will end up costing, the consumer less. So you do need to do a little bit of research, and as opposed to the first instance of, let me just pay it off and get on with my life. I would rather recommend that, do research on what's available, A, on your own credit card, B, on some of the platforms that are offering discounts. And lastly, do not forget to calculate to say, some brands don't offer any upfront discount on a full cash purchase, but they do offer discounts on EMI transactions. This is in reverse. You would never really expect that. So, so you do need to perform a good amount of research before you take a final decision about whether to take EMI-based purchase or take a full cash-down purchase. It's not as simple.
Okay.
Just
okay, so do some homework, do some math, and then decide on that spend, and be mindful when you're going about that festive spending spree. All right, Mr. Kholsa, those are very, very helpful tips. Thank you very much for joining us on the show this week and enlightening our viewers on smart spending this festive season.
Nice to be with you, Surabhi, and you have a great festive season. Enjoy the
You too. You too.
Bye-bye.
With that, it's a wrap on this episode. Thank you very much for being with us this week. We'll see you again next week, same time, same place.
Let's talk money.
They reportedly make just 0.004% of India's population, but their contribution has been immeasurable. This is the story of the party. From Jamshedji Tata, who laid the foundation of India's industrial revolution, to Dr. Homi Bhabha, the father of India's nuclear program. The Parsi influence is like a secret ingredient that's added flavor to India's growth recipe. The Tata Group started as a humble textile business in the 19th century and has now grown into one of India's largest business giant, with its listed entities' combined market capitalization at rupees 30 lakh crores. Jahangir Tata took to the skies with Air India, and Ratan Tata kept soaring, expanding globally and championing philanthropy. In 2023, Ratan Tata's foundation pledged millions for healthcare and education, proving the Parsi spirit of giving. And let's not forget Adarshir Godrej, who unlocked a whole new world by founding the Godrej Group, introducing India's first locks and safes. Today, it's a global sensation known for its eco-friendly products and commitment to social responsibility, perfectly embodying Parsi values of philanthropy. Talk about building dreams. Palanji Mystery turned construction into an art form with Shapurji Palanji. From iconic skyscrapers to vibrant residential complexes, this powerhouse is shaping skylines worldwide. Cyrus Poonawalla, the mastermind behind the Serum Institute of India, is a health superhero. Producing over 1.5 billion vaccine doses a year, he took center stage during the COVID-19 pandemic by churning out the AstraZeneca vaccine. That's a Parsi powerhouse, making the world a healthier place. Also, did you know Freddie Mercury, the legendary frontman of Queen, attended boarding school in Panchgani, Maharashtra? With his incredible voice and flamboyant stage presence, he proudly celebrated his Parsi roots while giving us timeless hits. From innovation to philanthropy to music, Parsis have made their mark everywhere. Despite their shrinking numbers, now less than 60,000, they continue to shine bright and inspire.
Canada has provided credible, irrefutable evidence of ties between agents of the Government of India and a murder of a Canadian citizen on Canadian soil. Now it is time for India to live up to what it said it would do and look into those allegations.
Hello and welcome to this special broadcast. The Indian Foundation for Quality Management is an industry body which has come together to enhance the quality of manufacturing, the quality of services in India. There is a larger aim to make India a developed nation by 2047, and this organization aims to handhold the manufacturing companies and also support MSMEs across the value chain to increase their quality and also their participation in global value chains. Joining us right now are two industry veterans leading this body, Venu Srinivasan, the chairman of the Indian Foundation for Quality Management and the chairman emeritus of TVS Motor Company, and the former MD and president of Bosch India, Soumitra Bhattacharya, who is leading the IFQM body as the CEO. Gentlemen, thank you very much for being with us here on CNBC TV18. Let me begin by asking you about the thought. When you look at the IFQM brochure, you think about the fact that you already have a Bureau of Indian Standards, you have a Quality Control Council of India. Why is it really important to have a body of this kind?
I will start with a comment and then leave it to Soumitra to fill in. We want to create a leadership transformation to build competitive services and products in the country. Others regulate the minimum standards required to sell a product, but it is not the maximum standards that the customer wants. There's an old Pepsi ad, Dil Mange More. They don't talk about that. They only talk about kafi hai.
Okay, sir, if I were to ask you to elaborate on that, what do you think is the larger purpose of IFQM right now, and why is it important? What is the gap in the system that you need to fill?
So I think we have to go back to the genesis of why IFQM was born. When you have, leaders like our chairman Venu Srinivasan, in our board, Mr. N. Chandrasekharan, and the various other founding members coming forward for the first time in India to say that this is something that we are doing with nation first and industry next, and has nothing to do with their own industry and companies, where they say that we want to do this with a purpose, and I call it something like the woods for the trees and the trees for the woods. The woods for the trees is this overarching aspect of quality in everything we do. And you just heard from our chairman that, it starts from the top. Leadership transformation means not CEO participation, but CEO commitment. And this has to go from top floor to shop floor. So when this concept is started, and when the intention which gets converted into action of a well-governed, well-funded organization which is born, then there's a purpose to say we want to be inclusive, we want to take people along, and we want to put meat into Viksit Bharat.
Putting meat into Viksit Bharat, this is the Prime Minister's vision to have a developed country by 2047. You spoke about Dil Mange More. What is really missing in our manufacturing ecosystem right now, Mr. Srinivasan? Yesterday we heard Kamal Bali of Volvo say that when it comes to manufacturing as a percentage of our GDP, it has been stagnant at 14 to 16% for 20-25 years. What do you think is the reason for that?
There are 2 or 3 reasons we should focus upon, the vital few. One is deregulation. The deregulation is done by the central government. But every state, all the regulations that were in place from independence are still in place. The land, water, labor, electricity, all the requirements for manufacturing are still moribund and bound with red tape. A few states which have broken through, Tamil Nadu, for example, or Maharashtra, Madhya Pradesh, a few have broken through, but all other states are still stuck there. So if you want to really create a manufacturing revolution, particularly providing jobs for 100 million people, then we have to make mass manufacturing, large concentration of labor possible to do it easily. And yesterday I saw an item where one textile fabrication company has gone from 2,000 to 11,000 people, but they've gone to 5 plants because they're afraid of concentration of labor. That has to be a compact between society and business and government that we need to encourage. Why can't they be in the same place? That would reduce the cost of manufacturing. If our productivity has remained flat, volumes have gone up. So this has to change if electronics manufacturing, toy manufacturing, textiles, and the mass labor opportunities that India can grab.
Right. talking about the agenda of IFQM once again, how is this grouping, this industry body where 8 or 9 leading companies from India have come together to support the industry and MSMEs, how will it work? How will it handhold companies and groom them, give them recommendations for quality in manufacturing and quality in services?
Yeah, so we have various pillars in IFQM, which we have done a lot of debate, discussion within first our governing council, who are all our founders, and then also within our board, who are also founding members, including an independent director. So the objective has been to have a very focused approach. And there are 7 pillars, but I'll just share a few. One very strong pillar that we are working on is counseling and assessment. And if I quote what our chairman mentions very often, is the Gurukul approach, where the mentor actually not only assesses but walks the journey with the disciple. So if counseling gets into that, where you walk the journey and then you do an assessment, if we have another pillar called learning and development. We have this pillar called symposium, and you've been a part of it, Parikshit, and you saw we are wanting to have reflective dialogue to invite industry onto this movement for implementation. So it's not a non-closed loop, it's a closed loop system with an invite. Yeah. So basically IFQM is a very well thought out, professional, not-for-profit company done for the first time in India by captains of industry of very high repute, and as I said, not what any of the captains get, but how to give back to the country.
The fact that people like you, people like N. Chandrasekharan came together with the thinking that we need a body like the Indian Foundation for Quality Management, clearly there was a problem somewhere. What exactly is the extent of problem when we speak about quality in manufacturing, quality in services right now? Because we have global ambitions. Even over the last 2 days, so many of the speakers have come and said that India's time has come. But there is a certain worry as well. So what is that worry and the extent
I
of
will
problem?
address one or two and request Soumitra to complement. But one major problem that we have is that it is patchy. There is a software business which is globally recognized as the center for software, and even the multinationals, Capgemini or whether it is Accenture or IBM, have the biggest centers in India. Also the global centers of excellence as Bosch, Mercedes and many, many more who have their engineering centers here. Then you have TCS, Infosys, Mindtree, L&T, HCL and many other smaller companies, Zoho. But then you have pharma. Then you have automobiles which are exported worldwide, both auto components and automobile companies. But then you have textiles. But then you have a lot of companies which are not competitive. A lot of sectors which are not competitive. So that is the gap you're trying to fill, that India holistically must go forward. You can't have Viksit Bharat with a few people doing very well and others being left behind.
Which are the sectors?
I'd like to add a couple of sentences.
Yeah, I just wanted to add one question to what Mr. Srinivasan said and left at. Which are the sectors which you feel need urgent addressing according to you?
Right. So I'll put it this way, Parikshit. Let's look at the sectors which have relatively a stronger play in the global market, and then we can understand. If you take an industry which both of us come from, which is called automotive or now mobility, that has shown relatively a higher resilience, and it shows in both our numbers, our qualities, including what gets made in India gets exported. That's the acid test. Now, if you look at that industry, and if you look at a few other industries like, now you take services, software industry, and they have standards like CMM and things like that. Now, there are a vast majority of industries who have different levels of maturity within the industry. You have brilliant examples of Sun Pharma, but you also have in pharma the smaller, which many times give a disrepute to India. So we took cognizance of the fact that the developed countries like Japan, Korea, Germany, US, they do not give you a differentiated or a surprised or an unreliable experience. They give you, I mean, you heard from Puneet Ranjan, and I have been going to that country for the last 34 years now, Germany. The Mittelstand in Germany will give you the same quality, same experience as the OEMs. So our attempt, and that's why this focus on MSME and clusters, and that's why the focus on asking big companies to do something for the MSMEs and clusters and give back. So our attempt is to create a seamless and reliable experience of India across sectors, but also in the source, make, deliver, and not say that MSMEs will give differentiated, big guys will give differentiated. That's one of the critical challenges.
Right. Do you think that this patchy quality in services across the board in the value chain in India, patchy quality of manufacturing, like Mr. Srinivasan said, and you added that in some pockets, in some sectors, we are very, very good. We have global standards, but in others, we are patchy. Do you think that is somehow also impacting our export journey?
Of course. The weakest chain in the link will reduce the speed of the vehicle on the road. The weakest chain will reduce the whole quality experience to that extent. If we want to have a reliable Viksit Bharat, reliable, and a brand which comes, in place in the same strength of the developed countries, then the entire value chain has to have that level of quality which we call as being globally competitive,
right,
and export capable.
Right.
I would like to add one more thing. What Soumitra touched upon. In all those countries, variability is low. If I buy from Korea, I know the quality will be minimum so much, and the variability between the best and the poorest will not be so high. Whether Sony TV or a Panasonic TV or LG TV or a Samsung TV, there will be differences, but you're not going to be shocked. Whereas in India, what he has said is that there are companies of varying quality, both in services, whether you take hospitality, hospitals, medical care, any service that you take, even financial services, you have variability. We want to bring the variability in India down so that anybody comes out, oh, India must be good quality.
Baba Siddiqui actually had police protection. It was non-categorized police protection, but still he had 2 + 1 constables with him. That means that during the day, 2 constables were deployed for his protection, and in the night, 1 constable. This makes this matter even worse. Remember, Baba Siddiqui, who was a loyal Congress political leader, in February, he shifted sides and he joined NCP Ajit Pawar. This means that he was a political leader of a party which is in the government, is a part of ruling alliance. And despite police security, he was shot dead on Dussehra night, a night when police security, police deployment is anyway at its peak in Mumbai. The clarity on motive is yet to come, but what has been established by Mumbai police that this is a case of contract killing. These 3 accused, one Gurmail Singh, hailed from Haryana. He's a 23-year-old person who actually has a record, a criminal background. He has extortion and murder cases against him, and it is believed that when he was in the jail, at that time he established a contact with some members of the notorious Lawrence Vishnoi gang. There are two more other shooters, and both of them are from UP. One is Shiv Kumar Gautam and one is Dharmraj Kashyap. Now, Dharmraj Kashyap was arrested by the police along with Gurmail Singh, but Shiv Kumar Gautam managed to flee away. He's still absconding. It was yesterday on Sunday, a Facebook post went viral. The Facebook post was uploaded by a person called Shubham Lonkar. In that person, now this person is allegedly a member of Lawrence Vishnoi gang, and in that social media post, he hinted that it was Lawrence Vishnoi gang which was responsible for this shootout, and Baba Siddiqui was attacked, was killed due to his proximity to Bollywood star Salman Khan. And it's known fact that Salman Khan is on Lawrence Vishnoi gang's radar for a very long time now. And the reason cited by the Vishnoi gang is the Black Bug case. Now, after that, Mumbai police said that they are looking into this post. They are trying to verify its authenticity and the whole context. Later in the night, that was yesterday night, a person called Praveen Lonkar was arrested by Mumbai police. Now, this person, Praveen Lonkar, is said to be Shubham Lonkar, the person who uploaded that Facebook post, his real brother. Now, Mumbai police said that both the Lonkar brothers, they were the ones who
For the last 5 to 6 years, we've been hearing about the phrase China plus one. Countries looking to either move out of China or having a manufacturing destination in addition to China. But recently, the World Bank also, Mr. Srinivasan, said that a lot of those China plus one investments, especially in labor-intensive manufacturing exports, is not actually going to India. There are 5 countries which have gained from the loss of China's share, but India is not there. Do you think that is something we need to really focus on?
We have to focus on that, and that's where the states come in, which I said right at the beginning. But having said that, India is today second largest cell phone maker in the world. It has moved. Some sectors have moved. But we wanted to move. For example, why should Bangladesh export more textiles than India does? Toys, why can't we be the world's largest toy manufacturer? So any handicrafts. Because there we need to reduce the variability in quality and make it easy to agglomerate 20,000 people, 40,000 people, 100,000 people in one estate and have assurance that they will not have labor problems. We also have to assure, of course, that labor gets a fair deal and is treated fairly, which may not be true of some of the countries that you mentioned. I don't want to mention names.
Do you feel, Mr. Srinivasan, that time for this is running out?
We have a much shorter window. Japan had a long time after World War II. They started and they peaked by 1990. Korea, the peak was already shorter, and China, the peak will be shorter, and for India, the peak will be even shorter because half-life is rapidly dropping across products and services. So we need to act the next 5 to 10 years. We don't have forever to make use of the demographic dividend because our population will start aging and we should not remain a middle-income country by the time we run out of people.
That's an important point. Everyone, even the World Bank president has said that when you speak about China plus one, all these opportunities are just there for about 4 to 5 years. You've given
10 maybe.
You've given this a 10-year window. The other point that I would like to connect to this larger theme of quality in services, quality in manufacturing is jobs-led growth, something that is very close to the Prime Minister's heart and the Indian government's agenda. This was a big point during the election campaign as well, lack of quality jobs in the country. How do we ensure that while ensuring that we're making world-class products and providing world-class services?
There are 2 aspects of it. One is first the demand for jobs, and that has to come by this large labor clusters. And Tata Electronics is one, and there are so many other phone companies, the Taiwanese company, who are now employing large number of people, Foxconn. But the next level has to be supply of skilled labor. So skilling is also equally important. And that was mentioned by many speakers over the last 2 days, that there must be a second branch from 7th grade where you go on to a technical skill of good order. And our ITIs are broken down and have not been replaced by anything else. And everybody can't get a degree. A large number will have to work with their hands and have skills, but paying a good quality of life job. So both have a two-pronged approach. One is to create the environment where labor can congregate in one place without fear of disruption. And the other side is to upskill people in the country.
Now I'd like to speak to both of you about a subject that's very close to your hearts and you've been handling it for decades, and that is the automobile sector. And it's probably better to define it as mobility now. Mr. Srinivasan, if we speak about electric mobility today, clearly we are at an inflection point. Over the last few years, we have seen certain startups facing a lot of quality issues. Some have faced regulatory scrutiny. Recently, Ola Electric has faced 10,000 customer complaints over service issues, over maintenance, over warranty, and all of this has been escalated with the ministry and government as well. What is the lesson in all of this?
The lesson is you have to plan for quality first and meeting customer requirement first. Innovation without those guardrails of quality and customer will have problems. But innovation also is what forces others to compete. Whether it's Bajaj or TVS, we all now got our products, but we brought with us the expertise of quality and consistency. But others, the startups will also learn. It's not that they have problems. Every innovation has a problem. Tesla had a lot of quality problems, but they are also improving and getting on. So innovators will face problems. That is the first mover advantage they will have of creating the market, but they will then have to catch up with quality and customers. So that's part of the process of innovation.
Right. My final set of questions now. Mr. Srinivasan, what would your outlook be for the EV sector and for the Indian mobility sector as a whole by 2030? The subsidies are coming to an end in the next 2 years. Probably we'll see the real picture then. But if I were to ask you about where do you see the mobility sector going in terms of percentage and a breakup?
See, subsidies had to be there in the beginning to incentivize a change in technology. But subsidies cannot be the basis on which a product or a technology or a service can continue forever. But fortunately, battery prices are dropping, electronic prices will drop, and within a few years, battery vehicles will be as expensive or as inexpensive as ICE vehicles. So that's a reality. There will still be charging, infrastructure, range issues, but we do see in scooters already that battery vehicles have made a good impact. And I think definitely as Bajaj or TVS, other regular, legacy manufacturers, we'll find a way to profitability with ICE and it will continue. I can't give a date by 2030. I disagreed with Niti Aayog when they said by 23 we will ban all ICE vehicles. That would have made you completely dependent on one country for all the supplies. That was not healthy for the country either. But we are developing the infrastructure for motors, batteries in India, and with PLI it will take place. What percentage? I think in scooters will be a greater percentage, in motorcycles will be a smaller percentage, and other technologies like CNG will also have to play a role. So it will not be one option, but definitely more and more electric vehicles will come into the urban area.
Right. And finally, just last week, we lost an industry veteran, somebody who has really guided not just the Tata Group, but the Indian manufacturing industry and taken it to new heights. I'd like both of you, because both of you in some way or the other have been associated with the Tata Group very actively. Mr. Bhattacharya, what would be your tribute to Mr. Ratan Tata and what lies ahead for the company?
Yeah, I think I have to be honest to say that Venu, you've been a person who's far more actively, but I'll share my experience in 2 sentences. I started my career in the Tata Group and at Jamshedpur, and I did one more stint as one of the starting members of a brand which was not yet formed called Tanishq. So I'll be ever grateful, and I had a chance at Jamshedpur to have a chance to meet up with famous Mr. J.R.D. Tata and at that time the young Ratan Tata. for me, those impressions as a young boy of meeting a legend like JRD and a legend in the making like Mr. R.N. Tata will always remain lasting impressions. And I think what Tatas have done, and including what Mr. Ratan Tata has done, cannot be described. I think it is not just for Tata Group, it is for India and the globe.
Right. So any personal anecdotes?
You know, I knew Ratan from the time he became head of Tatas. I remember meeting him at Lucknow at a suppliers conference for Tata Motors, and Lucknow plant was set up. Very charming and very dynamic, younger person then, much older than I even at that time. Ratan, I have said, you know, once in a century a leader like Ratan comes. Ratan was a leader with both heart and mind, which is very rare. What he has done for cancer and treatment of people across India is really will never be repeated again in the scale that he did it and the heart that he did it. What he did in putting India on the map, whether with Jaguar Land Rover, Chorus, Tata Tetley, TCS going global, it's not only in products, in services, Tata Finance, across the board, India Hotels. He is a legend in his lifetime. And, you know, all the emotions are so mixed in him. All the world stood up and said, there goes a man.
That's beautiful, sir. And finally, what would be your thoughts about what lies ahead for Tata Group for its next chapter for the next 25 years under Mr. Noel Tata?
I think you must look at from Jamshedji Tata to Dorab Tata to JRD Tata to Ratan Tata. This is an institution, what we call in Sanskrit a samsthan. A samsthan will go on. The next leader will come, carry the torch and take it to greater heights.
All right. Thank you very much, gentlemen. Mr. Srinivasan, Mr. Bhattacharya for joining us, taking out time and painstakingly explaining every aspect of the Indian Foundation for Quality Management. It's clearly a very important moment for the Indian manufacturing industry. Quality is something we've always been speaking about, and this is a concerted effort to take it in the right direction. And you're leaving us with some very important thoughts that we have a 10-year window to rise up and prove ourselves to the world. Thank you once again
Thanks,
for being with us.
Thank you for having us.
That's all we have time for on this special broadcast. Thank you for watching. Goodbye.